love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. I was just watching back that clip that was put out yesterday about my home purchasing status, and I was feeling really loved by the community this morning. I appreciate all the positive comments. A lot of people sent me DMs and commented, congrats on the house, and I really appreciate that. I need those right now, man, because, oh my gosh, we are living out of boxes. And if you have ever moved well, probably most of you have either moved into a new apartment or moved into a house or moved into, a basement or whatever. You've moved before, and it's like you just have a million things laying in a million different places, and somehow you don't know where anything is. Yesterday I couldn't find silverware, right? So I'm hunting around the house. I'm like, I got this brand new house I'm living in, but I can't even find silverware. But we're slowly working through it. It's good problems to have. But not finding silverware will drive you crazy. Trust me, been there, done that. This morning I had yesterday we made a pizza because we were just working all day long, and I just picked up a frozen pizza from Walmart, put it in the oven, or I wanted to put it in the oven, but we didn't have baking sheets. So we literally put it in a big pot, like a kettle pot, put that in the oven and made pizza in that because we couldn't find our cooking sheets. But anyways, the joys of moving, every day it gets a little bit better. So we are making our way through all the boxes. Anyways, good morning to everybody. Good afternoon, wherever you are in the world. I hope you're doing well. Hope you're trading safe. And I hope you're not feeling as much FOMO and frustration as I am with the market right now. You might be. I'll tell you, I am. It's like every single day, the NASDAQ and the SP500 are up again. And I'm bummed out because I'm pouting because I'm not currently long. I wish I was. I really do. I love the setup. I'm not a hater of this rally, but I want this rally to pull back. Give me a shot. Give me a chance. Give me some pullbacks so that I can participate. And yeah, aluminum foil would have worked. Larry, I was looking for that too. I couldn't find my aluminum foil because I was trying to make and bring a sandwich to lunch today, and I didn't have anything. I just wrapped it in a paper towel, but it's okay. We'll find everything over time. I appreciate the concern. Did you label the boxes at points? Yeah, we've labeled all the boxes and stuff, but even still, it'll be something generic like, kitchen stuff or plates, and we were able to find our plates, and then we have like glassware wrapped all and stuff. You guys know how it is. Nobody loves moving. Moving is, I think, probably, the world doesn't agree on a whole lot, but I think most of the world would agree. Not moving to a new place. Moving to a new place is always fun, most of the time. But the act of moving all of your stuff from, packing it all up, moving it into vehicles, packing it, unloading it. Pretty sure that's universally despised. I don't think anybody wakes up in the morning and says, I love carrying heavy boxes and breaking my back each morning. That's my favorite thing. I don't know. Is that what you want for Christmas? You can come over. I'm telling you. Could use extra hands. So anyways, coming back to my complaining about the indices for a moment. So I like the indices long. I really do. But I cannot justify chasing. And so, sometimes if you've watched the show every day, there are some times where I'm in a rally and I'm preaching to everyone, look, if you're not in it, it sucks and it hurts, but you have to wait. You have to be practical for setups, right? So now I get to live it because I'm not in this rally, and I really wish I was, because I've been really bullish on indices, but I'm not in this rally. So what do I do with that? What do you do if the markets are rallying, you're not in the move, but you really want to be? Well, I'll tell you what I don't do. I don't go full port long the S&P, because had I done that, look over what happened over here. You had a real quick multiple day, like 4-day sell-off. And you also have to remember, we're living in some unique times. The stock market does not do this forever. It simply does not, right? There are times where had you just, sort of given in to the temptation and bought high over here, you might have had on the S&P 500 at one point a 10% pullback, which doesn't sound like a lot, but most traders here employ some level of leverage, right? Most traders, especially if you trade on a Forex broker, a lot of people who are trading CFDs, right? If you trade NAS 100 or XAU USD or, SPX500, you're trading a leveraged product in CFDs. Now, if you're trading SPY, that's not leveraged. If you're trading futures, right, you can choose things that are not levered. But a lot of people are trading with contract for differences, which is a leveraged product. It's why it's in the United States, why it's illegal. My point with saying that is that if you had leveraged this move and just said, well, it goes up every day, I'm just going to buy it. Well, then what happened? Well, if you were down 10% without leverage, with leverage, you could have been down 20, 25, 30%. And yes, it did bounce back. But what if it had turned into a bigger pullback like 2022? What if you had gotten antsy and said, I can't wait anymore. I have to buy this sucker right now. And then it went down 25, or even at one point, I think it was like a 30%, almost let's say 20, let's just say 30. If you had levered that thing up, a 60% drawdown, many people would probably realize that loss for fear of it getting worse, right? And had you have done that, it recovered, but look at the recovery time. So my point is, what I'm trying to say, long story short, is I know that it can be tempting when you see gold, Bitcoin, indices, when everything is sort of in an everything rally. You have to be really careful. The temptation is real. I feel it right now as I'm speaking, to just get involved, get long, chase it, because it's going higher. It's going higher. My goodness, it's just going up every day, right? But look at this, 745 days. That's how long you would have had waited just to get back to break even, and you would have had to deal with a painful, agonizing period. I mean, this was a rough sell-off, and this is the diversified S&P 500. Most of the time, people trade things like NASDAQ. They go long tech because it's the high growth, but also high risk. This one took you 760 days to get back to break even. And the drawdown here, guys, was 38%. So if you had went full port long, chasing into the breakout to the new highs, you would have had a 38% drawdown. You put that on leverage, people would blow accounts, right? So you have to be careful. You have to be careful when something is at all-time highs. It absolutely does not mean that it cannot make new all-time highs. But this is where, especially the playbook for me, when we're trading at all-time highs, number one, I use a stop, right? I have to use a stop, because I believe that a lot of times when you're at all-time highs, you're likely to continue to make all-time highs. Right now, there are great conditions out there for more all-time highs coming in the stock market, in my personal opinion. However, That's what that guy said. That's what that one guy who bought the top over here, that one guy who bought the top, over here. That's what they felt and saw too in the market until it changed. Now you would have been right many, 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 many more times than you were wrong had you, bought a breakout of the highs. But what are you going to do when you're wrong? That's the big question that every trader has to ask themselves. Whether you're trading gold, NASDAQ, currency pairs, doesn't matter. Whatever you're trading, you have to ask yourself, what's my game plan? What's my angle if I'm wrong? So if I'm looking at the NASDAQ specifically, which looks very, very strong, the least I can do is wait for a pullback to this 21,100 level. That's the least I can do. And even then, that's an aggressive long entry. You're still very close to all-time highs, and that's not a guarantee that that could work, right? So if I go long there and I put a stop, somewhere around here, what am I putting into the market? Well, I'm putting in this risk here that, okay, the market could tank back down. And then I probably maybe would take another shot here, right? So if I went long there and then the market, stops me out there, then I would probably try once more around there. So I do have a game plan, but what I'm not willing to do is go heavy risk, heavy leverage right here long, right? That's what a lot of traders will do is they'll see this thing skyrocket and say, this thing's going to the moon. It's never going to stop. And I felt pretty good when Bitcoin was doing that for me. That was one of the best trades that I had this year. Actually, I think it was my number one trade this year was actually Bitcoin. I went long right around 70,000, over here. I went long once, I got stopped out. I went long a second time, retried after getting stopped out, and that baby went running until I got trailed out right here. So not the best exit timing, not going to lie. But where am I at with it? Well, I'm looking to see if we pull back again. I may take another shot at longs on Bitcoin. But what we need to discuss here is that when you're trading at all-time highs, the playbook is be careful. There's a lot of optimism out there. In fact, can we look at some sentiment stuff together this morning? Let's do some sentiment scanning. I love the put call ratio. It's one of my favorite indicators on the Edge Finder. If you use the Edge Finder, write down your notes today, study the put to call ratio. It's one of my favorites, man. And as an options trader, like I trade a chunk of my portfolio is straight up, selling options for premium. I love trading options. However, one of my favorite tools as an options trader, but also not even as an options trader, just as a general market analyst, I love the put call ratio. It gives me a window into what consensus in the market really truly is, not based on thoughts and opinions. Like we also have the investor sentiment survey, and that's great, right? That's what people put on a survey that they're feeling. But what's better than what people write down in their feelings? What they actually do, right? The best way to track data and get sentiment or get feeling or get stuff is not from self-reported bias that gets put into a survey, but rather the actual output, the actual numbers. That's why I love the put call ratio so much. It's why it's one of my favorite tools on the Edge Finder, because it shows us options market volatility. Options market volume weighted in the puts or calls department. Now, even if you don't trade, sorry guys, we have news. Let me go see what we got here. What do we have today? I don't even know what. Do we have news this morning? Yes, we do. Oh no, we don't. Yes, we do. ADP non-farm employment change did come out right as we started the stream. The big one this morning is at 10 a.m. We got an hour and a half before services PMI. That is likely to be big. But we're going, by the way, guys, this is a long stream. We're going all the way through to when Powell will speak this afternoon. NFP, ADP, non-farm employment change, which focuses on the private sector, came in slightly lower and did not move the markets very much, right? So the actual number came in just shy of forecasts, and they revised the previous one down. So a little lighter on the jobs market. Are yields doing anything today? Yields are actually slightly higher today. If you get a big spike in yields, that would tell you that the December meeting is going to get closer to a 50-50 shot of whether or not the Fed cuts rates. We'll see. Anyways, I love these long streams, Nick. Yeah, glad. Do yourself a challenge today. You guys want a challenge for yourself today? Leave the stream up all day. See if you can watch all the way through. We have actually, you guys want to let's just look at our lineup today. I am probably the #1 fan of the A1 Trading Show, because the A1 Trading Show has all my great trading friends who take turns hosting. You know, that's been something that for years we've always wanted to do, was have like our own network, right? Have the own, there a lot of the great trading communities in the trading space, like Trader TV. They do day trading all day long for stocks, or Tasty Live, which is Tom Sosnoff, the famous options trader. He has a network where pretty much all day long they're streaming. A1 Trading, a long-term goal, and it has been a long-term one because we've been working on this thing for a long time. A long-term goal for us is still underway, which is where you show up to YouTube and you say, I wonder what the A1 Trading squad is up to. Now, I can't live stream all day. I got a lot of things that I do, right? I'm a busy guy too. So I do love to live stream, but I have 2 hours maximum a day to live stream. Like, I have other things I have to get to. I manage a team of 10 people total, one of them being myself. So I got a lot of tasks, software dev, like we have a lot of things that we're up to. So the cool thing here is that we've spread out. We are very transparent about what our goal here is. We are trying to build a community of thought-provoking traders that come onto our network, take over the show. And I'm telling you, all of these guys put on great content. We got James. He's in the chat. Shout out James. Forex James is in chat right now. James comes on for a little bit. He does a segment. Chris Pulver comes on. And each one of these guys has like their specialty, what they focus on. I could tell you just because I watch all of them, right? James is he's a little tilted more towards currencies and commodities, and he does a dollar cost averaging approach, which I find fascinating, as I do a little dollar cost averaging myself. Love to see that. Tom is very heavy Forex. Then you get Chris Pulver, who's heavy stocks, options, and indices, which I love that. Kenzo is heavy fundamentals and technicals. I would say Kenzo probably has a very similar process of analyzing the market to myself. I mean, we all kind of have overlap, but Kenzo, I would say, actually has the closest fundamental / technical split that I do. And then we get James come on. Like I said, James will be on twice today, which is awesome. I'm not sure if that's our James or Forex James, but either way, that's going to be awesome. So it's just cool. I love having like a bit of a network theme here. So if you're serious about this stuff, and if you see yourself doing this for like 10 years, it would be cool if you just tuned into the show every day for 10 years. And you know what? A lot of you guys have been doing it for a couple years now. So shout out to our regular viewers. You guys mean a lot to us. You make it possible for us to have this sort of network, because what we do is we entice talented people to come on by helping them grow their audience. And in return, they're helping us grow the community that we're building here. Any female guests in the future, Nick? Man, we love to try and get as many different people and everybody, right? As much diversity as we can on the show. It's been a little tricky, to be honest. One of my heroes in the trading space is actually Kathy Lean. She may come on at some point. It would be an honor if she could come on. But we have had female hosts in the past, but more recently we've got a lot of dudes. We do need some more women to come on and lead the show. That would be awesome. If anybody has any ideas of somebody who, they can't be super busy themselves, if they have like some availability to come on and partake in the show, then absolutely. Anyway, sorry, I'm ranting a little bit too much. Let's get back to some charts here for a few minutes. I do have a lot that I want to get through before we get to the PMI numbers. Let's talk gold for a second. Tori would be an honor. That would be really cool. Tori and I are we're friends in the industry, So maybe I could have her come on sometime. It'd be hard to lock her down all the time. She's in high demand. She's a busy lady, but she would always be welcome to the show. Karen, of course, would be more than welcome to the show. Karen is a friend of mine as well. It's interesting how, how big, but also how small the trading industry is. I know pretty much everybody in the industry, everybody who is legit and not, I don't know very many flashy traders. I pay no attention to like super flashy lifestyle traders because I don't think they're real. But if I listen to people and they sound like traders, and I'm a trader, you can recognize real ones. And a lot of you guys probably can as well. When you're listening to somebody who knows something versus somebody who is just pure marketing hype. So, like, it in your head. But and probably a lot of us can pick them out, but there's definitely a lot of people that you can recognize pretty quickly as legitimate as well. Okay, so let's talk gold here for a second. Gold had a bullish shift. I didn't even get to finish my thoughts on put call. I've got so much house announcements today. I apologize. I'm going to focus in here. Okay, so put call ratio is still in positive sentiment territory. What I mean by that is that when it's going down, the put call ratio is skewing towards call volume. People are buying calls aggressively. When the put call ratio is going up, right, people are buying puts aggressively. We saw that right around the election time. That was a very contrarian indicator. Where I messed up is I wish I had stayed long on a lot of stuff because I ended up getting trailed out on a lot of things when this thing swung back. And then this little move here, I got swung back and I got taken out of a lot of things for profit, but they've since continued higher. So where we currently are, I would say we're not at an extreme level of greed just yet. But if this thing sort of spikes down, we're probably at, in my view, likely a apex point, a bit of a turning point. And I think we might see a bit of a pullback across risk assets, talking about Bitcoin, stocks, et cetera. That being said, if you do get a big spike in put demand, meaning big fear comes into the market, I would take that as an opportunity personally to potentially get long. I am getting some interesting signals from the Edge Finder right now. We've got bullishness on oil, Bitcoin, copper, SPX, Russell. This is why I said I've got a lot of stuff to do here this morning, is because there's a lot of actual pending setups for me. I like Bitcoin. If we can get a pullback into this maybe 92,000 level. So that's on high alert for me. I'd basically rejoin my trade, but with a much smaller size this time around. I had a good sized position. I really liked the Bitcoin trade going into the election, both following Biden's election and Trump's previous election victory. When they won, both times Bitcoin actually had a nice run to the upside. So this third time I was like, okay, I think it's going to likely do the same thing. And sure enough, it did the same thing, but it went parabolic because you had Donald Trump win, who has been an advocate for Bitcoin with JD Vance, but also him and Elon Musk are like best friends now. And Elon Musk is the crypto guy as well. So there was like this crypto surge that I think is, likely to continue. I mean, I think that is a pretty good story to go to the end of the year. That being said, I'm not willing to chase. And if I do take a trade, there's going to be a stop on it, right? So I've got to manage my risk. But I like the idea of potentially getting back into my Bitcoin trade with a smaller, more controlled size this time, and a stop loss. So if I take that trade, I will share that in our Discord channel in the VIP room. But let's also talk about oil, which oil's making a bit of a comeback. And I mentioned this a second ago, but oil actually has a bullish rating on the Edge Finder as well now. So what that's telling me is, okay, can we show me, right? So I like the bullish idea. The economy in the US is looking upbeat. The demand for oil is likely to be pretty solid. Yes, you're going to get, Donald Trump, drill, baby, drill, all that concept, right? They're going to pump a bunch of oil. But if you get a pickup in the global economy, if that happens and China comes back into the picture, I mean, I don't know, because the whole trade war concerns, et cetera, I see there's a bear case for oil. But I'd like to see some catalyst, something that drives oil prices higher. Because if that happens, if you get a nice catalyst, for example, stimulus from China, or US economy adds jobs this week, or something that looks real, bullish for global economy stuff. If you get good PMIs out of Europe next time around, something, right? Some catalyst. If that happens, then I love this idea of potentially looking for a breakout trade on oil. So I'm getting a bullish reading on the Edge Finder, but this is a good example of a time where Edge Finder is bullish, but my technicals, I don't see it yet, right? So I don't love this chart. When I look at the daily chart, this is a little too choppy for me on oil. But what I might do is essentially keep this on the watch list. You get a breakout to the upside, all right, then we're talking. Then I'm probably going to look for longs. Hopefully that makes sense. But that's just a good example of, when we talk Edge Finder does not say, oh, oil bullish, and then I just go throw my account at oil, right? That's not what the Edge Finder is designed to do. The Edge Finder is simply designed to do a checks and balances across this list, but it has no concept of it doesn't have a trading strategy built in, right? Sometimes people ask us that question. They say, Nick, Edge Finder, like, what's the accuracy of just, buying and selling with the Edge Finder? And well, I don't use it that way. I have used it for years, but that is not how I use the Edge Finder, right? I don't use the Edge Finder as just a blind, like, oh, it says bullish and I throw the money on the account, right? That's not what I do. This is simply a scanning software that I then use with my own trading, right? So I'm saying, okay, I like bullish setups. I'm not going to look for any bearish setups in oil. There's no reason to. If my score here is giving me a +8, okay, I'm going to stick to the long side. But I still have to find the right setup, manage my risk, manage the trading psychology side, all of the good practices that we discuss over and over. NASDAQ, Nikkei, and Dow, right? So if we take a look at NASDAQ, I mentioned this earlier, it's up and away, looking for pullbacks. No need to stare at that too much. Dow Jones, if we can get some pullbacks there. S&P, same kind of concept. And last one I want to do really quick is just copper, which is another one that might be interesting to me if we get a bit more of a bullish structure form. If you start to see breakouts, but I don't love the technical chart at this time. So just going to keep an eye on that one for the time being. Let's see. In terms of bearish setups, you've got some currency crosses, some yen crosses specifically, NZD, JPY. I mean, these ones look really beaten up recently. Possibly a retest of some of these yen crosses could be interesting, but currently looking a little bit short-term oversold in my view. Dollar yen is not getting a bearish reading to my knowledge. Yep, that's correct. Pound yen and Swiss yen might be candidates. Pound yen. Yeah, so again, I probably just need a little bit more of a pullback here, but we'll keep an eye on the pound yen cross, Aussie yen, some currency pairs here looking interesting this morning. By the way, guys, the Cyber Monday deal that we offered this week is closing out soon. That is going to be the last chance of the year to get such a huge discount on the Edge Finder. It is currently 40% off to get access to the tool right now. If you'd like to get access to it before that sale ends, there's some information in the description of this live stream, but also we'll drop the link here to where you can chat directly to a member of our support team. And if you do that, we'll actually offer you 45% off during the live stream. So if you want 45% off the tool, it is a one-time fee to get access to the Edge Finder. It is a very powerful product that we've been building with our team here at A1 Trading over the last, 2 years or so, longer now, 2.5 years. We're coming up on 3 years in April since we first launched the tool, and it has come a long, long way. So get yourself a copy if you have not already. Send us a direct message and we will get you set up with that major discount. What we're going to do now is we're going to take a quick break, and then our next guest is Tom from Simply Forex coming over to take over the show for a little bit. It's going to be back. Good to have Tom back on the show. Love to see his technical approach, and he's got a great accent. So stick around for Tom. He's coming in just after this.
Hello traders, Trader Tom here from Simply Forex. How are you all? Hope you're well. Merry Christmas. I'm not too sure about the accent, Nick. Hopefully everyone can understand me. It is English accent, but yeah, a little bit London. Yeah, how are you guys? Hope you're having a good trading week. Good to be back on the show. Thanks for having me, guys. And I just wanted to pick up from Nick's point with oil, guys, because I really like oil trades. Obviously, the Edge Finder was suggesting it's a buy trade, and I too, from a technical standpoint, would agree that oil is a good technical trade as well, right? So let's understand first of all why oil is a good technical trade, right? And also, guys, if you've got any questions, if you want me to look at any currency pairs, or you've got any questions whatsoever about trading, then fire a question and I will be happy to answer as many as I can. I've got, I think I'm with you for about 30 minutes, guys. All right. So yeah, let's get stuck in. So let's start with a weekly chart, guys, because I really do a top-down approach. And by a top-down approach, I mean I look at the higher time frames. I even go up to the monthly, guys, sometimes, and work my way down, right? So weekly and daily generally give me my direction, and then I use H4 and H1 for entries, okay? And if you look at, I mean, this is West Texan Intermediate, right? But it's pretty much the same as Brent, right? We've got this key level of support through here that hasn't been broken for 350 years, right? No, but it hasn't been broken, since August 21, right? Now, that is pretty good support. And at that support level down here, you can see every time it comes down, we just get a real big push, a real buying pressure down here, right? And we got this a couple of weeks ago, right? And last week was a little bit bearish, okay? But I still think we have room potentially up to this blue line, if not up to this area of resistance here. Okay, and the moving average 20 is always a pretty good target as well. Okay, so weekly is in a downtrend, but we're getting lots of buyers bouncing off this support level, right? Like we always do, right? Now, if we drop down to the day chart, I am going to suggest that we've just had a structure break. Okay, now price was in this downtrend. Then we were in an uptrend. Then we've just kind of got this slightly sideways, messy price action, just lots of indecision between here and here. We got a pop down, right? And then price just comes scrambling back up. And this candle here, this green candle, just the body of the candle, this is the important part, it has to be the body of the candle, broke this high. Right, so that was the last significant high for me, and this candle broke it. So that for me is an uptrend, okay? And because of that, I would be looking for buys up to here, like I say, if not up to that weekly resistance level up here. All right, so daily and weekly support this buy idea, okay? Now, if we drop down to the H4, right, I'm looking for entries. And I may have missed this entry, right? And that's fine. But I just wanted a deeper retrace. And again, I just want to mirror daily trend with H4 or H1 trend. If they're both pulling in the same direction, right, it just increases the probability of your trade, right? Makes sense, yeah? And if we just follow H4 trend, we are clearly in an uptrend. And you could see my alarm in here, guys, right? I was looking for a deeper retrace, and maybe it still will, but I wanted a retrace potentially in here, if not a little bit further. The moving average 20, we've got this area in here, but somewhere in this vicinity, right? I was looking to buy oil, okay, with a view to taking it back up to here. So that's what I was looking for on the H4, and we'll see if we get that retrace. I mean, looking at this candle right here, that's looking pretty unlikely, right? but you never know, right? It's trading. But from a H1 point of view, right, I could have potentially taken this trade, right? Because you can see there's this clear H1 level through here, right? It's been support previously, and it proved to be support again. Now, from a H1 point of view, I could have started trading this, but I just wanted that deeper pullback. And, I describe myself as a technical trader. Obviously, I look at the techniques of the chart, but also a retrace trader, right? I want deep retraces so that I can trade from areas of value. And although this level looks good on the H1, it just didn't represent enough value for me, right? I wanted a deeper retrace down into here. So we shall see, right? I still like oil buys, and maybe the market will give me another opportunity to get into this this asset. So yeah, that is oil. Another trade that I was looking at today as well was silver. Normally I do my pirate impression when I mention silver, but I won't. I will spare you that. You don't want to see my pirate impression. Don't know where I'm going with that. Anyway, silver, guys. We like silver. Okay, again, let's take a weekly view, right? And if we look at the weekly charts, yeah, you can see, because I just want to be with higher time frame trend, right? I want to be with what everyone else is. Okay, simple as that. And as you can see, we are in an uptrend, right? So we've got higher lows. These lows are still holding, and we're getting higher highs. Okay, we're still in an uptrend, and we're literally at this level, this key level of Christ. Better draw that again. Sorry, guys, I've been drinking. We've got this level through here of support, right? And we've got the moving average 20, which is dynamic support. So in here, we've got a nice support level as well. Okay, and we've got this, bullish wick rejection, right? There's buyers at this level, right? So weekly says I can buy it. And then if I drop down to the day chart, I would also suggest we have had a daily structure break. Well, not suggest, I mean it. I'm not suggesting it. I'm seeing a daily structure break, right? So if we follow this down, right? At this point, I was thinking, right, we're off to the upside here. But then price broke back down again. Okay, and then we had a bit of sideways action, and then bang, right? We are now in an uptrend. These highs through here were broken with this bullish candle, this green bullish candle. So that is in an uptrend for me. Yeah, I hope you can see that, guys. These highs in here were broken. Bullish candle. And again, I like to be above the moving average 20 for buying. And the idea is just to take price back up to the next piece of resistance. Okay, and that's always my target. Right? If I'm selling the market, it will be the next piece of support will be my target. And if I'm buying the market, the next piece of resistance will be my target, right? Because there could be, well, there will be sellers in here, and they could push it down to here, right? But until then, we have free air, okay, up to here, right? So makes sense. Now, what I'm looking for is this. If we now drop, so weekly, daily, again, tell me I can buy silver. Haha. And now I'm going to look at H4, right? And this candle that's forming right now is looking pretty good, right? To start entering a trade. Yeah, if it stays like this, okay? Now, again, as I said, daily's in an uptrend, and I just want H4. I would say this is still a level. I just want H4 to mirror the daily trend. Now, if this low remains intact, as in this wick closes above that level, then H4 structure has not broken, and we are still in a H4 uptrend. And again, right, we're at the moving average 20, we're at a nice level of horizontal support. this will be potentially a nice trade, but we have to wait for this H4 candle to finish. Okay. So this, if it finishes like this, I will enter this trade. Okay, with a view to taking price back up to here. I'll put my stop below here, and that will be the trade. At this level, you know, you could take, you don't have to close, you know, I will take perhaps 80%, right? Let 20% run, because that weekly chart was telling me there's a lot more room for it to move into. You could take 70%, 60%, right? But I'm a big believer in taking some profit at the next resistance level in an uptrend. Right, it just makes logical sense for me. So yeah, we shall see. Now, this would be enough for me to enter. That candle on its own would be enough for me to enter. Now, if you want super duper confirmation, right, as in everything pulling in the same direction, right, we'd have daily H4 and H1. Then, if we drop down to the H1, I would like to see a break of this level, right? So if price comes up, maybe it hits that level, and then we get a break, right, of that level, that would also represent a H1 structure break, okay? And we could start buying in here. But it's looking like the H4 will give us a better entry. You know, if the candle finished here, for example, we could buy in here anyway. But I'm just looking for trend. I want to be with trend, daily trend, H4 trend, H1 trend, all, you know, ideally all together, but at least daily and H4 together. So yeah, those are the two trades that I am looking at, guys. Let's take a look at a few questions. Right, let's have a look at Euro against the US dollar. Okay, so not scripted. This one is for you. Right, let's have a look at Euro US dollar. Now, yeah, let's do it. We're going to start with the monthly chart, right? And the monthly chart, basically, we're in a range, right? With Euro US dollar. Okay, we know we've had that big dollar strength, right? But we are now, I would say, at the point of no return, right? Because this level, if this level doesn't hold, right, then there is lots of free air back down to parity, like 1:1, €1 to $1, even back down to these lows. So the powers that be that want the euro strength will want it to hold this level, right, with a view to potentially, you know, coming back up. So we're at the bottom of a range on the monthly chart. If we drop down to the weekly chart now, right, you can see that level. Yeah. And you can also see last week's candle and how bullish that was. Right. It was super bullish, right? Because it was bouncing off of this monthly support level. And also, guys, what's really interesting here is that candle is totally a weekly break, right? The body of that candle has broken this support level, right? And if you was if you didn't look at every time frame, right, you would be like, right, I'm going to, get into here and start selling. Okay. But just take one look at the monthly and it puts a totally new perspective on this trade, right? It's become a buy trade. So that's a bit of an advertisement for, looking at multiple time frames, doing multiple time frame analysis. Okay. But let's go back to the weekly. Now, let me do this. Right. So we're seeing lots of buying pressure at this support. However, we clearly are in a weekly downtrend, but it's very overextended down here. There's no value in selling this market for me, right? It's a little overextended, but, it's too overextended and we've got a bullish candle. Now, my short-term view, looking at this chart, would be US dollar weakness. I would expect the euro to bounce off this level, right? Potentially up to this last level here, or even this level here. If not further, right? Up to this level. Maybe the moving average 20 catches up. Okay. So monthly and weekly, it's difficult for me to see a sell trade here. Okay. But let's get another opinion, right? Let's look at the day chart. Now, the day chart is in a downtrend, right? Again, just track structure. And this is where we're at. Now, we're clearly in a downtrend, lower highs, right? Lower lows. We're in a downtrend, right? You don't need to be Warren Buffett to see that as in a downtrend, right? Clearly. But we know that this is weekly, monthly support, right? And we have to ask ourselves, do we want to sell into this? And the answer for me is no, right? What I would like to see, for me to start trading the euro, right? I'm not interested in selling this, yeah, because of that monthly support. But if we got something like this, okay, you know, something like this, and daily structure broke, moving average 20 started coming round, I would be buying euro US dollar, right? That monthly chart suggests it has some room to the upside. Okay, depending on my risk to reward and my, you know, entry time frame, I would look to take, you know, some price up to 10700. All right. So yeah, but let's go down the time frame, because you're selling this no script, right? And I get sells here, right? From a H4 point of view, that right here, that right there is a beautiful entry. That is like one of my textbook A1, top A1, see what I did there? Top notch entries, right? You know, I love it when we have support, right? It's, let's do it from here. We have support, okay? Price hits it, we know it's support. And then when it breaks it, what was once support becomes resistance. I bloody love them setups, okay? And you can see we've got a nice bearish reaction, and the idea would be to come lower. Now, for me, right, for euro US dollar to keep going, right, remember this gray zone here is a monthly support level. You know, I would need to see a break of this low, right? If this low starts holding, right, and you start seeing candles like this, I would take some profit. Yeah, maybe leave some profit to run just in case, but I would take some profit. Okay. Now, if it sails through and we get a big bearish H4 candle that breaks this low, then okay, right? It could potentially come back down to these lows, maybe this 104,000 level. All right. So every decision I made, guys, is dictated by the chart, right? So that's what I would want to see. And you know, I plan out the scenarios that I would be interested in. And those are the two scenarios, right? Because you're in a euro US dollar sell trade. So yeah, I hope that helps. DAX on a monster rip, son of Dingdu. Love that name. I am son of Dungdu. Sorry. Where's the DAX? Let's have a look. Okay, the DAX will tear your face off, right? The DAX moves a large amount of, if you bring up the ATR, check out the ATR of the DAX, right? That moves an incredible amount of pips in a short space of time. This is one Larry indice. But yeah, that is on a tear up. Let's have a look at the H4. Okay, yeah. But again, guys, there's, you know, there's no value up here, right? And that goes for any of the indices, right? I don't want to start buying here. Yeah, like that's the opposite of what I want to do. Yeah, I'll highlight an area, you know, potentially back in here. Let's include those highs there. You can see there was a level through here, right? And I would want to see something, you know, a bit of a retrace back into here, moving average 20 catches up, and then I would start buying the DAX. Buying the DAX up here would be madness. Unless you're scalping, you know, like the 5-minute chart, then fill your boots, right? But I'm not. Okay, so this is the same story with all of the indices, right? They're just tearing away, and we're just waiting for that retrace, right? So yeah, that's what I would want to see on the indices. Right, what else are we looking at? What else are we looking at? Gold. Okay, no, Mammon, EuroCAD. Okay, let's take a look at EuroCAD. Here we go. And guys, if you enjoy my analysis, then please don't forget to come join my channel, Simply Forex. I'm sure the guys will leave the link. Yeah, come join us. We'd love to have you. Right, weekly chart. The EuroCAD, Pound CAD, it's all about monthly versus weekly, right? Now, if I asked any of you, right now, please feel free to answer. If I asked any of you, what would you do with the monthly chart on Euro Canadian dollar, right? Would you buy it, sell it, or would you stay out of the market, right? If you had to ask yourself that question. Now, I would buy it, right? Yeah, we've got this nice big bullish monthly wick. We've literally just had the monthly candle finish, right? We're in this uptrend, okay? You know, we are at a key level, right? We are at a key level here. That's worth pointing out. But looking at the monthly chart, that would suggest buying, right? Then we look at the weekly chart, and this would suggest selling, right? Yeah, we was in this consolidation period on the weekly chart, and then kapow, right? In the words of Batman, we broke this low, and we're in a downtrend. The only problem is it found this area of support and bounced off. So, you know, we're in between a bit of a rock and a hard place, but though that rock and hard place, there's about 1 million pips, right? You know, there's still 300 odd pips. So looking at the weekly, I would suggest we're looking for sells, you know, back down to these lows. So weekly and monthly straight away are contradictory, right? They're difficult to, yeah, they're just contradictory. Okay, now if we drop down to the day chart, what are we seeing here? And I would say this is clearly a downtrend, right? Clearly, yeah, we're getting lower highs, we've got these lower lows, we're in a downtrend. Now, yeah, what I'd want to see is potentially, you know, like a bearish candle that breaks out of all of this potential support in here. If we get a candle that breaks like this, yeah, I would take sells back down to 4,600, 1.4600, right? I'm looking for a psychological level. So yeah, that's what I would wait for. If we look at the H4, right, H4 is in a downtrend. Yeah. Okay, so let's see what happens. You can see this area of support that I was talking about, right? And if we get a break of this level, right, there's lots of free air, right? There's not many levels through here. So if we get a break of that level, I would suggest we can come down to here. All right, so that's what I would be waiting for. And even if I join this to the left, you can see it lines up with that last dip there as well. So yeah, a break of that level, excuse my candle. If your broker produces a candle like that, then please speak to your broker. And then I'd look to sell it. Okay, so there's Euro CAD. I would sell that. Andy B, thank you for your kind words. What else are we looking at? Gold. All right, guys, I've got a few more minutes, so let's make gold the last one. So silver, I want to buy, right? But let's take a look at gold. Now, weekly, we buy it, right? Simple as that. All right, we're in this uptrend. Yeah, I'm going to say this, right? We're at the moving average 20, which we know is great dynamic support. We've had this super bullish candle, weekly candle, followed by a bottom wick on this bearish-ish candle, right? So everything would suggest we can take price back up to here on the weekly, right? Yeah. Okay. So let's now drop down to the daily, and basically we're in an uptrend, right? Again, just follow structure. Yeah, we're in an uptrend, and then prices just got stuck. Yeah, I'd say that level's broken, and we're getting higher lows, right? We're in an uptrend, but this price action, without swearing, is a load of crap. Yeah, you don't want to be in that. So all I want to see is a break of this consolidation. So if I get a nice big bullish candle that breaks through this level, I will be buying gold, right? I'll be buying gold back up to this level, if not higher. Okay. Now, the opposite of that is true, right? If we start getting, a breakdown of this, we get a breakdown, then I would suggest we still have room to the downside. But the weekly chart, right, is telling us to buy. So between here and here, if I get a big bullish candle break out of this level, I will be all over gold. All right, and I will be buying it. Let's have a look on the H4, see what price action is doing here. And look at that. You can feel the confusion, right? That is 1, 2, 3, 4, 5, 6, 7, 8, 9, lots of hours of confusion, right? So the market's confused. Buyers and sellers are confused. Basically, in this area here, right, there's a bit of confusion. So just, don't trade these areas, right? If you trade an area of consolidation, you're going to get chopped to death, like literally. So wait for a break. Wait for a break so that buyers are in control, right? And then take the trade, yeah, and then take it back up to here. Right. And what else are we looking at? Okay, so Freak FX says, while you're waiting for something to break through, the money passes through you. I hear what you're saying, Freak FX, but I would rather be in at the right price than the early price, right? So what I mean by that is, right, you let's say you like gold, right? And you could start buying here, right? You put your stop below here, right? And, price comes down, takes you out, right? You'll be like, okay, maybe I did get in a bit early. Okay, let me rephrase it. There's not enough confluence for me to take a buy here, right? If you want to buy, I've got this level that can stop me, this level that can stop me. Okay, so I have to wait for that break for it to tell me that there's nothing stopping my trade, right? So, if you start buying here, you're going to potentially have some problems here and some problems here. Price could reverse and come back down to the bottom of the range that we're in, right? Whereas when price breaks, or if price breaks this level, right, there's not much stopping it here. There isn't any trouble for it to run into, right? And I would make that sacrifice in terms of, do I get in here and potentially come up against some problems, or do I wait for this break? And that gives me more confluence and reasons to take the trade. And I would 10 times out of 10 rather be in this buy than this buy. 100%, right? Doesn't matter if it means I have a larger stop loss or my risk to reward is reduced. I don't care. That here is the right price, okay? Because it's broken everything. Sellers have given up. Then I will enter the trade. All right. So yeah, the right price, not the early price, right? even if you want to, you can be more aggressive. Like, you know, if you want to be more aggressive with your trade, just reduce the time frame you're on, right? If we waited for a H4 break, you could be waiting for a long time. But you could, you know, potentially look at a H1 break, right? And you're going to get in at an earlier price. But I still need to see trend moving with me and coinciding with daily trend, right? You're just increasing the probability of the trade, like fact. So yeah, I understand what you're saying, but for me, it's about the right price, not the early price. Most retail traders are afraid of having large stop losses. Yeah. Yes. You know, that is a bit of a problem. People have tight stop losses and market whips them out and they carry on. And the thing with having a large stop loss, guys, I'm totally okay with that. And I will build the trade, right? So let's say we had a break here. Right, let's say we got here, we broke this level and I started buying, right? Now, my stop's below here, right? And that's a pretty big stop, right? My target's up here. Now, I'm roughly getting 1:1, but what you don't have to do is hit this trade with 100% of size, right? You can hit this trade with 50%. And then if you do get a retrace back into here, you can hit it with another 50%. And then all the while you're building the trade, your risk to reward is getting better. So I'm a big believer in building trades, managing trades. I think there's so much you can maximize profit and also reduce risk along the way, right? If price starts doing this, right, we get a big breakout, we start buying, right? And then price comes back down, we can buy again, right? And then if price shoots off from this level, breaks this high, I can then move my stop loss from down here to up here. And then what I've reduced this trade in risk, I can then add to this position right here and do it again. Buy here, price comes against me a little bit, I can buy here and just keep building the trade all the way back up to here. Right, so managing a trade. Anyway, guys, I think that is me out of time. Yeah, like I say, guys, if you enjoyed the analysis, please don't forget to come join us on the channel. We'd love to have you. What else have we got here? Okay, so let's carry on. Steve Mack, do you use the same analysis on lower time frames? 100% yes. All I look at, the things I look at, right? I'll tell you, right? I look at price action and structure, right? I look at structure and trend, and structure dictates trend, right? So I look at structure and trend. I look at support and resistance levels, right? I look at candlesticks, right? And I want to trade from value, right? Which generally means I wait for a retrace, okay? Now, I do that, but across multiple time frames. So as I did a top-down approach earlier, guys, I'll look at weekly and daily, applying those price action pillars, if you like, right? And that will give me my direction. And then I drop down to H4 and H1, still applying the same logic. It's all about price action. And I'll look for entries. And it's as simple as that. That's what I do, every day, right? And it's not rocket science, right? Entering a trade is not rocket science, but what I would say is managing a trade. That's where the real skill comes in for me personally, right? Managing the trade. So yeah, there you go, guys.
Hey, Tom.
Thank you.
Yeah, it was good having you back. It was nice seeing you again.
Yeah, good to see you, Chandler. Thanks for having me on. Merry Christmas.
Of course. Merry Christmas to you too. Guys, we've been putting Tom's channel in the chat. All you got to do is click the link and then click the sub button. We've done half the work for you. So, guys, go check out Tom's channel. He's awesome. We love having him on the show. And, Tom, it was great having you back on.
Cheers, Chandler. See you again soon. Thanks, mate.
All right. And, guys, we're going to run a quick break, and we'll be right back with Forex James.
Hello. How is everyone doing? Hope you're all having a great day. We're halfway through the week. We're almost done. Christmas is approaching. I hope you've all made your Christmas lists. So just a quick update on the portfolio. Still crushing it. Still doing amazing. Up 20% since September. So we did 11.5% in November, up 4% in the first 3 days of December, obviously trading days, not weekdays. But yeah, so far, so good. So hopefully we can bring this success through to next year. Outperformed every institution's 2024 results in the last couple of months of 2024. So I can't complain about that really. As for positions, I'm currently long on the S&P. So this was quite a simple trade, really. I mean, we've obviously got the end of year run. Seasonality is very bullish on the S&P towards the end of the year. We had a 50% retracement here. We had the previous all-time highs acting as resistance. So once we broke out, retested, it was my signal to enter. We have obviously got the edge finder reading bullish right here. If you give me a second, let me find it. Right here. So this was a good little confirmation, really. So again, you can see a seasonality here, plus 1.8%, which is a very strong seasonality to have. We've got COT short, but to be honest, I don't really care about COT. Outperformed them anyway. They are losers. Obviously, I'm joking. But proof of execution is here. If anyone is doubting that, obviously this is MetaTrader 5. So that's about it in terms of the S&P. I'm short EuroCAD. This one has been probably the most annoying trade I've had all year. It's just been non-stop drawdown since I entered. So since we had the Trump tariffs on Canada, this trade went straight into negative. And since then, it's just hovering around drawdown. I'm really happy to continue holding it because I'm pretty confident that the economics behind this remain bearish, but it's just one of those trades that isn't doing anything. It's just been sideways ranging in drawdown. So it's just not my ideal trade. Also short on the pound Canadian, and I'm currently DCAing short on euro yen. So if we have a look here, this is again very simple, the way I always trade, looking for this 50% pullback or this fib pullback that we've had. This is also a break and retest of previous support. So again, bread and butter, very simple, always very straightforwards. Then we've also got some DCA positions here on euro dollar, which I can show you here. So it's, yeah, again, sort of just sideways ranging. So I'm waiting for a breakout down to the previous low, sort of 1.043. Hi James, when December do you tend to stop trading? 20th to 23rd? No, I stopped trading much sooner than that. So once I've closed all these open positions, I'll be done. Normally it's the first 2 weeks of December that I'll give myself to finish off the year, then I'm done. So it'll be around the 14th of December. I'll start calling it a year, just because we've got to obviously account for the people actually moving the markets, taking holidays, and starting to close positions, profit taking and all that sort of stuff. It can get very briefly choppy, and then it can get very, very slow and very boring, which obviously I don't want to sit in over Christmas. I like to have an empty portfolio over that period so I can just sit back, relax, and go into a new year with a fresh start. Had to go against Edgefinder last night when I entered USD JPY for a buy. Let's see how dollar yen's doing. I don't think it would be very good. Well, I guess it is doing okay. So suppose we broke previous high, but in my opinion, it's still heading to the downside. This actually right where it is wouldn't be a bad idea to go short. If I didn't have a maxed out portfolio, I would actually consider going short here. We've just had this moving average cross. We're still overall in this downtrend. Got the RSI that's a little bit oversold. And obviously the yen has got some potential to keep strengthening as we're heading into Bank of Japan rate hikes. So yeah, dollar yen seems like quite a nice sell, really. Even though the dollar isn't really the weakest currency, it's just one reason why I'm not too bothered about missing this trade, because I do quite like the dollar to the long side. So I'm not really wanting to sell the dollar, really. Actually, something, this is a good example. So look what's happened here with the Australian dollar against the Canadian dollar. And look what the edge finder says. So we can see here, -7, bearish, the most bearish reading on the edge finder. Guess who went long? It was Morgan Stanley. So maybe Nick needs to get on the phone with Morgan Stanley and start trying to pitch them. Maybe they'll be a bit more profitable next year with the edge finder. I entered because of the turmoil going on in South Korea, which had a negative impact on the yen. Fair enough. That's a good point. Although the South Korean thing, what was it called? The martial law's been lifted. I'm fairly sure it was a very pointless move, to be honest. They put it in and then they pulled it back almost instantly. Fundamentals are good for dollar, so UJ may go up. Yeah, I had this conversation yesterday on stream. So the way I see dollar yen at the moment, although the dollar is very strong, if we look at the dollar yen on the daily or the weekly, look at how much it's risen. Well, when I say recently, you know what I mean? It's since 2021, which, you know, in terms of trading is quite recent. This was all driven not necessarily by dollar strength, but primarily by yen weakness. So now we've got yen strength coming in. It would be natural to see this, you know, this upwards momentum start to slow down as we see repositioning to account for the Bank of Japan rate hikes. So I'm not really looking too much into the dollar strength for dollar yen, as strange as that might sound. It's more looking towards a repricing of this market. I mean, you know, as always, I can't see the future. I may be eating my words in a couple of weeks' time, but that's just the way I see it for now. It was lifted, but now they're calling for the impeachment of the president. Are they? That's crazy. I need to keep up with what's going on in South Korea, actually. There's potential I'm moving there next year, so it would be a good idea to probably understand what's going on. Is ADP NFP results bearish for the dollar? I don't know, to be honest. Let me see. I don't really pay attention to ADP. It's kind of a null point. Has the results even come out yet? Where is it? ADP here, 146. Yeah, it's not the best numbers. It's lower than forecast, lower than previous. So it could be a signal that NFP is going to be a little bit worse as well. But yeah, ADP is kind of like, who cares? Who uses it? Yeah, I don't really think it's had much of an effect on the dollar. Still moving to the upside overall. So what have we got here? Euro yen. Yeah, there's not much really going on with my positions. I'm waiting for a pullback on the S&P so I can scale in. The unfortunate thing is this trade, this position here, it was really low risk. So the profit that I'm in at the moment, it's basically nothing. It's not really even worth holding. It's just taking up margin. So I'd love to see a pullback so I can scale into a full position. But whether we'll get that, I don't know. So what do we have tonight? We've got, it's the Powell speech. Interesting. Okay, well, we'll have to see how that goes. I think I'm on actually later today, so we can go into the Powell speech later. I'll leave that for my other segment. So let's have a look at what's going on with the edge finder, see if we can find some setups. We've got the Dow bullish. I actually sold the Dow yesterday, made some decent money on that one, on the correction. I think, again, I actually covered this one on stream, but I took profits quite quickly. The problem is with the Dow, although it's got the most bullish reading, I'm just not super happy with the price action at the moment. We've still got this market gap, and I'm actually not sure if this market gap is broker dependent, but it's still a little bit of a concern for me. So I'd really be looking for a slightly lower move down to this previous level. Stop loss. I suppose you can either be super aggressive and have it just below something like this, or if you want to be a bit more cautious, down at this previous low, this would be at 43,714, and then a take profit, probably just a 1 to 3, something like that. Can you tell us Morgan Stanley's TP for Australian dollar CAD? I marked up the other day as bearish. Very interesting that they're long. Yeah, we can have a look. quickly on the daily. Here, it's actually just, from what I remember, it is actually just flat 1, or 1.0. So I was in this trade, actually, but as soon as I saw it change on the edge finder to bearish and we sort of broke out of this ascending trend line, I closed out for a loss because it's just not something I'm willing to hold, really. Okay, cool. So guys, I'm on for about an hour today. So if there's any questions, feel free to let me know. If not, I'm happy to keep rambling. We can continue to look at some markets and see what's going on. The Nikkei's bullish, but I don't trade the Nikkei really. Oil's bullish. We can have a look at oil, see what's going on there. Here. Not in this trade, just an FYI. I'm not really super happy with going into a long position on oil, and I can't tell you why. It's just a feeling. Obviously, you don't trade off feelings, but it's just something I'm not super happy with right now. Although now would be a great time to buy, in theory. We're getting a plus 8 on the edge finder. Oil could be viewed as oversold or underpriced, which I don't really think it is. But you know, I wouldn't blame someone for thinking it's kind of at a low price for oil. So stop loss below the sort of wicks around here. Take profits would be somewhere here. Probably get a 1 to 2 on oil if this works out. But yeah, I'm just kind of on the sidelines of oil. We'll see how it goes. But again, not really looking to open positions now. Kind of trying to get out of positions as we head into the end of the year. And then maybe next year we can start looking again. How do you see Morgan Stanley's positions? Scott, I have access to all their reports on a daily basis. We have got, Australian dollar CAD is bearish. We've got Australian dollar yen. All the yen pairs remain bearish, by the way. So we've got Australian dollar yen, New Zealand dollar yen, pound yen, Swiss yen. Typically, the one I'm in, euro yen, isn't bearish. But that's fine. I'm completely happy with sticking to my analysis on that one. Where's Australian yen here? Interesting. Okay. I'm joining soon. Can't wait. Do you mean joining Elite Traders, or are you joining the A1 signals? Because if it's Elite Traders, then great stuff. If it's not Elite Traders, then fine, whatever. Don't need you anyway. I'm joking, of course. We've got ECB speech. Growth will be weaker in the short term. Exactly. The euro or the eurozone is just collapsing, to be honest. There's nothing I see supportive, which is why I'm more than happy to hold these short positions. I'm actually in quite a bit of drawdown on this one. Let me see actually if I can show you the P&L. If MetaTrader doesn't freeze like it always does. No toolbar yet. There we go. Let's see. I promise I'm not trading on a potato. I'm trading on a Mac, and the MetaTrader terminal is really bad on Apple products. Thoughts on NQ? Yeah, we can have a look at NQ. Let's see if MetaTrader can load in the meantime. NASDAQ here. To be honest, I think specifically with the S&P and with the S&P and NASDAQ, we're going to continue to see bullish momentum into the end of the year. And that's based on seasonality. We're also getting a potential rate cut coming this month by the Fed, which is obviously good, good for the S&P and good for NAS. Excuse me. We've just broken out of previous all-time high resistance. So I think it's more than reasonable, really, to look for this type of, we've had the break, just look for this retest. We've also got the NASDAQ here on the Edge Finder with +8 bullish reading, which is nice. So yeah, it seems like a pretty straightforward position, really. It's just a case of waiting for this pullback. New Zealand dollar Swiss, New Zealand dollar CAD, and Bitcoin. Okay, cool. So I'll start with New Zealand dollar Swiss, and then we'll move on. Well, the New Zealand dollar seems quite bearish actually at the moment. Don't really have any readings on the edge finder for it, but the market doesn't seem great actually. Seems to be stuck on this support level. Let me see. I'm not really seeing much, to be honest. And in terms of the fundamentals, again, there's not really much that piques interest on this market. So I guess just on a technical aspect, you would want to take one of two approaches: either wait for this break lower, the retest and a continuation to the downside, or wait for the opposite, the continuation to the upside, a retest and a continued move up. But yeah, to be honest, again, there's nothing here that would really make me want to look at that market. Similar thing here with New Zealand CAD. I suppose I'd more be looking for a break of this trend line, and that's based on the potential of higher oil prices into next year. As you saw earlier, we've got a really strong reading on the edge finder for oil. And with OPEC plus supply cuts, we've also got global tensions that can potentially help oil pick up. Obviously, with supply fears, then the Canadian dollar quite easily could start gaining some strength. So this is kind of the approach I'd be looking for, to take profits somewhere at this previous low down here. I'm actually going to leave this on the watch list so I can pay attention to that one. And Bitcoin, who's this one? I think we're seeing a little bit of a fight on Bitcoin, to be honest. I think we're seeing a thing of, obviously, everyone, well, people, not 100, we need 100K. There's a lot of sentiment around the 100K mark, and we didn't quite reach, which led to some profit taking, as you can see here. So I think at the moment we're seeing a little bit of a battle between some sellers, some profit taking, and obviously the Bitcoin bulls. Which is leading to this sort of consolidation around here. It wouldn't surprise me if we actually don't go past 100K. We might reach 100K and then come back to the downside. So something possibly like this, where we start seeing 100K hit, and then we see profit taking and a larger dip on Bitcoin. But I'm not a crypto trader, so I don't really know the mechanics of it. I don't know the general price action patterns of Bitcoin or anything. So, don't take my word for it. Just obviously do your own research as always. Euro AUD. So, not in this position anymore. So again, this is actually a Morgan Stanley position that they were in. I actually quite like it to the downside. The reason is we've got this daily 200 moving average acting as resistance. We're seeing some rejection around here. Euro is very weak. I remain bearish on Euro. H4, we've just seen actually a really nice rejection. It's frustrating because, like I said, I don't really want to open any more positions, but I actually quite like this one. Just contemplating whether to take it or not, and I don't think I will, just because I'm already quite exposed to the euro. We've got euro yen, euro Australia, euro pound, and euro CAD. So I think I'll sit out, but I do really like this setup. Seems like going to be some downside before we go up to 100K, or we hit 100K and retest downside. Yeah, Wonga, that's exactly what I'm thinking. But again, I'm just going off basic technicals. I've got really no idea. So is GU short? Yeah, I'd consider GU a short, quite simply put. Let's see here. Oh yeah, okay. So what I've been saying regarding the pound dollar is we've got almost an identical setup to what we have or had on euro dollar. So we had this uptrend here, and all of the retail space was saying, oh, we need to buy here, buy this dip, buy. All of them either took profits along this way, which I hope they did. If not, they would have been liquidated very quickly. Now, if we look at pound dollar, we've got the same trend line coming. we've had this push off, and now we're starting to see some bearish momentum come back into this market. So I would actually be quite happy to go into short positions either from here. Obviously, it depends on your strategy as well, but from either the current market price, or I'd wait for a slightly higher price around here and I'd start shorting from there. That's kind of the only two places I'd go. I'm not seeing any reason to start buying pound dollar. It's a lot more stable than euro dollar. So I'm definitely not going to start DCAing and shorting it as strongly as I am in euro dollar. But yeah, I remain overall on the downside. Long sell coming gold. Long sell. Craig, should I hit buy and sell at the same time? It's tempting. It's calling me join the dark side. Yeah. All right, Craig, let's have a look at this trade that you're trying to tell us to take. So you're saying to sell at, oh, sorry, take profit. So you want take profit to 25.70. No stop loss, so that's cool. To be honest, gold doesn't seem appealing to me. Now, I've been saying it for a while, but there is no catalyst. I've just realized I'm half off the camera. There is no catalyst that makes me want to buy gold or sell gold. It's kind of, I mean, the market reflects it as well. We're just sideways ranging, really. I mean, even on higher time frames, there's not really anything going on. On the H4, we had this very slight push to the upside here. Since then, there's been absolutely nothing to do on gold. So, yeah, not really leaning either way. Not really leaning either way. But if you're taking gold short, then good luck. I don't mean good luck in a sarcastic way. Gold long term. It's a good question. Let's see. It really depends, in my opinion, what's going to happen. And what I mean by that is Trump going to fix some of these problems that's going on in the world? And what I mean by that is Russia, Ukraine, and the Middle East. You know, if he doesn't and things start escalating, then obviously gold is going to start rocketing again. We likely will see 3,000 get hit pretty soon. However, if the opposite happens and we do start seeing ceasefire talks and peace coming in, then it wouldn't surprise me if we start seeing gold start to drop and we see some of the fear start to go. Do you think there will be parity with euro dollar? I do, yes. When, I don't know. It really depends on what the ECB is going to do and what data comes out of Eurozone. But at the moment, the way things are, yeah, I'm quite happy to say parity's on the table. So we've got news. What time is this? Oh, it's only services PMI. It's fine. Nothing too big. S&P 500 scares me. Why is that? If Trump makes it worse, we're done. Yeah, potentially. What time news are? Well, we've got services PMI coming in just under a minute. Then in 15 minutes, we've got services PMI. Then we've got crude oil inventories. This will be interesting to see. This will obviously affect oil prices. And then the big one for today, what the market's really are waiting for, is this Powell speech at 6:45 my time. Okay. So I'm glad we got that cleared up. Okay, cool. Services PMI, yeah. I mean, well, yeah, actually, let me put it back on the screen. We can see what the result is, but I wouldn't expect anything major. All right, yeah, 56.1, slightly lower, but I don't think we'll see much of an effect from that, to be honest. Actually, let me go, we'll go into the 15, we'll put candles on, but yeah, it's not really anything going on there. Slight move to the downside. Cool. Okay, good stuff. Eurodollar's heading back to the upside, which I don't really like that. That's a little bit annoying to see, but there we go. There's not much else going on in the markets, I don't think, at the moment. Again, we're kind of just waiting really to see what Powell says. Until then, I can't really see anything driving much volatility. So yeah, the services number isn't too bad. It's still above 50, which is nice. So the services in the US is weakened slightly, but it's not weakened enough to be a concern in my book. So that's where I stand on that, if anyone's interested. Still short on dollar NOK. Actually, I forgot to mention this one. So the plan with dollar NOK is essentially just a mean reversion trade. So I've sold here, which is my orange line. And I was actually expecting slightly higher prices, but we've not really had that yet. But I'm looking to hold this one for quite a while, mainly until possibly down here, which may be Q1, Q2, 2025. So we'll see. We'll see how it goes. But again, it's low risk. So if it doesn't work, it doesn't work. Can you check GU? Yeah, we can have a look. So I guess you're shorting. Okay, let me mark this up really quick. Entry, stop loss is here, and your take profit is here. That's a very tight stop. I think with this position, you're really at risk. And you're at risk because of the Powell speech. With such a tight stop, you're very likely to get whipsawed out. If we get anything that the market's not expecting out of Powell today or tonight, then you're going to be out. But so far, looks fine. So, you know, manage it as you please. Overall, I think the idea is fine. I think shorting pound dollar is a good idea. But yeah, it wouldn't be... Sorry, guys, just reading a message. 1 second. Okay, cool. So yeah, I think this trade, yeah, again, it's fine. Just be very careful with your stop loss. It seems very tight. USD CAD feels some selling pressure now. Yeah, well, again, if we're expecting to have higher oil prices, then dollar CAD is going to sort of rebound a little bit. Regarding ISM services and S&P Global services, is one more impactful on price than the other? I would say the S&P Global service is slightly more important in my book, but I wouldn't say either of them are huge. Unless we see a huge decrease, then we could start expecting to have some effects. But generally speaking, it's not a huge deal. I found a symbol with multiple technical factors. ESAU. Let's have a look. Yeah, it looks really technical. See loads and loads of opportunities on this. Obviously, I'm being sarcastic. I don't know what the hell's going on with this chart. Good afternoon, SL hit. Yeah, it's always the Powell meme. What are your thoughts on CFJPY? I assume you mean Swiss yen. Swiss yen, bearish, to be honest. The signal here to me is definitely to the downside. We're seeing, obviously, again, Morgan Stanley shorting this market. Yesterday, we had a bearish reading, which we still have here. Swiss yen, bearish, -6. Again, we've got a large institution also in this trade, so it seems fine. We've got the, where's my brush here? We've got the moving averages here signaling downside. We've got an RSI that's about to be oversold. The issue is, in my book, is this sort of level of support around here that we've just seen a reaction of. So the way I would like to approach this is really just see either a complete reversal here, or sorry, a complete continuation here, or a slightly higher move into the middle of these moving averages and then sell here. I hope that drawing is not too messy, but that's the general idea. Looks like breadcrumbs. Yeah, looks like the worst chart I've ever seen, actually. Craig, long, sell are two completely different things. A long is a buy and a short is a sell. Just an FYI. Unless you mean long-term sell. French no confident votes. Yes. Yeah, this is what I mean. Europe is just it's a complete mess. That's why I'm so short on all the Euro pairs. Gold, what's happening? I don't think anything's happening, but we can see. Yeah, slight move to the upside as we saw some negative news for the dollar, but nothing major. Apparently, the tensions in France and South Korea are supporting gold prices despite the stronger dollar narrative. Yeah, probably Lee. Wouldn't be a surprise at all. Pound New Zealand. I wonder what caused the spike. Have I missed something here? I suppose we had the RBNZ speech. I'm not sure what was said in that, to be honest. I really need to keep up with our fundamentals. I've been really lacking recently, actually. So let's see. This isn't a market-eyed trade just because it's really range-bound. But what you could do if you are looking to trade this, I would really be looking for a fill of this sort of imbalance area here, and then I'd be going long off that. But again, it's not something I trade. I don't really know what's actually driving this market right now. And the overall behavior of this market is very sideways moving, which I don't like to be caught in, to be honest. Correction, gold complete now. Big move. Celebrating. So okay, cool. Craig, you should probably put all this in a Telegram channel. I don't know if anyone's actually following your signals from here, buddy. Hey James, just curious, when did you become a full-time trader, or do you still have a job on the side? You seem youngish. That's a cool question, Oscar. I don't believe in full-time trading. I don't think it exists. And the reason I say that is because every trader I know has other income. So I think when you become a quote unquote full-time trader, you're actually a part-time trader and you do other things on the side. So for example, I run Elite Traders. I've also got another business that's completely untrading related. And I've also got trading. So I sort of quit work or like traditional work and started focusing on my own things at, I think I was around 22, roughly. I'm 26 now. CHFJPY short 170, expecting it to make daily lower low. Thoughts? Generally speaking, I think the short idea on Swiss yen is good. Yeah, I think we've had the pullback for now. Looks like a more than healthy move to the upside to allow some more sellers in. So if you're shorting where we are, I think that's fine. I'm short Euro Yen on a very similar move. Oh, actually, speaking of that, let me see if MetaTrader's unfrozen. And it hasn't, which is great. Cool. So yeah, there you go. But you have to take my word for it. So I'm short Euro Yen looks very, very similar. And I'm short in this move. Trading is just a piece of the puzzle. You need to have other income sources. Absolutely. If I was trading full time and this was my only income, I'd be very stressed. And every month I'd be watching every dollar that went in and out of my trading account from trades. It's not a healthy way to trade. It's really damaging. I did it for a very short period and I just couldn't do it. Well, I could do it, but I didn't like doing it. What's the average risk per trade? It depends. If it's a swing trade, so let's say, for example, I was in this trade, it'd be around 2 to 3%. For my DCA trades, I don't have risk really because obviously it's DCA. But generally speaking, I'll let a position get into around 1% drawdown, then I'll cut it and add in again, obviously if the trade is still valid. The more you focus on the money, the worse we do. Yeah, typically. GJ. Yeah, I think all of these yen pairs actually have a really good opportunities now to go in short, especially GJ. So we've got this 200 moving average on the H1. We've got an oversold RSI. We've also got general yen strength. The pound, let's just take a look. Yeah, pound overall is moving to the downside. So yeah, I think pound yen, euro yen, dollar yen, Swiss yen, all good opportunities. What's DCA? DCA is going in for multiple positions. So if let's say, for example, I'm selling this market and I sold, let's say I sold here and price moves against me, but my overall bias to this market is still short. Because to do it the way I do it, I only do it when the economics are telling me something really compelling. So I'm not ever doing this just based on price action, because that's the way to blow accounts 101. But in this situation, I'm very bearish, for example. So I'll sell here. Price moves against me. I'll sell again, maybe at this high. Then it moves against me again. I'll sell again here. Wait for this downwards move, and I'll cut profits here. So this one will be a small win, large win. Or, you know, for example, if I took a loss on this one, these two make up for it. And that's the general rule. It's basically just averaging your way into a trade with very little regard for technicals. Hey James, in my opinion, once you have a very large account, you can be a full-time trader without any other income. Yeah, you're right, actually. There are exceptions, but to have that type of capital isn't realistic for the majority of people. You'd need it to be a case where all you'd need is sort of 1% a month and you'd be completely fine. Because if you're needing sort of 2 to 3% a month, you're going to be chasing that 2 to 3%. If you don't make it, you're in trouble. If you do, then great, obviously. But yeah, just one small win in a month, if that can pay what you need it to pay, then great. But again, it's not a realistic amount for the majority of people. What was your initial capital used for trading that made you profitable? It is very small. So the way I sort of went about trading was I had about £5,000, British pounds. I lost all of it within about 9 hours on US 30. And then from there, every pin I had, I put back into a trading account, but I didn't actually trade. Then I used that capital to buy a mentor or to pay for a mentor. So then I had to start from scratch again. So I started with, I think it was about $1,000 US dollars, or about £700. How's your prop firm going? Prop firm's doing okay. It's up about, actually, let me just double check. I'm not sure what it's actually doing. I kind of forgotten about it, to be honest, because I can't remember the password. Anyway, the thing with the prop firms is I can't trade the way I'm trading on my personal, because on my personal, I'm not using stop losses because I'm DCAing at the moment. It's like the main focus I've got. And prop firm, well, the prop firm I'm with, I have to use a stop loss, so it doesn't work. So it's kind of sat collecting dust.
Hey, James.
Hey, Nick.
We've got PMI numbers just dropped. I'm just hopping in just to
they did
react to them for a moment. Came in a little bit light, 52.1 compared to the 55.7. I remember in a previous live stream we were together, and they were very, very strong when they came out last time at 56 or so. With a 52.1 number, that is a little bit lighter than expected. So we're seeing stocks give back just a little bit of their gains here recently. Nas down slightly, S&P down a little bit. Gold actually going to probably like that figure. Simply because it could lead to a weaker dollar. We see dollar index coming down. And that's, when we take a look at services PMIs just for a second, I mean, this is one of the big economic reads that really got a lot of people very bullish about the U.S. economy. We've talked about this in the past, James, but of course, UK, US, a lot of these, giant nations, a lot of their economy is built around services rather than like manufacturing, like the likes of like China and things like that. But with the US, Again, services is a very key component of the economy. So outlook looking a little lighter in terms of what purchasing managers, of course, this is the purchasing managers index, what they're forecasting for the future of the services part of the economy is a little bit less than what may have been forecasted by analysts at 55.7. This index, guys, for listeners who are newer to fundamentals and specifically the PMI number, a reading above 50 means that basically purchasing managers who are surveyed in this feel that there is growth coming for their respective economy, and then we index it and look at the whole. And then, below 50 would be considered contraction. A lot of places in Europe are actually seeing contraction in their PMI numbers. Same thing with the UK. But then for the US, there is still expected growth. But specifically today, the way to read this would be we expected for forecasts to be very positive from purchasing managers. And in actuality, we do still see a positive outlook, but not nearly as red hot as a 55.7, coming in at a 52.1. We'll take an updated look just really quick. So stocks just modestly lower on that news. Not a huge game changer there, but dollar index is lower. And then gold and, of course, silver also shooting up here a little bit this morning in response to that. Gold trading at 26.50. You've got, again, stocks just slightly off their highs. Sorry to jump in on that. Just wanted to do that breakdown because services PMI is pretty big.
Yep, no problem at all.
Yeah. James, while we're here, would you like me to take over, or do you want to come back? I mean, you've been going for a little while, so if you're ready to chill out, I totally understand.
It's okay. I don't mind doing the next sort of 10 minutes or so. It's okay.
Yeah, sure. You've got it. And then Chris Pulver is coming on just after you. So while I'm here, guys, just a big thank you to James and everybody else who hosts the show for a little bit, just to give us that rotating analyst perspective. If you guys are not already subscribed to Forex James on YouTube, we'll drop his link here in the chat. Producers have got that already for you. So make sure to go subscribe, go support him and his work. And James, you got it from here, and we'll see you back a little bit.
Cool. Thank you, Nick.
All right.
So there we go, guys. We've got, cold data, lower numbers for the US, which is causing a slight movement to the downside, but generally, I would expect this to be corrected. I think the main focus, in my opinion, for today is what Powell says. Obviously, this news isn't good necessarily for the dollar, so I'm not saying it's completely muted. But yeah, I don't think we're going to see a massive continuation from this. So yeah, I mean, again, could be completely wrong, but that's just my 2 cents on that one. It seems like the yen pairs haven't been too affected. Still moving to the downside, obviously not accounting for dollar yen. So let's have a quick look at that one. Oh, actually, really nice move there on dollar yen. Yeah, cool. I think that was pretty much it for the news until tonight now. But yeah, I saw someone in the chat say the numbers for today for the dollar haven't been great, which is true. We've got the ADP coming out slightly lower. We've had the final services PMI come out lower. We've had ISM services come out lower. So yeah, not the best day really for the dollar. But I remain long on the dollar overall. So, we'll see how it goes. Oh, Benny, I appreciate that. Thank you. Oh, yeah, we can check the S&P, see how my position's doing there. Hopefully, yeah, there we go. Getting a small pullback, but it's not small. It's not big enough. I really want to see potentially this level here, and then sort of bounce off there. That would be good. Or if we can come back into this support again, that would also be really good. But I'm not too hopeful for that situation there. So this is what I'm watching right now. Again, we've got very strong reading on the Edge Finder. We've got great seasonality. Generally speaking, the data for the S&P is supportive. So looks great. Can you check Euro Yen? So I'm short Euro Yen, Adwin. If Powell decides to cut rates, does it mean economy is cooling, a possible downside for the dollar? Yeah, I would say if we do get a cut, then we will likely see the dollar start to head a little bit to the downside as reprice. Actually, speaking of that, let's see what the probabilities are. Yeah, so it seems like we are expecting a 25 basis point cut, which is fine. So actually, if we do get a cut, it likely will lead to maybe a small downside move and then consolidation. So generally speaking, when we get a cut, so let me put this back to here. So when the markets expect a certain outcome, it's already priced in. So like here, we got this pricing in for this 50 basis point cut. We got the 50 basis point cut. We did see an initial downside move followed by consolidation, which likely will be the same situation that we see if we do see the Fed cut 25 basis points. However, if they hold, we will very likely start seeing the dollar start to do very well off of that. Euro AUD. I'm still confident we're going to see Euro AUD come down. I think obviously the news just came out, so it's giving it a little bit of strength, but I think the overall drivers for this market are still very bearish, mainly from the euro. Obviously, the dollar is a good counterpart because the dollar is quite strong at the moment. So yeah, this market having a little bit of an upturn today, but no issue. So euro yen, my target really is this support level on the daily. That's kind of my point of action. That's where I'll start looking to take profits and closing out trades. If we see this level get hit and then the break, the retest and a continuation down, I'll get back into some short positions. But again, I'm starting to wind down the portfolio for Christmas now. I don't really want to be too heavy into that period. I'd like ideally completely flat actually. GU, same situation as euro dollar really. So yeah. When a central bank cuts rates, that's usually bearish for that country's currency. Well, yes and no, because when we start getting signals of a rate cut, that's what's bearish. When the rate cut comes as expected, that's actually quite neutral because it's already priced in and it's expected. Which is what I just showed you with the dollar and the 50 basis point cut. It's when the central bank surprises people and does something that they didn't expect. That's when we see a huge reaction. So yeah. How do you find financial events history on your TV chart? This is mine. I did this, so I just get this call out tool here, and I'll do it myself. Unfortunately, I don't think there is just a tool to do this for you. Which is a bit unfortunate, but there you go. Cool. Okay. Good stuff. So yeah, not huge reactions from the market really. The dollar did see some downside movements, but overall it's holding up very strong. Euro dollar saw a pop to the upside, but again, it's not really done too much. And the yen pairs, stagnant. So leads me back to saying that I think we're going to see the markets really just waiting for what Powell says. I don't think really there's anything else to do. USD could still rise due to other banks cutting rates heavier than the Fed. Yep. Grids, exactly. Speaking of Xmas, what are you getting? Probably nothing. I'm at the age now where you kind of get, you'll get some socks and a chocolate bar, and that's about it. But I might treat myself to something. I'm looking at a couple of watches. I don't own any fancy watches or anything really luxury things. So I might buy myself a watch, but that's about it. A little treat for my incredible performance this year. What about you? What's on your Christmas list? So I'm just trying to think if there's anything else I want to cover specifically before I go. The next big thing to pay attention to after the Powell speech, we've got unemployment claims, which will be big for obviously big for the for the dollar. We've had a very cool labor market or a very weak labor market, and recently it's picked back up again. So unemployment claims will be big. If we undershoot this, obviously bad for the dollar. Employment change, unemployment rate, and non-farm payrolls, and then another unemployment rate. Unemployment rate here was for the Canadian dollar, US dollar, or US unemployment rates down here. So yeah, we've got quite a heavy news week, really, but we're halfway through, which is the good news. James is joining the Lambo Club. No, definitely not. A mug, good stuff. Can't have enough mugs. Who needs a watch when you have a phone with a clock? Well, the thing with a watch is it's an investment, or at least, if it's not an investment, at least it holds the value, generally speaking. Obviously, if you get a high enough quality watch, it can hold the value. So for me, it's definitely a worthwhile investment. Okay, guys, I think that is me done for today. So apparently it's not me on later. Someone is going to be doing a little giveaway for you guys later on today, so make sure you stick around for that. That'll be good. Anyway, guys, I hope you all have a great rest of the day. I'm sure I'll see you again soon, maybe this week or next week. But yeah, I'll see you guys later. Thank you for joining me.
'Twas the night before Christmas, and all through the house not a creature was stirring, except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
What's happening, everybody? Happy Wednesday. We had a little, what was our news this morning? We had the services PMI come out at 10 a.m. We had the ADP numbers come out this morning. We had a gap higher, so the futures market was pretty much running pretty hot all night. And we had about a 0.3% gap higher on the S&P. We had a 0.8% gap on the QQQ. That was a pretty large rip higher. So the Q's doing their thing, and that close, actually this would be a little bit tighter if I showed this here. So let's go to close yesterday to open today, and a 0.66% gap. That's pretty decent. So NASDAQ has taken the lead when it comes to moving a little bit higher. So we're at all-time highs on the NASDAQ today. We did print some all-time highs again on the S&P. That marks, I believe, 55 for the year. Either 54 or 55 for the year. Still pretty impressive. And percentage-wise, high 20s for both indexes. The Dow, I believe, also had a slight gap higher. Barely, but not at all-time highs. The Russell, not at all-time highs. Volatility at 1310. I will be looking for a long vol play if my chart alarm is activated here around $12 and 15 cents. I'll just be looking to see if we just hit low teens. 13 is fine. 12 obviously would be great. That brings us back into these, really low volatility windows. Look, I know that right now there's not a lot to disrupt the market. We could have path of least resistance, seasonality. The Fed's still coming up in December on the 18th. Maybe they do something, maybe they don't. The market's still anticipating a rate cut. So if we take a look at the watch tool here, it was up to 74% yesterday. And right now, drumroll please, survey says 79.4%. So this is continuing to increase in about, 2 weeks out or so. So actually 2 weeks from today, we're going to have our rate decision from the Fed. And this is a pretty high probability that they are going to cut another 25 basis points. I continue to watch. I continue to talk about this. This is something we all need to pay attention to. We are going to see kind of the state of the economy, in my opinion, through the 10-year lens. So the U.S. 10-year yield, to me, if this is going down, that is good. That is good for the economy. That is, to me, higher highs in the markets. If we are up, that is bad. That's going to be difficult for the market I think that's going to be stagnant growth. I think that's going to be higher borrowing costs. I think that's going to be sticky mortgages. I don't think we're going to see much improvement really in the economy. I don't know if we realize this, but I don't know if I said this on the show yesterday, but everyone's talking about this. We're operating, back to 2%, and CPI is printing 2.4, then 2.5, then 2.6. We have CPI and PPI data next week. The reality is, since 2020, the U.S. has been operating sitting around 4.2% inflation. That's so much higher than what the Fed is telling us, and looking at the trends trying to get back to 2%. We're so far away from that. So the fact that they are cutting rates, it's interesting. This is the first time in history we've seen the Fed, as inflation was going up, okay, we started to peak, pause, and then started to cut rates as inflation was still going higher. And then we started to cut rates as inflation was starting to drop, pretty much at the end. So we bottomed out as soon as the rate cuts started in September, we had already bottomed in inflation. So I think you could argue here that the timing of the Fed hasn't been that great. The markets have been excited enough and steady enough that we've had a pretty good bull market since Q4 of 2022. There hasn't been a lot of disruption in the U.S. market. The U.S. has carried the global economy in a big way. If you look at everything, minus the U.S., if you look at like your MSCIs minus U.S., they're underperforming. You look at emerging markets, they're underperforming. I saw it was an email yesterday from, I think it was Dr. Data from Tasty, looking at some diversification. So right now we have top performers year to date. We have FXI in China still up about 30% for the year. EWC in Canada is up 18.2%. EWJ in Japan is up 12%. But the underperformers, we've got Brazil down 26.6%. We've got Mexico down 25%. We've got South Korea down 17.6%. So usually we start to see these kind of emerging markets that are non-correlated to the S&P 500. So, if there's a reversion to the mean, we'll see. But they've been underperforming for a while. So I'm not looking at like crazy positioning like, oh, this is a bargain. I mean, maybe. But the U.S. has been like the stalwart of the markets for the last couple of years. It's pretty much carried the global economy. We've seen a very quiet China. We're still seeing a quiet China. Here is HSI, right? Hang Seng, Shenzhen Composite. I mean, we had that big rip in September. We've had a nice correction against it. I'm curious if this is a bit of a Gartley pattern. So we have this move, A, B, C, D against it. Does this come back up and find this merge? Does this come back and find this high? We'll find out. I haven't really seen much in the way of China. We're seeing here Hong Kong property transactions more than double in November. That's a good sign. We're trying to see if the country is going to lift animal spirits and continue to support property markets and continue to support the capital markets. And if so, that should translate into some bullishness in the stocks. Alibaba looks like we're just giving it all back. Baidu has given it all back. So this is not an encouraging thing moving forward. Fundamentally, I still like these stocks. I still have some exposure, but it is being kind of a turd when it comes to, having some follow through from that rip in September. K-Web, same thing, just kind of hanging out around that 50 to 60% pullback zone. I do have some shares of JD. I've worked my cost basis down. I think I covered it around 38. Let's keep an eye on that one. So JD, let's go. What's my covered call? 38.50. So I'm just going to continue to work these down a little bit. And overall today, P&L, let's have a look on the day. So what's good, what's bad? OXY is dropping below $50. That's not a good thing. Pfizer's down a little bit at 25.21. It's not awesome. China again. So JD, Baidu, got some P&L red on the day. Uranium's down a little bit. Barclays is fine. MO's pulling back slightly. SPX. What are my positions here? Oh, I just did that bear call spread. That's for Friday. So we'll see if I get lucky on a move. If we get a gap fill. If we get a gap fill on SPX, I have a 60-50. So let me see. I'm going to set a chart alarm here. 60-50. And I'll put bear call spread. Just to see if we come back and fill this gap. I also have a butterfly spread in the SPY, looking at this to hang out around 605. That's a good spot for today. The 520 level on the Qs, that's a good spot. I'm trying to get these to fill out I'm looking for 100% gain on those butterflies. We'll see. It's going to take probably today, if not tomorrow. I might have to wait until Friday. They're Friday expirations for me. All right. NVIDIA had a nice pop higher today. Let's do top down. We'll talk currencies. What I see currency strength wise today is a little all over the place. So we have the New Zealand, the Aussie, and the Japanese yen all quite weak coming out of the Asia session. Here is 8 p.m. Eastern time. Going into that, Asia Open. You got the Australasia Open, right around 5 p.m., 6 p.m. Eastern time. And right around 8 p.m., we had a big drop in the Aussie. New Zealand followed with it. Japanese yen, of course, on its own island doing its own thing. Had a little bit of strength out of the JPY and then faded for the rest of the morning. So interesting kind of separation from the herd with the Aussie, New Zealand, and the yen weakness today. And then the euro's coming back in a nice way. Dollars dipping lower. So yeah, some interesting volatility. We have some stretches there. For example, Aussie CAD getting a little bit more downside. Dollar CAD would be kind of fading together. Euro dollar maybe holding that 105 handle. So euro dollar, yep, just hanging out around that 105.27. Let me get some comments here. All right, good stuff. We did have some earnings overnight. I've got a screenshot here somewhere. There it is. So earnings overnight. We had Chewy this morning. Let me do a spot check on that. Foot Locker, Dollar Tree, RBC, Campbell's, Hormel, Cracker Barrel. When was the last time anyone was going to do a Cracker Barrel? It's been a while. I used to enjoy me some Cracker Barrel back in the day. Let's spot check those. We had Salesforce yesterday, OKTA. Those are the two that I was kind of paying attention to. Let's take a look at those really quickly. So CRM. Holy shnikes. Well, I'm glad I didn't try to sell volatility. Wow. That was way beyond the expected move. I think I calculated this out on Monday or Tuesday, and I was looking at about a $32 move, and we had exactly that. So that did go the way I wanted. Did I take a trade on CRM? I don't think I did. CRM, I don't see it. So nope, I didn't take a trade on CRM. OKTA. Pretty nice move to the upside, but fading quickly. This morning, Chewy. You son of a gun. So I've got some protection. Let me see if that put's worth anything. Probably is not, but I'll find out. Chewy did a short-term move. Right now, that $28 put is still upside down, 28 cents, and it's trading for what? 11 cents. That could be just wasted money then. Well, it is what it is. My covered call is 37.50 out to January. And right now, that was a 510 covered call that is trading for 51 cents. Now, I could argue that maybe it's in my best interest to lower that cost basis from 37 down to collect a bit more premium. But if we have a gap lower and we fill the gap, let me see what earnings did today. I see it in red on TradingView, so they must have missed something. They missed on EPS, but they beat on revenue. All right. I guess I need to order more stuff for my dog to support the cause, right? All right. Anyway, let's see. I'm looking at about 450 out of 510. I've got about 88% of my credit on that call side. Yeah, about 90.4% of that covered call is already profitable. So could I take it and redeploy it? Sure, maybe. I'm up 24.50 right now. I could just add another covered call. I'm trying to get it called away at a decent price, obviously. A gap fill around. Maybe even like an in the money. I don't know. Let me see what like a $30 looks like. I'm not going to get a ton of premium, but if I can cover it at like 35 or 36, I might just do that. Let's see if I can roll this. Let's consider a roll here. So this is out to January. If I keep this, you mean I don't have an expiration? What, dude? I don't have an expiration. That's brutal. Let's roll this down. Well, that's unfortunate. So I guess there's not really much I can do. The expirations here, that's really crappy. These will fill in at the beginning of the year, so I might just have to wait until the end of the year, let the option chain start to fill in with January, February expirations, and then I'll start adding more covered calls. So I was hoping I could do a roll and go from January to late January or even into February and just roll out for another month and see if I could keep the strike price at 37.50 or roll it, up or down. But nothing to do on it right now. I'm not going to roll it all the way out to April. I'll just enjoy the remaining 50 cents that I have. I am curious though, what does a $35 covered call right now is at 86 cents. I don't mind that one. 32.50 and at the money at 265. You get a pretty decent premium there if I put in the $30 covered call. All right, I'll just let that marinate for a second. All right, SPY continues to be pretty choppy on the day. Totally fine. Curious if we get a gap fill. Let's see here. Still looking at positions. Volatility index. Let me go to the SPY SPX right here. Let's go down to the VIX. So I'm looking at a long vol play. Not yet. Not yet. Probably something that by the end of the year, if we don't have a vol reaction through the Fed and it's just, more melt up through the end of the year, the Fed's a bit of a muted reaction. The market already expects to see another 25 basis points. They don't disappoint the market. They don't surprise the market. If we hit, let's say 12.50 or lower, my chart alarm is set at $12.15. I will probably take I would say like a March or April long VIX play. To do that, I can do a couple things. I can do just a simple credit spread on the VIX and just put a line in the sand in there, and that's okay. I can also do an out of the money long call if it's cheap enough and try to do a bit of a hedge there with a long vol play out to like March or April. I don't like overpaying for the premium on this one. If I go out of the money, I'm only want to pay a couple of bucks for it. For example, back here, I paid $4 and turned it into $10. That $10 obviously like several days later was trading for like $30. So that's a bit of a unfortunate timing when it came to that vol event we saw like late July, early August. But timing wise, I was long volatility in here and it did pay out really nicely over the course of, about a month. But by the time this rolled into that big August drop, I think my expiration was like the monthly August expiration. And so it was just a little bit time sensitive. So kind of the same situation. I would look at like an out of the money. If I bought, let's say price is trading at $12 and change, and I buy like a $16 call. Well, if it's out of the money enough, maybe I only have to pay a couple of dollars for it. I can do a $500 to $1,000 hedge. And if we get this thing to, let's say 100% gain, cool. It's a nice little hedge. So we'll see what happens. Okay. Meanwhile, as the market's melting up higher, that's fine. So my credit spreads on the SPY and the Qs are closing out for some profit. That's never a bad thing. SVXY, this one is in decent profit. So let's go SVXY. I have a bunch of options on this one. I'm up $6,200 and just going to wait and see what I have to do. Probably nothing. Probably just let price do its thing. I've got a bunch of options in here, 55 and 54. 53, 35. I just sold a bunch of puts on SVXY. I probably won't take ownership on any of them. They're mostly in profit. There's a little bit more time to go. They're all out to December of this year. So if we finish at high levels for the year, like I said, if the Fed's not super disruptive, there's going to be another decent chunk of profit. I got another 22% to go on that one for additional gains. So keep an eye on that one. Oil's hanging out right around $70. We just have very tight prices. So support at 67, resistance around 70. It's still making lower highs. It's still making equal lows. Keep an eye on it. Set a chart alarm below 67. Set a chart alarm above, let's say 71. Is oil doing anything? Is it just going to get tighter and tighter and tighter? Maybe. At some point, it's going to have to do something. Like I said, I would be cautious of a bear trap and oil squeezes higher. Next week we have inflation news, so I'm curious if that plays anything into oil prices. Probably not. But obviously oil prices, if we hold and hold and hold and hold and hold, It just looks like at some point it's got to go somewhere. I mean, we're not going to see oil just get down to like a $2 range and not go somewhere. So there's going to be a breakout coming one way or the other on oil. Just be ready for it. Natural gas, still watching this one. I'd like a opportunity to get a deeper pullback. I don't know. I'm not chasing this one. This to me was a head and shoulders pattern where we broke the neckline, left shoulder, head to neckline. We're now above the neckline. So I could argue that I want to be long natural gas, but I also know with the coming deregulation, possibly more energy friendly, or more like energy quantity and supply, that we might see natural gas prices actually get cheaper. So if we get bargain shopping on natural gas, back into $2 or lower, then obviously I'm interested, but not right now. Gold, still very quiet here for the last like 6 or 7 trading days. I'm still long gold. I want to add more to it. It just depends on where. 2,500, 2,400, looking for a lot of support back in this 2,400 zone. So high, low, lower, high, lower, low looks good to me. I will wait. So if gold goes higher, I'm not chasing it. I would suspect that gold, if it's going to go anywhere, we're probably going sideways because we've had such a strong trend that we get more of a range trade on gold. I still like the idea of like a bear trap and looking for something to buy lower. So I'll keep an eye on that one. If I like gold, then I'll position on GC, which is gold futures, and GLD, which I'll own some more shares. Silver showing some good legs today, which is nice. Do I like SI futures enough? Part of me should. Let me see what I can do on SI futures here. So silver futures, if I went out to, I guess May isn't awful. We're trading around 31.94 right now. If I were to, okay, so that's a $500 risk. Do I love that trade? Probably not. Let me see on SLV if I like this a little bit better. I've already got the position here in SLV, the 28 by 27. I'm essentially going to be like doubling up on that trade. Let me see. How much do I like SLV? Expiration wise, I can go out to, what's the expiration I have right now? I have a 1/16 expiration. That's, wait, I went to 2026. Oh my gosh, I went way that. What the hell? I went way out there. Let's see. Let's go November 2025. If I sell, what? That can't be right. If I buy a 29 call and I sell a 30 call, you're going to give me credit? Doesn't make any sense. That should be a debit spread. Buy the 29, sell the 30. That should be a debit spread. It's not. That's weird. I don't know if that's priced correctly or not. If I do a bull put spread, so I sell the 29, buy the 28, only getting 30 cents on the dollar. I don't love that. 30 buy, it's a little bit better. I don't know. I'm just not getting the premiums that I want. Fresh eyes on Walmart. There we go, baby. All right. I need to do a quick update here. WMP. Let's go fresh highs. Come on. So I have some positions running on Walmart. Let me check and see where they're at. So 93 by 92 looking good. 94, 95. What are these trading for? $1.02 and 64 cents. What? So right now, looks like I got $1.60 running on what these cost me. I need a little bit more profit there. So it cost me about $1.20. And right now that combo is trading for $1.70. So if I've got 53 cents profit out of $1.20 debit, it's 44% return on capital. Not bad. I think Walmart can get up towards 95 this week. That's what I'm watching for. Come on, Walmart, you can do it. Let me see if I can get. I'd like to get $2 out of this thing, if possible. We'll see. I'll keep an eye on that one. I just had a chart alarm go off, so I want to spot check it. All right, take a look at some other things. Bitcoin 96, still pretty quiet. So is gold. So not a ton of activity there. We're still wondering if we hit the $100,000 mark. Is this post-Fed? Is there a reason that it's stalling? Did the market get all excited? Are we gonna have some pullbacks and find some efficiencies here post-election? We'll find out. I still like Bitcoin. I'm still participating. I like the upside. I tried to find a trade this week on MicroStrategy. I don't have one. I'm just waiting to see if we have some pullbacks. Coin, same thing. Looking pretty darn good. My Coinbase that we've taken in the alerts. Right here it's up $520. My max profit should be like $600. This actually might be worth kind of taking the profit now. I mean, I'm only getting another 75 cents of profit. That's my max profit on the move. Let me see if I can close this thing out for $9.25. You dog. $9.20. All right. So if I get, see if I can get $9.10. Nope. All right. Final offer $9, then I'll stop trying. It should be fine to be. I mean, current price is $320, and I need this to stay above 230 by January, which is 44 days away. Pretty sure I'm going to be fine just to hang on to this for a full $10 credit. I was looking to see if I could close it out at $9 now. I know I'm forfeiting $1 profit, but my max profit here would be, I paid $371. My max profit is $6.29, and right now I'm sitting up $5.29. So I forfeit $100, but I can close out today, use that that profit elsewhere. So if I could, let's see if this will close for $9. Part of me will regret it a little bit. Got filled at $9. All right, I'm out of the trade. That's fine. So now got the other accounts here. Coinbase has, I'm up some bull put spreads, bull call spreads. Those are all fine. All right, let me do an update here in the Pulver alerts for coin. Let's go to this, search Coinbase. All right. So I'm looking for my coin update. I'll just put it at the, where are we at? Stocks, options, trades. The 220 by 200, the 220 by 210, that one's fine. I'm going to keep that one for the credit. The bull call spread. Okay, so I got the 111. There's my 220 by 230. Yep, so 371, 372 debit. Let me jump to that one and then add to it. All right, so I'm going to reply to that here. Update on coin. Closing coin for $9 credit. So we paid 3.71 debit. Closed $9 credit. That is $5.29 net profit per contract. So I have this running on other accounts. that I'll let run to expiration. Okay, or I'll try to close them out for like 950 or something, like much closer to max profit. Okay, update on Coinbase there. So take the dub. Ethereum, nice rip on Ethereum. So even though Bitcoin's not doing much, Ethereum is catching up. This is another one I want to keep a close eye on. I've got some trades running on EETH. I'll get some currencies here in just a little bit. EETH is currently up around $9,600. Got a lot of action here. $60 puts, $50 puts, $45 puts, ratio spreads, debit spreads, credit spreads. And for not owning anything on this instrument, you know, being up $9,500, $9,600 isn't too bad. Expiration wise, these are all out to January, and I'm liking current price. So as long as we stay above $60, I've got, you know, almost 10 grand of profits to just hang on to. So I'm good with that for right now. Copper's fine. Japanese yen, nothing. Nikkei, I did add some shares yesterday. If you saw that, I posted that in my alert section as well. I did this during my my final hour session on YouTube. I bought the EWJ for $1,500. I bought 21 shares, and I've got another pending order for 1,500 shares or $1,500, 25 shares down here at that August low. So I'm looking to see if we will have a stronger Nikkei when it's all said and done. You know, does the Nikkei after this either high, low, and we're just going to deal with a lot of indecision in here, right? Which is fine. That EWJ does offer a decent dividend. So there's a 2% dividend, which for a little index play is not too bad. This also excludes the bottom 15% of the Nikkei 225. So bit more quality to that than just the typical Nikkei. But anyway, if the Nikkei can find a way to carve out revisiting these all-time highs at 8% up, I'm looking to see if the EWJ will do the same thing. I looked at the kind of measured move, if this is a cup and handle from this low right here. So if we go from low to high and we pull back, and this is the break of that cup line, that we measure the move all the way up there. So if that is the case where we're getting up to a measured move, then potentially Nikkei gets up another 19 to 20%. And you know, even if I have $1,500 invested, which isn't a lot, but $1,500 times 20%, you know, make $300 return. Maybe it takes 6 months. It's a little income play, but I'm going to see if Japan can actually do okay. You know, even if I bought some here and I want to buy some at the August lows, I'm looking for longer term opportunities to stay bullish. Okay. That's Japanese yen, EWJ I just talked about. The DAX ripping higher. Germany just crushing it. So nice little rip there. UK market right back up towards recent highs. China I talked about. We just have to wait and see if there's going to be additional animal spirits. Apple up to some fresh highs at 240 and change. Amazon. Ooh, Amazon. Hey now. Could I do another roll on Amazon? Probably. I'm going to see something here. I have a 210 covered call out to January. I might look to roll that out into February, keep the same strike, or roll it out and up and see what that looks like. Oh my gosh, so annoying. Schwab with your two-step verification. Killing me, Smalls. All right, anyway, I'm going to look at a roll on Amazon. Otherwise, Amazon still doing pretty well. Up around $11,700 with zero ownership. Another count, I'm up around $14,000 with ownership, and just looking to add some covered calls on that. Boeing still down a little bit. I've put like $1,000 towards Boeing. China still need to get their act together. Anyway, let me look at a scan here, and we'll do some currencies. So scan wise, let's see, Apple, AMD, Amazon, BAC, BBD, Ford Motor Company, Google, Intel, Coca-Cola. I'm doing a repair on Coca-Cola. I put that in my alerts yesterday. So I have some shares. Okay, I have some shares. I've worked my cost basis down. 64.42 is my break even. I put a $65 covered call, and I'll ride this out a little bit longer. This is one that I wouldn't mind. You know, if I'm going to take on some more shares, which I don't really want to take on more shares, but I'm going to try to lower my cost basis into the 60s. So it'll take a little bit of work to work this down. But if I can get a break even on Coca-Cola at like $60, I'd be okay with that. Okay. All right. Powell's speech. Is he actually giving a speech today? I thought it was like a panel participation. I don't know if he's actually going to be, on a microphone or it's just going to be dripping headline stuff. All right, let's get some currencies. Aussie CAD. To me, I still like long Aussie CAD. I could be waiting a little bit longer than I want, but I'm liking this kind of little fake out here. If we end up closing, back above, let's say 9,100, then we could be putting in a bit of a move here. We start breaking higher. But anyway, I like Aussie CAD long. So I'm going to hold Aussie CAD long. Aussie Swiss. I'm still scalping this thing, scalping with a robot, buying only, and still willing to hold on to this one for some positive swap for right now. Watching support level. If we do revisit the flash crash low, I'm going to buy more at the flash crash low. I'm going to take this all the way back up into this big inefficiency, all the way up towards 6,000, and ideally all the way up towards the highs here around 60.50 to 6,100. So to me, this is, I don't know, this is just a good spot to be watching. But if it holds support, there's either some type of like choppy, like broadening pattern where it's all messy, but we have some support and resistance structure we can work with, or we just watch the lows and watch the lows and watch the lows and scoop up some bargain shopping, enjoy some positive swap while we get it, and then see if this becomes a bigger move to the upside. Next week, if I'm not mistaken, we also have 3 rate decisions: ECB, as well as the ECB, the Swiss National Bank, and the CAD, right? We have BOC, ECB, SNB all next week for rate decisions. Then we have the Fed and the BOJ. So you're throwing in the next 2 weeks of trading, we have 5 rate decisions from these central banks. We also have inflation data coming. So yeah, I mean, there's enough to pay attention the next couple weeks of trading, that's for sure. Okay, all right, Aussie Swiss, I'm still going to hold long and scalp. Scalp to the cows come home. Aussie yen, no trade. Aussie New Zealand. I like this currency a lot, just no trade at this time. I'm looking to see if the Aussie New Zealand will come back down to like 106 area, and I'll start looking to buy some support. Aussie dollar. I'm starting to get looking to get filled at my lower levels here. So I want to be buying this thing 63.10, 62.10, 6,000, which is, 62 is right here. 6,000 is obviously lower. So I'm just looking at buying low. So 63, 62, and 6,000, test these levels. And if I can kind of catch a low here, even if I take this one back to break even, and this is a winner, and this is a winner, that's at least a starting point on this Aussie dollar. So I'm looking to buy, at lower prices if we come in and settle into multi-year support. This goes back to 2022, 2023. Got some pretty good structure here. The last time we were that low in the Aussie dollar was the COVID crash during, February, March of 2020. CAD also scalping and buying, and willing to hold, trying to get this one back up to. There's a really nice pocket up here around 6,500. So that's at least my first target. My higher level here is around 70. This one way back here towards like 71.50. That's obviously a little bit further away. That's going to take longer to hold, but I'll be watching for some type of price pattern to emerge. And I've said this one for a while. I mean, if we have this high and this is all just like some big head and shoulders that sets up, then that to me is worth lots and lots of effort to hold longer, for a big swing to the upside and make a ton of money. But it's not there yet. CAD yen, Swiss yen. Swiss yen's pulled back a little bit. I'll keep an eye on that one. Euro Aussie, I didn't really love this currency pair, so We're seeing a weaker Aussie. I just see this in a range trade. So we're off of support. We have some intermediate resistance in here. So right now it looks like we're getting, just a run from support to resistance. If anybody's long Euro Aussie, 6,600 is a pretty notable spot just to be protecting some profit. Euro CAD, I'm not doing anything on this one right now. Seems pretty volatile. Euro Swiss, I'm still buying and holding, trying to scalp for those little bottoms. Euro Pound, I'm still long. Okay, it's super low volatility, but I'm looking to see, does this thing settle in and actually snap up? We'll find out. Pound, Euro New Zealand, Euro Yen, I'm not doing anything. If Euro New Zealand, same type of thing. A lot of structure down here around 7,500, resistance around 8,400. So if you're buying low, selling high, if you're looking at current structure right now, it's kind of right in the middle. That's a hard one to predict where price is going to go, so I'm not trading it right now. And then Euro Dollar, if anybody's interested in hanging out of that 105 handle, that's okay. Just be careful. If this dollar's not ready to form a top and the Euro dollar's not ready to form a bottom, we might have a whole new story developing if we come back to parity. So if this is, high to low, lower high to lower low, lower high to lower low, I mean, we could get back to parity, but I would be scooping up some buy levels, from 100 down to 96. I'm probably going to dollar cost average into the Euro dollar and then take this thing back into this sticky level at 105. That could be a really nice trade. This might be a 2025 trade, but if it sets up and I can kind of pile in for like 1,000 pip run, there's a lot of money to be made on a trade like that. I'm just going to be really, really patient. Okay, Pound Aussie, still kind of range bound. Watch this one. It's kind of running hot right now, right? That's a big daily candle here on Pound Aussie. I wouldn't just automatically assume that it's going to drop, but watching to see if price behaves. I mean, there's been some pretty good rejections here since 2023. That if we're not going higher, look to see if this shows any type of rejection. So there could be some controlled risk in that environment if we hit resistance. Pound CAD, no trade in this one yet. Pound Swiss, I'm still holding long. There's a lot of chop on this one, but I'm still holding this one towards 120. Pound Yen, no trade. Pound New Zealand. Again, Pound New Zealand, Pound Aussie running. Here's another range. Watching this high right around this 2.19, 2.20 level and this low. Okay, so if we're coming up to resistance, look for some smaller time frame rejections and see if the Pound New Zealand will sell off a little bit. Okay, Pound Dollar. Hanging out right on the backside of this trend line. Let's see if it actually is going to hold in the near term. Even if we pull back into this area, that might be good enough to take some small profit. So I'll keep an eye on that one. New Zealand CAD also little nasty mover, but I still like this kind of channel. I've talked about this. There's support, there's resistance, there's a bit of a channel. So I'm looking to just kind of stay long, buying those bigger lows and those bigger moves until we get to like 8,800. New Zealand Swiss, positive swap, very patient. We got the flash crash low from August, and we'll see what Swiss National Bank says next week if it moves the market at all. New Zealand Yen, not much there. Stay out of that. New Zealand dollar starting to get filled at these lows. So I've got some dollar cost averaging levels on New Zealand dollar that I'm liking. So I'm in and I'm holding. Dollar CAD, we're at 40.64. I'm still looking to take this up towards 45 to 4,600. I'm going to hold on to this long. Dollar Swiss, still holding long. Dollar Yen, at this time, no trade. I don't know. Don't fall in love with the yen crosses. I mean, this high, this low, it wouldn't surprise me if we see a lot of this and the market has to go somewhere else later. Okay. The one potential surprise we might see in the Japanese yen would be the piggyback of if we see the Bank of Japan right after the Fed on the 18th. It's very possible we have a pretty disruptive end of the year on the Japanese yen. Okay, so just throwing it out there. Just be mindful of that. I mean, the Fed is the 18th. So next week, And I said we have a bunch of rate decisions, right? Next week, we have the Aussie expected to keep the rates the same at 4.35. So we have 4 rate decisions next week. We have Aussie, CAD, Euro, and Swiss National Bank on top of U.S. inflation data. It's a pretty busy week. So Aussie expected to pause. BOC, there's no forecast. Swiss National Bank, there's no forecast. ECB, there's no forecast. Okay, well, we'll see what that looks like on Monday. All right, Amazon. 210 covered call. Let me see if I can roll this bad boy. So can I roll this out? So if I roll it out and up, it's going to be a debit. March. There's no way. All right, I'm going to try to do a roll on Amazon real quick. It is for credit. So my 210 covered call roll. So if I roll it out to February, keep the same strike. It's not bad. Price is trading at 219. So if I roll it up to 215, I can also collect another dollar. That's not bad. I can roll my strike price up to $5, and I can also get another $1.40 for it. So I increase my profit potential by like $6 and change. It's not bad. All right, I'll think about that. Anyway, a lot of stuff going on there for next week's rate decisions. Then we come into the week after that with the Fed. PMI numbers out of the Eurozone. We've got the Fed on Wednesday the 18th. And right after that, that Wednesday night to Thursday morning, we've got the BOJ. We've seen it happen in the past. We've seen this interesting timing where the BOJ is right after the Fed, and we start to see a lot of crazy stuff happening on the Japanese yen. So just throwing it out there. Be aware of it. Aussie doesn't have plans to cut. Yeah, I see that in the forecast. They'll probably pause. I mean, I think a lot of these central banks are not into surprising the markets. Things tend to overreact when the markets are caught off guard. So it's probably best just to drip this information into the market and, not surprise it. So I'm sure if the Fed is going to cut rates by 25 basis points at a 79% probability, they're probably best to do it. Next week on Monday, we'll see what the central banks show for forecast. If Bank of Canada is going to stay the same or pause or cut. If ECB, Swiss National Bank, if they're going to do anything, we'll take note of it on Monday. All right. Anything else? Any other charts? I did every currency pair. Top down, we did some Mag 7 major indexes: oil, gold, silver, Bitcoin, Ethereum. Think I'm good. Did some China stuff. We're still down. Mortgage rates, 10-year yield, watching closely. 10-year actually going down in the day by 21 bips. That's fine. I want to see a lower 10-year yield. One thing I keep watching is gas at the pump. Gas. I typed this in earlier. It doesn't give me the thing that I want. So AAA gas prices. Nope, it just gives me every country. Gas at the pump. Okay. Just a different data point. I don't see it on TradingView. Let's see here. What else? Do you think since we hit a daily, we'll rise to 66 before we hit 63? I don't know. I would actually hope no. I mean, honestly, I'd rather just hit the lows. I'd rather just hit the lows, accumulate the levels that I want, and then get this thing back to 65 or 66. So for me to be long, it's like, if I was long now and it hits 65 or 66, I just take profit. But ideally, it's like I want to buy this thing here and here and here. So that's where I want to buy it up. I might as well, I mean, if it's me, it's like, well, just push oversold, get more divergent, show disagreement between price momentum, test this level, then confirm a price pattern, and then watch this thing come back and find a range. You know, that's a lot easier trade for me than trying to see this thing. Here's what I'll say. If we pull back right now, I'm less interested in buying support. But if we keep pushing and pushing and pushing and pushing, we get oversold with really extreme inefficiencies, way more interested in buying that, testing that, and then seeing it, you know, rebalance. So just saying, I'd rather see it hit, you know, the low 60s so I can scoop it up. Okay. When you wrap up for December, I don't know. I mean, I close trades when I want to close trades, man. I'm not intentionally trying to, like, you know, oh, I've got profit, I'm going to take it. If I've got a profit target and my profit target's not there and I've got January expirations or February expirations, I'll trade them and manage them to the best of my ability. You know, to me, it's like rolling from one year to the next it's just a roll, you know? I mean, I'll carry positions over. My trade has a plan from start to finish, and I want those plans to come to fruition. So if I manage early, that's fine, but I want to be, you know, if I'm managing early, I want to be like 90 to 95% of my max profit anyway. But I don't just take profit just to take profit. You know, I've already discussed everything with my clients. I've got an invoice in from October. We were already up a good chunk this year, and we're already up another good chunk to kick off, you know, the rest of this year. So I'm sitting on a nice little pad of profits into the end of this year, and then hopefully we have a strong 2025, and I just figure out how to grind just like I did this year. So to me, it doesn't matter. I'm just going to trade and you know, have my plan be what I focus on. Just because it's December 31st doesn't mean anything to me. You know, now there's certain like kind of market mentalities. There's you know, option flows, and there's, you know, there's all sorts of like drifts that happen during the holidays. You know, path of least resistance, no disruption, things like that. So that could be December or January. So yeah, I mean, I'll probably just carry over positions. Okay. Use TradingView for all your charting. Yep. I'm not going to use, I don't know, my broker platform. I don't want to use their charts. This is easy, man. This is cloud-based. I can do whatever I want. I can build custom indicators. I've had TradingView for like a decade. So, you know, my charting platform is my charting platform. My trading platform is my trading. Like, I trade here. I'm not using their charts. You know, my analysis and stuff, it's like, man, I'm not going to use their charts. So I don't know. I've had TradingView for so long that I just like their charts a lot. Makes it easy. Okay. All right. Looking at some fresh highs on Walmart. Going to keep a close eye on that one for some profit for this week. I'd like to see a little bit more profit there. Nvidia needed to stay above 140. It's looking pretty good. That's by Friday. SPY and Qs. SPY is trading at 606. Qs trading at 521. Looking at some butterfly activity there. Winner on, had a couple of winners on some credit spreads. Had a winner on SPX this morning. So that's it. I took that profit on Coinbase. I'm going to let the other ones for these other accounts. They're going to keep running. I'm going to let these go towards expiration. So here's another account just to take a quick look at it. This is a 111. So I bought the put, sold the put, sold the put. That's an income play for like $350. And then there's my $600 max profit debit spread. So I'll just sit on those. I think we're pretty safe to be, you know, $80 to $90 out of the money and have these finish up for some nice profit. And then we'll see if, you know, maybe another little surprise for the year is Bitcoin does actually get to 100 grand. And if it does, hooray, does it go not just to 100 grand, but through it? We'll find out. You know, if we surge through 100,000, that'd be nice. Maybe there's a little bit more accumulation. Yep. So Coinbase, I mean, I was long going into the election, and I mean, it's a good stable, like, peripheral instrument to trade Bitcoin. You know, it's not the same, but when you look at Bitcoin making all-time highs and you look at Coinbase also making pushes higher, you know, it's not trading like MicroStrategy, it's not trading like IBIT, like Coinbase is his own thing. You know, I do think that the introduction to these SEC approved ETFs has hurt Coinbase a little bit because there's less activity as far as like opening wallets, when now you have more of your, your ease of like, well, I have a stock account, I can trade, ETFs. So they've securitized Bitcoin a little bit, but still, I mean, there's plenty of Coinbase wallets. It's one of the household names. It's one of the few that has survived this entire window and hasn't cracked and had some crazy type of scam, like FTX and everything that was shaken out in 2021 and 2022. So anyway, I mean, how much do I like it? Enough to trade options on it, but I'm not holding the shares or anything like that. So, all right. Yeah, the 1-1-1 strategy, it's pretty simple. I mean, basically it's this. If I've got a stock price up here that I like, so 1-1 strategy is I buy a put and then I sell a put and then I sell another put. So what that creates is I have a debit spread right here. So I'll label this. This is usually how I trade it. So I do a buy put here and then I do a sell put. So that combination is a debit spread. So that's a bear put spread, and that would be a profit trap. So that's in the event that the stock price were to drop or the underlying asset were to drop. If the underlying asset were to drop below, if it were to drop below my bear put level, that profit is my trap. Now down here, this is basically my cash secured put. So this would be another sell put, and this would be cash secured. And a lot of times, if I'm doing a put, I'm willing to own the shares. Okay, so the way that this trade works is I take this entire trade for a credit. If price goes higher, I still keep the credit. If price goes sideways, I keep the credit. If price goes down but doesn't come below my bear put spread, I still make credit. If price goes down through my bear put spread, this is my max profit, because what I would have here is the winner from the bear put spread and the keep of the credit from the initial trade. So I have a win on the bear put plus a win on the sell put, and it stays right in this sweet spot. I'll kind of paint this green. So that's my sweet spot where I have a bear trap plus profit on the sell put that I'm not getting assigned on. So, I try to set this up where it's like the stock price might be able to drop, 10%, 15%, 20%, depends on volatility. But if I can get this thing to, be credit number one, be income, and possibly have a profit trap, and give myself, if I'm going to own the shares, it could be a huge discount. And that's kind of how it all works. That makes sense? So it's just a interesting way to do it. This works. I don't know. This worked really well in 2022 when the market was kind of methodically making lower highs and lower lows. I did have to take some ownership of some assets, but I was able to repair them pretty nicely. Depends on the premium. But anyway, that's how it works. It does require some buying power, just so you know. I mean, if you're willing to own shares, it's going to tie up some buying power. So just be aware of that. So, all right, good stuff. Okay, it's 11:10. If we don't have another guest coming on, I think I'm going to wrap it up there. And I'm just going to look at maybe a roll on Amazon here. I can roll it up to 215. Right now we're trading at 219, and I'll grab a few more bucks out of it. I'm looking at going out another month on Amazon. So that's not too shabby. But I could roll it up $5 and get another $1.50 to $1.60 credit. So that gives me an extra $6 to $7 on my bottom line. That's pretty good. My break even on Amazon is like $130. So I mean, I've got a lot of profit potential here, and I'm just trying to nurture it. Okay, we got Kenzo coming on 11:15. All right, cool. All right, I'll go for a few more minutes, and then we'll transition into Kenzo if that works. So we don't have like a. I know you guys got some awesome transitions, but we don't need any dead air here. All right, so what else? What about the speech? You're talking about Powell this afternoon at 1:40. I don't know. Who cares? Is he going to say anything that's going to surprise the market? Unlikely. Seriously. I mean, think about what that guy is supposed to say. The same thing he's been saying for the last 2 years. So he's on the calendar. If you look at what it is, what is it? Participate in a moderated discussion at the New York Times Dealbook Summit. Audience questions expected. We've seen how well this guy dodges questions for the FOMC. You think he gives a crap about New York Times? You know, he is going to be bobbing and weaving. He's not going to answer any questions that's going to make major headlines and shake up the market. I doubt it. Now, if he does, it's just one of those events where it's like, okay, I mean, the market latched onto what he said and had a reaction to it. But more than likely, he's not going to say anything that we haven't already heard. You know, there's nothing that Jerome Powell is thinking right now that hasn't been already said. I mean, that's been the trouble with the Fed, is they're so transparent that the market is just waiting with everything that comes up as a headline events like, oh my gosh, Powell is, you know, sitting next to a fireplace having Santa Claus cookies. Let's go ahead and put it as high impact news. It's like everything the guy does and everything the Fed does matters, but in truth, they're telling us everything that's already being priced in. You know, they're supposed to cut. They're probably going to cut December 18th. I think the big surprise would be if they cut and the 10-year yield goes higher, it looks different. But if they cut and the 10-year goes lower, okay, then they're getting more of what they want. So I'm just saying, be aware of that as we go into, you know, the rest of the year. I typed this up on Monday. Path of least resistance and seasonality. That's where we're at. To me, the Fed is the only real thing that's going to get disrupted. Everything else is getting kicked into 2025. Debt ceiling for the U.S. gets kicked into 2025. That's going to be in January. We have, you know, we'll have Trump's inauguration and swear in January. Hopefully, smooth transition of power. We'll have a red House, a red Senate. We'll see if there's any major policy coming right out there. Do we just start kicking off Q1 with tariffs? I have no idea. So, you know, just keep trading. This is why I trade defined risk. I'm trying to eliminate a lot of the outlier stuff. You know, things that you don't see coming can be really, really damaging to good profits. So I try not to give a lot of that crap back. All right, we got some fresh highs on Walmart. Let's go. Good. Okay. Scalping in Forex. I'm not a scalper in Forex. I think it's too noisy. If you're trading the London session, maybe better. London session, London breakouts, you know, 2 a.m., 3 a.m. Eastern time, right around the UK Open. You know, you typically get some decent surges in price action, but I'm not a scalper. You know, I was introduced to Forex as a day trader, as a scalper. I traded 1-minute charts, and I did it for several years. It's exhausting. I never like feeling like I've got a place to trade. It's my least favorite thing. So as soon as I gravitated away from day trading and away from, you know, scalping every day and feeling like I was forcing trades, I became a much more profitable trader. Brokers love scalping, right? Brokers love day trading. If I'm going to day trade and scalp today, I'm doing it the way I do it already, which is I'm in the indexes, I'm trading futures. That's my day trading. I just think there's just better flows and it's more concentrated within the first couple hours of the U.S. Open at a time that I can exist and not, you know, be awake at 2 a.m. my time. So I'm just not a scalper in Forex. Also, volatility in Forex has been pretty quiet the last couple of years. It comes in, you know, comes in waves. We have like some events and some outliers, and it gets high volatility there for like a couple of weeks or a month, and then it goes right back down to kind of medium to low volatility. So, unless you're trading currency pairs that can move 150 to 200 pips a day, I don't like to scalp. You know, I mean, and realistically, scalping is like if you can carve out, you know, 10 pips a day or 15 pips a day or 20 pips a day, that's really, really good. But man, you have to trade some super high volatility currency pairs, which in turn you typically play higher spreads on, and it's just tough, man. And you know, you could sit there and wait for a 24-hour market to give you an hour worth of direction. And just because you want to trade today at this hour does not guarantee that price is going to move. So my least favorite thing is trying to force a trade when the market's not moving. Right? So I think there's a time and a place to be an opportunist, and that's not sit in front of my charts every day forcing trades. You know, trading FOMC, trading non-farm payroll, trading some ECB, like trading some big catalysts out there gets the market moving a little bit. Yeah, that's different. You know, that's an opportunity to see price move. That's an excuse for the market to move. So I like that a lot more than just I'm going to trade every day. You know, so like I said, if I'm day trading, which I do, I'm very active in the stocks and options markets, the futures markets. Like I'll be willing to do that every day because, you know, I can do it at a normal time. I can do it around a very highly anticipated window, like 9:30 to 11:30 every day in the U.S. is pretty straightforward with a lot of volume. So That's what I like. Okay. All right. If Kenzo's coming on at 11:15, let's go ahead and transition into him. Thanks for being with us today, and more to come. Stay tuned for more. Have a great day. I'll see you tomorrow. Bye.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Good evening, guys. I hope you are doing great. So you know what? The best thing that you can do here is to let me know which pairs do you want me to actually check. On the comment section, I will be going through those pairs. So at the moment, I will be just going through DXY, gold, US30, and Nasdaq, and the other ones will be the ones that you want me to go through. I hope you are doing great. Later on, I think Powell is going to speak. And on Friday, we have NFP. Obviously, the market will be reacting in a way that we actually expect high impact news. Sometimes the market tends to react differently or in a manner that is not really normal, especially when we expect some higher high impact news. So as we are on a dollar index, we're trying to understand what's really happening here on the dollar, but we can easily see that the market is still around the same level as yesterday. Actually, the market is just playing around the same level. But when we check our overall structure, the market is actually above our resistance. So we were actually on a bigger structure, which is actually a downtrend structure, but we can see that the market is no longer on that downtrend structure. We can see a nice breakout. The market is back again, trying to retest the same level. And since we have NFP on Friday, so it's going to be tricky because we don't really know if NFP is going to be positive or negative. Let's say it's going to be positive. Obviously, we will see a dollar index going higher, and that will mean that USD is going to be stronger against several pairs like Canada, JPY, Europe, or Euro, and British, you see. So, but at the moment, this structure is actually giving us those type of vibes that it seems to be trying to push the upside. But at the moment, since it's still Wednesday, I think the market might just consolidate around this level. Do you see that? So on the comment section, just let me know which pairs do you want me to check. So let's go straight to gold. So on gold, we can see that let's go on 4 hours time frame, because the overall structure here is it's actually a nice bullish move. If you can check here, or if you've been following gold, you can see that the overall structure is still that nice uptrend structure. You see that? But at the moment, we had this nice reversal, and since we still have some tensions in the Middle East, not in the Middle East, since we have tensions in Ukraine and Russia and stuff like that, this will likely push gold to go higher or to recover very quick. But besides the tensions, we can say we had a nice reversal from this level. So if you draw a line there, you can see that we actually have a proper area that we can say it's a nice support area. We can't say it's quite stronger, but it's a proper support area. So now we can say let's have a proper support around this level. That can be a nice support. And on top there, obviously, this is our next level that the market might reach. So around this level, obviously, the market, we can see that it's actually consolidating, but it's because on Friday we have NFP. Until we have clues on what will happen, I think the market will just play around. But on Friday, maybe the market will take a nice push to the upside, or maybe we'll see the market selling. But the best thing that I can say is sometimes it's way much better to stay out of the market or just to relax than to wait for those economic news, because sometimes you might be on a buy, and since the market is just consolidating, it might hold you until Friday, and maybe on Friday things might tend to go lower. And if maybe you were on a buy, that is going to be a problem. But if maybe you are in favor of the market or of the economic news, that will be good. But most likely it's not going to be, you're not going to be on the right side of the market, mostly, especially during the news, or maybe we might have some crazy volatility. So I can see that, Oscar, how are you, man? I see that we need to check Euro AUD, CHF JPY. Okay, I will check that. So on gold here, I'm still expecting to see a very nice push, but things might change on Friday when we have NFP. Do you see that? So let's push to the next one again, and this is US 30. So on US 30 here, if you check, you will see that the market is actually on the uptrend structure. The market is quite uptrending, so you can see that. So we had this scalping, which the market actually did give us some very nice move. We'll go there. So you can see that the market has been pushing to the upside. So this is a proper uptrend structure. But when we go closer, we can see that the market actually already reached our resistance area. So there is a chance for the market to do what? To reverse before we see a very nice push. But it seems like the market is still playing around. The market is still around this zone. But if I can take that out, because we're just scalping that, this, we can call that a nice resistance. We also have this diagonal resistance. So if you check, this is a proper resistance, then the market actually moved towards this previous resistance. So at the end of the day, the market might just consolidate around this zone. But I think a proper sell can be very, very, very good before we see a nice push to the upside. But at the moment, we can just relax and wait. But I saw Nasdaq flying, and yeah, we were also on that. But here on US data, we can see that it's struggling around this resistance area. But I'm still expecting to see a very nice push, but a nice reversal. It's also welcomed before we see a proper push to the upside. I hope that makes sense. So now we are on gold. Now sorry, not on gold. We are on the Nasdaq. So on Nasdaq 100, we can see that the market is coming from this nice uptrend. Do you see that? The market is coming from that. So the market has been going up for quite some time. But what we have here is the market is now continuing aggressively with that bullish move. And yeah, that is good because we've been looking for that buy or for that uptrend. So this is what we had. If I can take this one out there, you can see that the market has been trying to go higher. Let me take this one out. We were scalping that. Very nice one there. So you can see that we had a proper resistance area. And also the market gave us a clue there. But we see that the market broke out of that. So obviously, along the way, the market might retest before going up. But whatever that is happening now, we can see that the market is breaking everything. And that is good. That shows us that this bullish move here is quite stronger, and we are willing to continue with the trend. So which means we are trying to follow the trend, right? But since we have some economic news, later on, Federal Fed, actually, let's say Fed meeting later on, they're going to speak, and we might see the market reverse because they're going to talk about interest rates. Are they going to cut the rates this month or not? We saw inflation bouncing back very quick after Trump won. So will we see something else? Are we going to see the rates going down or where they are? Or maybe are we going to see some increase? I don't think maybe they will increase any rates, but I think they might pause with the rates. And that is not going to be a very good thing. If they pause, I think that will actually show us that they did cut early, and we might start to see an aggressive reversal. I hope that makes sense. But at the moment, since we broke out of that resistance, so we just have to wait and see if maybe the market is going to come back and respect this level before going higher or not, you see. But at the moment, I think it's just a nice structure there. We just have to wait and see. So I see a few pairs that you want me to check. Let me see. It's Euro AUD and CHF JPY. So you can send those pairs, guys. I will be checking those pairs. Let's see. Euro AUD. I don't think I have that. I'll have to add Euro AUD, and CHF JPY. Let's see. Euro AUD. Let's add that. And CHF JPY. So let's see. So this is what we have on Euro AUD. Then we will go on CHF JPY, Swiss franc, Japanese yen. So I think the best way here, it will be trying to go on a daily time frame so that I get proper structure. So I think I did analysis. I did some analysis on this pair before. You can see here. So what I can do, I can clear this so that I can see properly what's really happening at the moment. So let's clear that. So from my side here, I think the market is actually on a smaller, not really aggressive trend. You can see the market going lower. So on top there, we can have something like that. So to me, the market is just going actually down. So the best thing that we can do is can we find where we can actually sell, because the market is actually on a downtrend structure. If we can get that, that will be much better. So obviously I have to find something like that and see if maybe we get proper structures. Let's do that. Let's do that. Let's do that so that we can get on the market on the right time. Let's see. On the comment section, you can let me know which pairs do you want me to check. I only see two. I will be checking everything. I will be checking everything. Yeah, so this is what we have on Euro AUD. So at the moment, you can see that this is what we have, and the market is actually on a downtrend structure. So at the moment, you can see that the market, after the market reaches or way too closer to this resistance, most likely the market sells. So at the moment, we see that the market is going towards that. But sometimes the market might not really touch exactly our resistance. You can see even there. But I think maybe we can wait a little bit. Once the market reaches this level, then we can have a proper sell, because this is a slower move. Actually, I think it's a proper downtrend structure. But on the bottom side, if for those who want to buy, you can see that as long as the market is going to go towards our support area, once the market is on a support area, it's better to look for that nice buy. I hope that makes sense. Do you see that? So if the market gives us a nice push to the upside, that will be a proper push, especially if the market respects this resistant area. That will be a very good for us to look for that sell. I hope that makes sense. So now let's push to the next one, which is CHF JPY. I think I also did a proper analysis before on this one, But since then, I did not really check this. You can see that. So let's modify this. Let's see what's really happening. So on my side here, I can see that the market still actually, if before we draw, you can see that the market seems to be going on this nice uptrend. I hope you see that. So we don't really have to complicate things. You can mark this level, mark that level, and you will see that this is the same zone that you can use as your support area. And we can see that the market moves like that. Where we are, obviously, we can see that the market was coming from our support area. So let's try to do that. Let's try to zoom this first. Okay, sorry. We have something like this. So now let's try to draw our support area. I think it's quite clean. We don't really have to cut them that much. So this is what we have. So we can easily see that actually the market is uptrending. So when the market is uptrending like this, we actually expect to see the market respecting this zone. So sometimes the market might not really reach this zone exactly. That's why if you have double lines, you can try to push it a little bit closer so that it can touch even other structures. Do you see that? So now we have this zone where the market find our support. So obviously around this level, this is a proper bullish move and it can still push very high, especially when we had this proper reversal or aggressive reversal. Do you see that? So yeah, this one to me, it's a proper bullish move and I'm expecting to see a continuation of that move. I'm expecting to see a proper move, a bullish move from that. And I think we still bit early, but yeah, it's a little bit far from the support, but we can see a continuation of that push to the upside. Do you see that? So can you take a look at platinum? Okay, let's try that. I don't really do it much. I never checked it that much. So let's check platinum. Platinum. I think with the code, I don't know, I forgot the code. I think it's XAUP, I think. Platinum, or let me just write platinum, it's fine. Platinum, let's see which one. Oh, XPT, okay. Platinum. Okay, let's check platinum. So let's see platinum, what's really happening on platinum. Please let me know, guys, on the comment section. If you need any pair, I will be checking those pairs very quick. So on platinum, we can see that is platinum, right? Yeah. So we can see that we have these zones. I think this one is also quite clear. So we can see that the market is actually on this nice uptrend structure. So obviously the market is respecting this area and then pushing to the upside. So let's try to draw a proper support line. Proper support line. Let's do double lines. This double lines actually helps me to know that this is a zone. So the market doesn't just respect a certain zone. So I think my network is a bit slow, but I think maybe at the end of the day, you will able to see or understand what I'm trying to show you here. So what's really happening here now, we can see that we are on this nice proper support area. And here you can see that the market just reached this level and the market is trying to do what? To go even higher. Do you see that? So that is a proper uptrend structure. So I'm expecting to see a continuation of this platinum going higher. I think the structure is quite straightforward. So we just reached the support area. So we expect a move. So this move here is quite similar to here. Once the market touched here, we saw a very nice push to the upside. I hope that makes sense. I hope that makes sense. So another one is USD JPY. Let's check USD JPY, guys. Let's check USD JPY and see what's really happening. What's really happening on USD JPY? Let's see. Yeah, we did smash this one here since I think it was yesterday. We had this signal, I think it was yesterday. You can see here the market reached this nice level. So what is happening here is the market was actually on a very nice bullish structure. I think this is not necessary here. That is not really necessary there, or even this one. So, but I will have to show you what's really happening there. So we can see that the market is coming from this nice uptrend structure. At the time the market was going up, then after JPY became quite stronger and we saw a nice breakout. So this nice breakout here, it shows that JPY, or let's say the dollar, is a bit weaker against JPY. So this is actually a formation of a downtrend structure. So if you can check, we can see that the market actually broke out around this level. So the market, it's just melting. The market it's just melting. And we never had a proper reversal, maybe for a nice retest before pushing lower. So this shows us that the market, indeed, it was actually on that nice aggressive sell. But after that, we see that we had a proper resistance there. But it seems like the market actually broke out. So is this a nice push? Or sorry, is this breakout going to start to push the market to the upside? The best thing that we can do is to try to draw whatever that we need to draw first before we decide. Then let's try. I will try to zoom so that I don't really get it wrong. Firstly, we can see that we had something like that. It makes sense. Do you see that? And the other one, we can say the structure was like that. So that's good. And then let's see if maybe we can have another structure there. This is a proper structure, a nice vessel there. And when we check, the market did not really reach that level. So there is a chance for the market to reach that before bouncing back. And it seems like the market is bouncing back even before that. So another one, it was around this level where the market actually broke out. We might say the market actually, yes, we can see that it's a sort of a breakout, but the market is still on that downtrend structure. So we can actually use these horizontal structures. Do you see that? So we can maybe push it up to this point, but we will know that if the market tries to push up again, we will draw that line. But if it breaks that, we will say, okay, maybe the market will be trying to touch this level, because below this downtrend here, sorry, below this uptrend, actually we expect to see the market going lower, or the market is trying to form another new formation. This might be something like that going further, because this is the start of this trend. So the trend, mostly when it breaks, you don't just get proper structures immediately. The market will do its thing, but at the end of the day, the market will start to give you proper structures that we can connect. And at the moment, I think the market is giving us first one. You can see here, this is the first and this is the second one. I think at the end of the day, we might have something like that. Then the market might start to move like that, going further. So don't just rush to say, oh, maybe the market is going up and down, because we just broke out out of that stronger bullish momentum. So which means maybe the market is trying to give us some proper moves. So this might still be there, that might still be there, but just try to be creative here, because we are now expecting a downtrend structure. So sometimes it might also be difficult for you just to jump in, because the structure that we have, or the structures that we have here, they are like, we have different levels. At the end of the day, the market is trying to find itself where it can actually try to create those structures. At the end of the day, we will draw some very nice resistance area. At the moment, I think I will leave it here and just wait and see. But I'm expecting to see a continuation of that sell, especially as we are no longer on that uptrend structure. So I don't know if maybe you have any pair that you want me to check. I will go maybe on GBP USD and see what's really happening around that. And if you still have another pair, I will check that. GBP USD seems to be trying to go higher. So let's check. Let's check GBP USD. Or maybe I will just say, let's go on a daily time frame so that the structure can be quite visible on your side. So on a bigger time frame, I think you can see that we are coming from this nice bullish move. So, and makes sense. So obviously, this is a stronger bullish move. I think my connection is a bit slower, but you can see that this zone, this point, they all make sense. And if you check on top there, this is it's an area that we can say it's very close to the support area. But for the market to reach this zone there, that will be a swing trade. So which means for those who trade GBP USD, if you check this in a different angle, this can be an opportunity for a swing trade. Do you see that? If we mark this level there, you will see that for the market to reach that zone, maybe you can still wait for NFP if maybe you're not actually sure. But I think at the end of the day, we might see the market bouncing back from this support area and continuing to the upside. But things might change, especially when we have a Federal Reserve meeting later on, and also NFP in the same week, as we also have interest rates this month. I think maybe it's going to be next week or next of next week. I did not really check that. But if you check that, you will see that it's a quite important month for us, especially when it comes to interest rates. And if they keep cutting, obviously this will be confirmed to say we are going to see a continuation of that buy or of that uptrend, as the market is already on this nice uptrend structure. So we will be expecting to see that continuation of that buy. Do you see that? So I don't know if maybe there is anything. I think my time is up. If maybe there's something that I can check for you, maybe US oil. Let me check US oil. Let's check US oil. If we check US oil here, for those who trade US oil, you can see that it's actually struggling, guys. It's actually struggling because we have some ideas. Already Trump said he's going to pump more oil and stuff like that. So we can see that since then, the market has been around the same level, around 72, 66 there. The market has been just floating around the same level. So this is just obvious that the market is just waiting for January, and then we will see. Because if they keep pumping, obviously it means oil is going to get way too cheaper, and that is going to be good, especially for inflation. We already saw gold, sorry, not gold. We already saw USD, or let's say other US events gaining some momentum, showing us that no, inflation is still a little bit pushing up, or is still resisting. And if oil was also going, it was also going up. That was not going to be a very good thing. But at the moment, what I like is oil has been around the same level. Maybe it will even push a little bit lower. That will be much, much better. But if we see a nice push going up, that will be bad for the markets, because inflation, it means inflation is going to go higher. And the rates which we expect them to cut, they might not really cut, you see. But the overall structure of US oil here, it's actually a very proper downtrend structure, even though we have this consolidation structure there. But we will just have to wait and see if maybe the market will end up breaking out of that as a resistant area, or maybe the market will then continue to go even lower. I think, yeah, I think for now, for today, it's enough, guys. My network is also very bad. So yeah, I think it's enough for today. So thank you very much, guys. Thank you very much. So I'm hoping for someone to pop up here. But while we're still waiting for them, maybe we can check something else. Let's wait and see if we can get something. Maybe on Euro USD, while we're still waiting for them. Let's see, Euro USD, Euro USD, Euro USD. Oh, Euro USD, I think we did not really check this. On Euro USD here, we can see that Europe is actually bleeding, sorry, against the dollar. We can see that, yes, previously the market was going higher. We were on this nice uptrend structure. After the breakout, we can see that we see the market actually bleeding. So I think this might continue because it shows us that the dollar is quite strong. So if you use Europe as something that you as an indicator for other pairs, I think you got it right, because we can easily see that the market is very stronger, or USD is quite stronger, and it seems like we will see a continuation of that, especially when if we're gonna talk about tariffs and stuff like that. I don't think it's gonna be way too good for Europe, and that is going to be a negative thing, and that will be boosting the dollar. I think we will end up seeing the dollar getting stronger, even though they say tariffs are 2 ways, 3 ways, whatever. But for now, the dollar is quite stronger against so many pairs. But I'm expecting a proper continuation of that trend going further. So I think that it's something that we should be checking. So I think my time is up, guys. I think my time is up. So I don't know if I have to push, but Euro, New Zealand, they will stop me. Let me continue. They will stop me if maybe the time is up. So let's check Euro, New Zealand, Euro, New Zealand. Forex. Let's go. Euro. What's happening? What's happening? Euro, 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 Euro. Okay. Yeah. So now on Europe, let's see. Euro, New Zealand on a daily time frame. Okay. Okay. So yeah, I think if it's like this, it's going to be clear. We can see that I think I did an analysis around this level. So we can see that we are coming from a proper uptrend structure. So this was the structure. You see that? That was an uptrend. But where we are, this is not an uptrend or a downtrend structure. The market is just consolidating. The market is just ranging around the same level. So which means we just have to be extra careful. So I think this pair can be good for scalping. For those who scalp, buy, sell around the same time, this can be a very good pair because it moves. But when you check, it doesn't really take a trend or a certain trend. So we can say this will be the lowest area, which is going to be the support. And this is going to be our resistance area. Do you see that? So which means the market is just floating around the same level. The market once goes up, down. So at the end of the day, you just have to be quite safe around these levels because the market is just moving around the same level. Sometimes you will ask yourself, why is this thing not really moving? Because we are on a ranging structure. Yes, you can still go even lower. If you go lower, you might find a different structure. If maybe you trade with smaller time frames, maybe you will find something like this there. But be extra careful because the market still respect our ranging structure. Here, it seems like the market seems to be trying to go lower, but at the end of the day, we are on that ranging structure. So I won't really recommend this unless maybe if I just want to scalp. But at the moment, I think, yeah, the structure on the daily time frame, even if we go on 4 hours time frame, we're still gonna get quite similar structures. But anyways, thank you very much, guys. Unfortunately, my time is up and I need to go.
Hey, Kenzo, good to have you on and nice to see you again. Thanks for doing all the different charts. I know I always enjoy when you take over solo, you go through a lot of charts, which I know the audience appreciates as everybody seems to have one that they want to look at. So thank you for coming on. And just last question before you go. Is it warm weather there now? Because it's real cold over here.
Yeah, this side is like seriously hot. So it's summer, so it's quite hot.
Yeah, always interesting. Just because, of course, we're on northern and southern hemisphere. We always talk the weather. It's always sometimes during the hot summer, I'll see Kenzo wearing a big jacket to warm up, and now it's our turn to wear jackets. I've got mine. It's getting real cold here. But anyways, Kenzo, thank you very much for taking over the show for a little bit. Before you go, last thing I want to say is everybody make sure, if you have not already, Kenzo has his own YouTube channel where he puts up free technical and fundamental analysis content videos. And it's like I said, it's all free. So make sure, go subscribe to Extra Hot Forex on YouTube. And Kenzo, thank you very much for coming on the show today. And we'll see you next time.
Thank you very much, man.
All right. Yep. Always good to have Kenzo on again for some good technicals and fundamentals. We're going to take a little bit of a a look now at some things here as we get close to the big event. We have, of course, Jerome Powell speaking this afternoon. This morning we had services PMI came in 52.1, which was lower than forecasts. Were for 55.7. 52.1 was a little bit light on the print. But markets have mostly recovered, and I did a couple things this morning. Took a couple trades this morning since the live stream. I'll show you what I'm working with. Not the, not any like Forex trades currently, but or momentum trades. But I did add a little bit of a position here to my Apple trade. So I have been selling puts on Apple. And I actually think that the market is just a little bit overly excited currently, the stock market specifically. And so what I did is I actually have been doing a little bit of a neutral range-based style of trading, which is selling what is called strangles. In the options world, I know that sounds aggressive, sounds like what the heck is a strangle? That sounds evil, but really all it is you're selling a put and selling a call at the exact same time. So I've sold puts for many months now on things like Apple, Amazon, Microsoft, Tesla, Nvidia, all the Mag 7 stuff. I've really been playing the options a lot on the sell put side. Basically, when you sell puts, you make money as long as the market stays up, down a little bit, sideways, as long as it doesn't tank through that put that you sold. Well, I've recently started actually adding some sell calls to the other side of that trade. So to keep this really simple, I make maximum premium if Apple basically trades sideways. Because think about this. If you sell a call, right? If you're short calls, you want the market to not go up. And if you're short puts, you want the market to not go down, right? So you want the market to go up for this one, down for this one. So in actuality, you end up with this wanting of the market to go nowhere at all. Now, these are not ginormous positions, but they do have risk to them. Because what if the market rips to new highs here? Then what happens to me? Well, I have a sell call, which means that on this position, I will be taking a loss. On this position, I will be making max profit. And what if the market goes down very hard? Then this call will be very profitable. It'll be max profit, which max profit, by the way, is about $200. It's not huge. I mean, these are not ginormous trades. And if in that situation that happens, what happens to my put? Well, my put then is now what is considered in the money. Now, because I'm short a put, I don't want puts to gain value. I want them to lose value, right? So basically, the long story short is I make maximum amounts of money if the market goes nowhere whatsoever, which is kind of cool, right? Sorry, my wife has some people over. We're getting some work done in the new house right now. I just want to make sure there's not an emergency that she needs me for. But anyways, yeah. So with the Apple play, I basically want the market to go sideways. If it goes up a lot, I probably would lose money. If it moves down a lot, I would probably lose money. But I repeated this same trade idea, this strangle, quote unquote, with Amazon as well. So Amazon, I sold a call, and I sold a put a few weeks ago. So that's why this put is already like almost max profit at 91% gain. But what we've got here is we've got Amazon sitting at a 91% gain of max premium. And I've sold this call here today as well. So sold the call pretty close to where current price is. So if the market, I think that the Amazon, Apple, Nvidia, all those things, I think that they're due for just a little bit of a cool off. If I'm wrong, I'll take a loss. If I'm right, which I have been right, I've been bullish on all these things, and I've been selling puts, which is making good money right now. I'm willing to give back a little bit of that if necessary. Let's see. Other plays, I have 2 short puts on Nvidia. Both of those are in, I'm sorry, not one short put. One is just straight up, I have shares long. Okay, so Nick's gonna sleep on the couch today if he doesn't call her back. I've been off and on the phone with my wife, contractors all morning, so it is. We're getting the water heaters replaced today. We're getting the locks changed. We're getting a survey on the property line done. I mean, oh my goodness. And they say renting is a bad option. Buying a house, I knew this. I mean, I knew this before I bought a house. In today's world, everything is very expensive. So owning a house is very, very expensive. I don't even know that you really save money putting money towards a mortgage as opposed to just renting. Because to be honest, if you're just renting, you don't have all the overhead costs that the apartment complex that you're living at pays for. It's honestly something I knew before I moved into a house. I knew this was, the reality of owning a house is it's probably cheaper to just rent in this world right now. Nick is extending his 15-car garage. I wish. When is Powell's speech today? So we've got Powell, I believe it's at 2:45. No, 1:45. So we've got about an hour and 45 minutes. We do have some more guests who are going to be hanging out with us here on stream. NAS is up 0.7 here today. S&P is up 0.33. And I predominantly do have bullish positions in the market, though I also now am adding slowly. Essentially, I'm stacking sell calls on certain positions that, I feel less convicted on. Nick, do you train people as well? Sorry, guys. It's I think we're good now. Anyways, current ideas that I'm watching. We got Bitcoin, oil, NASDAQ, Nikkei. Nothing updated since we last discussed when I was here earlier. Looking at oil, looking for breaks and retests through these highs, right? That would be a trade idea for me. Not really interested in anything else on oil from a price action perspective. Would need to see a break through these levels. So that's a setup that I'm looking out for. And I'm also looking for positions long on the indices themselves. I wouldn't mind maybe a middle ground being selling like calls against some specific stocks and then owning the indices. So that's a position that I'm open to, but need to see a pullback. Really not interested in chasing. The indices have gone crazy here in recent times, which is what they do, right? They go crazy for a sustained period of time. Everybody who starts believing they can't go down, and then they go down. So if we get bigger pullbacks, I'd be welcoming that for possible long opportunities to start looking to, get long this market. But the issue that I think is right now is everybody's kind of thinking the same thing. You got the end of the year rally that is historically what happens during the month of December. Let's take a look at seasonality, month of year trends. You can see if we filter for SPX, right? S&P 500, you get a really strong year-end rally most of the time, talking about a 1.8% average return in the month of December over the last 10 years. That's a solid return. So I think you've got a lot of people who are kind of just riding that end of year rally in the S&P, hoping to see that continue. Same thing for the NASDAQ, by the way. You got the same story there. So NASDAQ, 1.66%. So yeah, I mean, we're expecting this end of year rally. You also have, there's a little bit of a dynamic in the stock market world for fund managers. If you take a huge profit right now, you have to pay your taxes on it, right? But if you just hold your winning positions, you could potentially save on your taxes and put them off until, next year. So that's part of the reason I think you get the year-end rally is the tax incentives to not sell your positions. But then you also have specific names. There's tax loss harvesting that you can do in the stock market where people sell losing positions and realize the loss so they can show on their taxes, okay, I lost money here, I lost money here, right? So, not tax advice, but generally speaking, showing your losses is smarter than showing your wins on your taxes, because if you show wins, then you have to, and what I mean by show is realize them. If you realize them in your brokerage account, then you get taxed on them. So, let me think of a stock. This is a stock play that I'm doing right now. Intel has been a big loser this year. And I think Intel is seeing continued sell-off right now because it's been a big loser this year, right? Here's Intel in 2024. It's been a terrible, terrible losing year for Intel stock. So what happens is a lot of people who are in big losing positions, if you were long over here and you're holding onto the stock, a lot of times people will just sell it off before the end of the year so that they can just report that loss on their taxes. This has been a big winning year for stock investors. So a lot of people who have big long positions might want to offset some of their wins with their losses in Intel by selling their remaining Intel position. I liked that idea so much that I actually sold calls on Intel. And that is not a huge position for me. I sold 5 contracts, a max possible profit here of about $243. Not a lot of profit, but I spread out my options trades over many, many individual charts. Also, I want to check something. I took that idea because I liked it a lot, but I'm not sure if Intel, I don't think, Intel's not currently on the stock box setups. But while we're here, I do also have a position on Tesla. So we could talk Tesla for a second. So Tesla is one of the most bullish readings currently on the stock box, which, by the way, stock box is our new tool. I sold 420 calls on Tesla. I make money as long as Tesla is below 420 by the expiration date, which is, where's my expiration date? December 27th. So we got about 23 days left on this covered call that I've sold on Tesla. Tesla's been a really winning strategy for me this year. I've sold a lot of puts. I've sold a lot of calls, and some winners, some losers, but mostly winners on Tesla this year. Tesla, I'm sitting on a pretty good position here overall. I sold calls. Those calls are in the green as well. Now, the calls themselves have actually lost value because time has passed. That's what I love about options is even if the market goes sideways, if you're selling options, you're making money because the value of the options falls over time simply because options have an expiration date. The longer an option has on it, the more valuable the option, generally speaking. So, I've sold those calls and then the market's just gone sideways. So it's actually been really good because the value of those calls is plummeting because they're just not moving anywhere. Tesla's not moving. So as long as that stays the case, I can actually just sit there and let those calls lose value every day. I do have a position on NVIDIA. Things are going well here. If this thing rips through the highs, I actually very much may actually even look to get short some calls on NVIDIA right now. Let me just look at that. So if I go on NVIDIA, what are my puts out to? My puts are out to December 27th. So let's look at the calls December 27th. And if I get short some calls up around 155, let's just see what we can get out of that. So I could go over here to the 155 calls. And if I were to sell just one call, it's not going to make a ton of money, but one call would give me $155 of premium. And I'm sitting on a pretty good gain here. So I actually don't mind this idea at all. 155 calls, December 27th. So that's 23 days until expiration date. I think I'm going to actually take that trade. So I have puts that I've sold. That's a bullish position. I have underlying shares in the company. That's a bullish position. I'm offsetting it a little bit because I do think that the market is a little bit due for a pullback, but I'm not outright short the shares, which would be me thinking like, oh, the market's going to crash or sell off heavy. I don't necessarily think that, but I do think I could see NVIDIA and most of these stocks just kind of trading sideways, slightly down, slightly up in the next month. So that's kind of the idea behind selling options is you want the market to go really nowhere. You make the most money when the market just goes nowhere. But I'm going to go ahead and sell this. I just want one contract. I'm going to collect $152 for this. I'm going to take a screenshot of this because I would like to, let's see if I get filled right away. I might need to, yep, I got filled. Okay. So now I can see that option is filled. So I sold one call. I've sold one put. Basically, I make peak profit if the market on NVIDIA just goes sideways. So sold that call. There it is. I'm going to go ahead and fill that in for I did this with Amazon earlier. I'm going to just literally do the same thing. There we go. Okay, so NVIDIA selling one call contract, and the strike price that I said was what? 155, right? So 155 per share, and the option expiration date is December 27th, 2024. NVIDIA has been on a strong run in recent months, and I think it'll cool off from current levels. I'm not necessarily a bear on NVIDIA, but I believe the call premium, yeah, I mean, same sort of idea as my Apple and Amazon theories here. I'm also selling puts, so I will max profit if the market sideways. Yep, all looks good. So I just sold calls on NVIDIA. I've sold puts, I've sold calls. I own some shares in NVIDIA. So this is just sort of a very soft hedge variation of what I'm looking at in NVIDIA. And again, I'm not bearish on the market by selling these calls. I just think personally that the market, it's become a bit stretched. The valuations are quite high. Doesn't make me bearish. In fact, I'm bullish on the markets. But what I'm most interested in doing is just, I have a lot of long positions. I just want to hedge a bit of that because I think the market may go sideways or even pull back a little bit. So I'm just hedging slightly by selling some calls on some tech names. Not that I hate these companies. I love NVIDIA. I mean, these are companies that I own and want to own more of. Just think that they have some room to trade sideways or pull back. And if they don't, if the market just rips, what happens? What happens if NVIDIA launches up to 165? Well, then this call becomes a loser, and these two positions make a lot of money, right? So these positions would make good money, and I would give back some of those gains with this share, right? It's kind of a hedged position to a degree. Now, if it rips really hard, then yes, that would be a losing position for me. Like if we rip massively in NVIDIA in the next 2 or 3 weeks, then that would be a losing trade. But they're not huge trades on my account, and I'm spreading them out over a couple different stocks. I know we're talking a lot of stocks today. I've just been very much in the sell call mode today. But NVIDIA's been real strong here this year. It's a company I really like. It's not that I'm, outright bearish. Again, like I said, I own the shares. Just want to collect a little bit of a yield, both directions, sell puts and sell calls. Do you not think that Tesla is kind of high right now? Zoro, that's a good question. But I mean, like I said, I have that same trade going on Tesla. So on Tesla, I own shares at 229.06 or so. Like this is where I own Tesla at. And I've sold calls up at 420. So I do think that a lot of these names have had real hot runners and that they're due to pull back a little bit. So I do think that, but I'm not selling my shares. Like I'm not, what's the difference, Nick? If you think they've done hot run up, why not just sell your shares? Well, because I do think that they could continue. So I want to leave some room to still make money if the market goes up. I just think that they probably have, capped upside here for now. And again, I could be dead wrong about that. That's the thing about markets is you can have an opinion or a theory and be wrong. But what makes the difference is how you size it. So I'm not sized massively on Tesla's a pretty good size. That's actually the biggest stock position that I have is Tesla. But, I have shares and other things and they're much smaller like Airbnb. I've got $5,500 in Airbnb, NVIDIA. I have $6,000 worth. So yeah. But I mean, I just think that the market is due for a bit of a pullback. It does not mean when I say it's due for a pullback, I'm not saying I am absolutely getting short right here because I think the market's gonna, tank. It's not what I'm saying. It's just that I think that everybody right now, and I talked about this earlier with the put call ratio, and I even mentioned that this is part of the reason I really like to use it or how I like to use it is when everybody's on one side of the trade, which we have been very low on the put call ratio here recently. And I think that we're going to see tomorrow the put call ratio skew even further lower. So this is yesterday's put call, but I believe today's put call ratio is going to dive down into this territory. Everybody's on the call side right now. And so like buying calls. So I'm interested in selling them. And I do with my options trading side of things, I'm pretty contrarian. Like when everybody gets super bullish or everybody gets super bearish, I'm looking to kind of do the opposite because that's when premiums can get, a little bit more attractive. So we'll see. But gold here, we'll take a look at gold. Keeping an eye on this one. I do like the idea of potentially getting long gold if we see sort of a break retest momentum start to pick up, but kind of choppy here. Not loving the price action for gold recently. I have almost a bullish score on gold. +4 is pretty dang close. So I'm watching for possible, edge finder bullish territory on gold. And if I see that, I might look at it a little differently, might look for some setups, but just keeping an eye on gold. Bitcoin also, I keep coming back to Bitcoin because I think I'd like to take a position on it if you get a bigger pullback. But I'm going to be patient on this one too, because so I have a lot of stuff right now that is like pending for a setup, right? I like this possible pullback on Bitcoin idea, but it's not there yet. So it can be a little bit frustrating for me sometimes, and I'm sure many of you guys have the same experience. You see a setup, and it just feels like the market like pogo sticks away from your setup or your entry. That's kind of how I'm feeling right now. I have a lot of things that I would like to go long or short on, but I'm just not quite getting the market to follow through anywhere to get me into a trade. So, and that's okay. You know, you just kind of wait for it. I mentioned oil, looking for a breakout, not getting anything there. It's just stuck in a range. Take a look at some of the bearish side. Pound yen and Kiwi yen. Let's take a look at those for just a second. And that's why I've been trading a lot of options this morning, is I'm not finding anything else anywhere. So pound yen, maybe a trade that I look out for. In fact, I don't hate this one, actually. I may take... I don't love shorting yen crosses in general. The carry is quite expensive. Whoops. But I don't hate this idea. I don't know. I just don't love shorting yen pairs. They're very expensive to short. If you've ever shorted and held a yen cross overnight, you'll know what I'm talking about. That swap fee is very expensive. So I really don't love to take those sorts of trades unless I'm absolutely looking really, in a portfolio approach. Shorting these is a bit of a hedged kind of idea if you're long stocks, because typically the yen gets very strong in global concerns and sell-offs and things like that. So pairs like pound yen and Kiwi yen inevitably have a little bit of a correlation to the stock market. So when pound yen is going up, usually you take a look at it, usually at the same time the stock market's going up, and vice versa. So I don't hate those trades, but they're expensive trades to hold. So I'm probably going to pass on them at this time, as I just took a bunch of sell calls on some things to sort of hedge my stock viewpoint. Netflix is getting a bullish setup. Let's go look at Netflix for a second. Yeah, see, what can I do with that chart? It's a beautiful chart. I wish I was long, but I'm not long, so there's nothing for me to do on that chart. And you guys have to remember too, another thing to think about this week is that you have NFP on Friday. So tomorrow you've got unemployment claims numbers in the morning, and you've got NFP on Friday. So really a pretty loaded rest of the week in terms of economic data. And that NFP report is going to be so important. I'll tell you why. The NFP report is going to be so important because following this week, not next week, but the week after, we have FOMC economic projections, which is, I believe, the dot plot comes out, and you get the press conference and Fed funds rate decision. Are they going to cut rates or not? Let's go look at the Fed Watch tool just to see. And we're getting a 75% chance here now that the Fed will cut rates in December at that 18th of December meeting. So we'll watch that. I mean, that has shifted back and forth a little bit here. For a little bit, it was looking like we might actually not see a rate cut. Now it has shrunk, and now this has grown, indicating that we likely will see a rate cut. That's after the services PMI here this morning came in a little bit light. Those PMIs can be very important to what the Fed chooses to do. So might have swung the odds a little bit here more. Last time I looked at it, it was like 65% chance of a rate cut. So it bumped a little bit, I think. Can you know if high put to call ratio is because of people buying calls or people selling puts? Yeah. So, I mean, just think about this. When you're reading the put call ratio, which by the way, Stockbox does have put call ratio as well. In fact, I think it kind of looks better on the Stockbox. When you're reading the put call ratio, this is of course of the S&P 500. So it's tracking the volume of puts versus calls. And when this gets real high or real low, the way to read this is that, remember, there's for every option contract that gets created, there's a buyer and a seller. So all this is saying is that if this goes real high, what that means is a lot of people are trading puts. And usually when you see a huge spike in put demand, right, because the market's selling off or people are fearful about a certain event, the put call ratio spikes up. People are buying puts, people are selling puts, put activity is very high. Then when you see a shift back the other way, people are buying calls, and this indicator basically shows the proportion of put volume and call volume. So yeah, I mean it's a really powerful indicator. It's one of my favorites. I love to keep an eye on the put call ratio. It's really, really cool. And we have that. And one thing I'll leak here, guys, we are planning in the future to build put call ratios, not just for the S&P 500, but for everything. So we're going to build put call ratios. And this is so exciting because I really want to use this tool myself. We're going to build a way within your Edge Finder copy. You'll be able to select gold. You'll be able to select Dow Jones, NASDAQ, silver, oil futures. Like you'll be able to track the put call ratio on everything. That, not everything, but a lot of major things. That's something that it's a project that I've written down for the dev team. We're working on that behind the scenes. And I think that would be a really cool tool. Imagine if you could select, I want to look at gold's put call ratio. This is the S&P 500. In fact, I can put to call ratio currently. This is specifically the SPX500. But in the future, we'll get one that's made for gold, one made for silver. We're going to have all that data in front of you, which I'm really excited for. That is something that we're working on. By the way, we're doing our Cyber Monday sale, and that is ending. You guys are down here to the last day or so. If you have not picked up a copy of the Edge Finder, this is your fair warning. This is your last chance of the year and for the foreseeable future to get such a huge discount off the tool. We are constantly building, just like I just discussed, the put call ratio additions that we're making. We're constantly working on new tools and improving the ones that we have. If you're serious about your trading and you're trying to get more into fundamental analysis and sentiment tracking is something that you're interested, you want to see what the crowd is doing, you want to see what institutional money is doing, all of that stuff is something that we specialize in. We build tools for traders who dig that stuff like we do. So if you don't have a copy of the Edge Finder, this is your last chance. Get 40% off for Cyber Monday. And if you're here with us live, while we're live, if you send us a DM right now on our website using the link that's on the screen and available in the live chat right now, just click that link and send us a direct message. Let us know you're watching, and we'll give you 45% off the tool. And just a heads up, this is a one-time fee to get access to the Edge Finder. You don't have to pay every month. You don't have to pay every year. It's one time. So you pay once, you get basically your access email, and you can access it from your phone. You can access it from your desktop, from your laptop. Heck, you could even put it on your TV. I've done that before. So Edge Finder is actually, I think so I'm working on my home office right now, like ordering stuff. There's a small TV in the home office. I might start throwing the Edge Finder up on the TV. Between that and the A1 Trading Show, that would be awesome to just be able to pull that up and do. I don't know. Does anybody have a TV in their office? That would be, that's something I'm really excited about. My home office has a little TV mount in there, which I think is going to be fun. So anyways, again, don't miss it. It's 45% off. That's pretty much almost your last call. We're at the end of this week. The Cyber Monday sale ends, and you no longer will be able to access it for such low prices. So there you go. let's tidy up things here just a little bit. By the way, Stockbox is also available. Same thing, Cyber Monday, 40% off, 45% off the Stockbox if you're a stock trader or you're getting into stocks or options or ETFs or whatever. Check out the Stockbox. It is also at the lowest price of the year. Dow Jones up a little bit here, giving back just slightly. S&P 500, it's just the slowest rally I've seen in quite some time. Look at this daily chart. It's just so regimented to the upside. Bitcoin's down 1%. Come on, Bitcoin. Give me a little bit more of a sell-off here. I'd be interested between the 92 and 87.5 level for a possible long. And we still are getting a good setup on the Edge Finder, +7 for Bitcoin. I mean, I like that. Alan says I'm putting one in my office next month. That's awesome. Yeah, I feel like a small TV in the office is cool, or just wherever you're working. It's fun. Fun stuff. All right, so let's see. What else do we have? Gold up 0.3%. Silver, I do have a position on silver too. I have a sell put on silver, which is going quite well. So I want shares of SLV, which tracks silver, to go sideways, slightly down, or up, or really really, really up. All of those scenarios I make money because I've sold puts on silver. And if I hold this thing to expiration, there's another $160 that I'll make. I mean, this thing went really well, really fast. I sold puts on silver like right at the low. So for 31st of December, if I hold it through the 31st, I'll collect a max premium of about $570. That's kind of the thing I just love about options in general is that, so if you just go long something or you go short something, you have to be completely right about the direction. The downside to that is that if you're not right about direction immediately, you can get stopped out, things like that. The way that I sell options, basically, I have to just be right. I just have to not be really wrong. If I'm really wrong, which is going to happen sometimes too, by the way, in that case, then I just have to stomach a loss. Nick, are you done with US 30? We'll take a look at the Dow. Dow Jones, I mean, it's a bit of a frustrating story, just like the NAS and the S&P. I like this thing long, but there's no entries for me. Need to see a pullback. I'm going to sound like a broken record for the next few weeks if we don't get one, because I can't really justify getting long on the Dow Jones. My first attempt could maybe be around this level here, 44,300 or so. But an entry that I like more would be 43,200. Nick, I've been trading Forex and CFDs for a while. Can you please tell me the difference between that and stocks? Can you use the same price action analysis and fundamentals and you do Forex? Yeah, I mean, I don't trade just anything. Like I trade FX, I trade indices, commodities, individual stocks, I trade options on stocks. Like I trade a lot of different things. I don't really think and I don't claim to be a XYZ trader. Like I trade pretty much everything. What I would actually say is I'm mostly like a macro trader, meaning I focus mostly on the big picture, central banks, economies, and then basically what I'm looking for is opportunities in different spaces that make sense. So absolutely. I mean, I trade the same principles across all assets because price action is not unique to one. Price action, Forex doesn't own price action. Gold doesn't own price action. Like price action is universal. Fundamentals are absolutely universal. to people not even that people who don't even trade are using fundamental analysis, like the gas pump. That's a real world force. If you're going to the grocery store and prices have gone up, that's fundamental, macroeconomic stuff that everybody is aware of. We as traders sometimes forget that, what moves prices is not a candlestick pattern or a support and resistance or a moving average. It's the real world. The real world forces are what make prices go up and down. Demand for a certain market or selling of a certain market largely happens from people who are not trading necessarily from a speculation perspective, but because things are happening in the world. If Russia invades Ukraine, it changes a lot of industries. It changes a lot of commodities. It changes currency values, not because traders are necessarily, seeing a candlestick pattern form, but because those real world forces have now drastically changed the order flow in the markets, right? So we as traders are trying to capitalize and see what's happening in the world and try and, form technical trades and ideas based off of it. So the concept of macro is applicable to everything. The concept of price action is applicable to everything. So I don't trade one thing. And I think that anybody who, sort of claims that one market is just, you can't use fundamentals on Bitcoin. I've heard that before. That's crazy. Are you kidding me? Bitcoin is a risk asset. It does well when inflation is falling, when economies of the world are doing okay, and people have a little extra money in their pocket. Fundamentals absolutely 100% matter to Bitcoin. Sometimes people will also say, well, technicals don't work on Bitcoin. I mean, says who, right? At the end of the day, technicals are just they're a framework for looking at a chart. It's universal. So, yeah, I mean, I trade a large basket of different things, but generally speaking, I'm looking at the macroeconomic side of things and then finding pockets that I like to trade the most within that. But I trade stocks, options, Forex pairs, commodities, indices, a little bit of everything. I think it's kind of like you either speak English or speak French or speak Mandarin, or you're a linguistic person that you can just kind of like figure out, where am I at right now? Which language should I be speaking? I know it sounds a little bit more complicated, but that's kind of the idea of like being a solid technical and fundamental analyst. Anyways, guys, don't forget the Cyber Monday discount. Currently 45% off if you send us a message while we are on live stream. Sorry, my pen freaked out. 45% off while we're on live stream. Get a copy of the Edge Finder, the Stock Box, or our VIP group. Everything is 45% off. It's our biggest sale of the year, and it is ending in just a few days for the entire year. So do not miss your chance. Pick up a copy of whatever you're looking for access for. I'm going to take a quick break here, pass it off to James for a few minutes, and then we'll be back just after this. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
That guy looked really familiar, but has way shorter hair than whoever is on screen right now. Hello, everybody. If I'm here, you know what time it is. Does anybody know what time it is? You should know what time it is. It's time for a giveaway. We are going to be giving away either an Edge Finder or Stock Box. We've been doing this a lot recently, so if you've been a regular live stream viewer, then you already know the deal. Avalanche, yes, sir. It's game time. We are going to be watching the Powell speech. After this, we're giving Nick a little bit of a break here Powell is speaking in about an hour from now. So we're going to do this, and then we'll be back with the Powell speech. I see a couple familiar faces in here, Avalanche, Zorro, some people that have played before. But before we get into the actual trivia trading challenge, let's go over the prizes really quickly. So you have your choice of two options. Number one being, of course, the Edge Finder. And I'm going to show these off very quickly, just in case we have somebody new who wins and they aren't quite sure what the prizes are. We want them to be fair. We want them to understand what they're, choose the better product for them, whether you are more a Forex trader or more a stock trader. So first up, we have, of course, the very lovely Edge Finder Pro that is updated every day, every hour, sometimes up to the minute, not every minute, but every few minutes, constantly looking for new data as it comes in. We had services PMI today, and as that data comes out here in the US, it is getting updated for, all of these different currency pairs, all of these different indices, commodities, and how it impacts the market, bringing it all together for one cumulative score to let you know overall whether or not certain assets are bullish, very bullish, bearish, very bearish, or neutral. Very, very useful tool here to help you find better trading setups. We have, of course, things like, Forex, bonds, commodities, gold, silver, indices. But more than that, we also have sentiment and positioning. You can check out the latest COT data, the Commitment of Traders data, a very, very useful thing to pay attention to. Find out what the big money guys are buying and selling. You can find retail sentiment in here, seasonality. If you're a fundamental trader, we have all of the fundamental data that you could possibly ask for in here. The Edge Finder is an amazing trading tool. On the other hand, if you are more a stock trader, we have, of course, the stock box. And I did not forget to share it this time. If you remember last time, I went over the entire stock box without ever sharing my screen. That did not happen this time. Stock box works very similar to the Edge Finder. Taking a look at these different metrics here, pulling it into a overall cumulative score and letting you know what stocks are bullish, bearish, neutral, so on and so forth. Right now, Tesla, FTNT, and NOW leading the way with our very bullish plus 11 scores, or I guess not NOW, just Tesla and FTNT. It's a tongue twister for some reason. Top stocks, top sectors as well. Our stock analyzer page, you can actually see the daily chart here along with certain economic metrics here. We can see Apple's profit margin is a little bit down. Their forward PE is a little bit down. Price to sales is a little bit up. Their expected or their earnings growth is down, but their revenue growth is up. So if you're a big time stock trader and you're interested in all of these different companies here, we have a ton of different stocks that we are tracking. You can see them here along with their actual price chart. Get an idea of what hedge funds, kind of similar to COT data, what the big money hedge fund guys are buying and selling on a quarterly basis. What are they adding or taking out of their portfolio, along with a lot of other stuff. And the stock box is very new, which means that over the next few months, next year, 2 years, we are going to be adding a lot more stuff to the Edge Finder, as time goes on. And we have more data, more tabs, more information, more stocks to add. Once you buy into it, you get it for life, all updates free of charge. So Edge Finder and Stockbox, your choice, either of those two things, if you are the winner of trivia today. If you are the winner of trivia today. Now, I wish I had remembered to erase the actual wheel. We do have a big spinny wheel here in the office, but for whatever reason, it is the least erasable wheel of all time. I would need to clear out like an hour out of my schedule and take some pre-workout beforehand if I were actually going to try and have the energy to erase all the names on that wheel. I'd probably have a better chance of erasing things if I had steel wool instead of an eraser. So we are going to do what we did last time, which would be the less fun version, but slightly more practical version. In this case, much more practical version because I can't erase the other wheel. We're going to do the online wheel. So you get a trivia question correct first. If you were the first person to get it correct, you get your name on the wheel one time. In fact, let's go ahead and go over the rules. The rules are the same as last time. Listen very closely if you're going to play and participate in trivia. You must type out the entire answer. I do not want to see A, B, C, or D. You do not need to include A, B, C, or D. To keep it fair and to keep it from people spamming, you must type out the entire answer. Again, you do not have to include the letter associated with the correct answer if I'm asking. I have them listed A, B, C, or D. They are all multiple choice. You do not have to include A, B, C, or D, but you do need to type out the entire answer and the correct one, of course. And you only get your name up on the wheel one time. Everybody understand the rules? Let's get some yeses in the chat if you understand that you need to type out the entire answer and that you only get your name on the wheel one time. I want to get a gauge of how many people we got playing today. So we can only type out the answer. The letter doesn't count. Yes, you do not. Like if the answer A is right answer, we cannot type A. We can only type the answer of A. That is correct. Avalanche. If the correct answer is A, blank, you don't have to put A, but you do need to put the blank. You need to type the answer that way. This was a mistake on my part where I was just asking for A, B, C, or D, and people were just spamming the chat constantly, A, B, C, D, E, F, G, whatever, and nobody could really tell where it began, where it ended, who got the answer right first. It was kind of impossible. So you have to type out the entire answer. Hope you have fast fingers, and you will get your name up on the wheel. Now, again, I have the chat right in front of me. I see you, Samuel. I see you, Sia, Dread, Kevin, Darren, Avalanche, AWTTFX. I've got the chat here in front of me. I can only go off of what I see with my own eyes. I promise you, I have the chat in front of me. Saphir, you won last time, didn't you? Am I wrong in that? I know you got your name up on the wheel. I think Saphir won last time. Maybe I think he took the Edge Finder, so maybe he can get the stock box now too. Newton Isaac says, James, you remember? Yes, Saphir, I remember. I didn't win. Oops. Well, maybe today's the day. Anyway, I have the chat in front of me. I can only go off of what comes in on my chat. If your chat says something different, if your chat says that your name is above somebody else's, I cannot see your chat. I can only see my chat. So, with that out of the way, let's get on with some trading trivia. We only have 2 categories today. We still have 12 questions, but only 2 categories. We're going to start with Forex questions. Your marker is blue. I hope that stays. That's the second time that I've seen that. I hope that remains a running joke when I do trivia and I'm playing with this blue marker. What was I saying? Oh, yeah. 2 categories. Stockbox would complement my edge finder nicely. Yes, it would. You just have to get one question right. One question gets your name on the wheel. You get your name on the wheel just one time. So if you are the first person to get it a second time, I will skip past your name because your name is already on the wheel and I will take another person. Anyway, let's get into it. We have 2 categories, Forex trivia and then general world trivia. We are going to start with Forex trivia. It was not white and blue. The marker is blue. The marker is blue. All right. I have to call Bogdanov to win. I enjoy reading the chat, if you can't tell. All right. Let's go ahead and get started. First category, like I mentioned, is Forex. Get your typing fingers ready. Remember, I need the entire answer, not A, B, C, or D. I need the entire answer. Whoever I see gets it first, gets their name on the wheel. Question number 1 is, the Forex market operates for how many hours a day? Is it 12 hours, 24 hours, 36 hours, 48 hours? 12, 24, 36, or 48? 12 hours, 24 hours, 36 hours, or 48 hours a day. The Forex market. Looking at the chat, every single person has got the correct answer from what I see. Newton Isaacs said that it operates 36 hours a day. I would love to know where you are living at, where you get 36 hours in a day. Everybody said the correct answer, except for one person. Well, actually, a few people said 12 hours. Anyway, the first person to correctly say 24 hours was Jovo. Oh, I should show the answer. Of course, it is 24 hours in a day. Jovo hers. Jovo. Yep. Jovo hers. Congratulations. Your name is first up on the wheel. All right. Get ready, because we are going to go right into question number 2, which is, which country uses the currency known as the krone? Is it A, Germany, B, Sweden, C, Norway, or D, Iceland? Now, if I'm not mistaken, there are multiple countries that use the krone. However, only one on this list uses the krone. It's a little bit of a trick question. It's a little bit of a trick question because the answer for the krone is C, Norway. However, Iceland has a krona. A little bit different. A little bit different, but they are different nonetheless. The correct answer is Norway. Sweden has the Swiss franc. Germany just has the franc. I believe Germany's currency is the franc. Iceland has the Icelandic krona. but Norway uses the krone. And the first person that said Norway first was Showak. Showak, congratulations. Showak. Is that how you spelled it? Yes. Showak gets their name up on the wheel. Whoa. We are getting absolutely spammed with everybody. Ignore. Hey, Chandler, we've got major spam coming in right now. Tons of spam bots. I'm banning them as quick as I can. Everybody, please ignore. Jeez, this is a lot. Holy crap. Chandler, we need to ban this word. They're coming in so fast. I'm trying to ban these people as they're coming in. I apologize, everybody, but clearly we can't play while this is happening. This is crazy. This is crazy spam. Holy crap. And I'm trying to be careful not to ban any of you guys who are clearly not spamming. Chandler is working on banning the word. Yep, okay. It looks like it's slowed down a lot. They still have a few. I still have a few coming in. We might need to ban different versions of the word. Is it? No. It's almost done. It's almost done, everybody. Almost done. Jeez. We haven't got hit with some spam like that in a while. That was... All right. Come on. All right. I just banned that person, so those should... Okay. Okay. All right. So I think that we've at least got it taken care of to the point where we can keep going. That was, apologies, everybody. That happens sometimes when you're live streaming. But it seems like we've got it taken care of, at least for the most part. If another one pops in, it should be pretty easy to take care of. Hopefully we don't get spam like that again. But we are all good to go. All right, so we've got two names up on the wheel. We are on to question 3. Let's just go ahead and move right along after that. Next question is, well, did I get a message? No. Okay. Next question is, everybody, hopefully you are back and you are ready because we are moving right along. Question number 3. Which currency is referred to as the loonie in Forex? The loonie, kind of a nickname for this currency. Either A, the Canadian dollar, B, the Swedish krona, C, the New Zealand dollar, or D, the Australian dollar? Referred to as the loonie. One of these currencies is referred to as the loonie. Canadian dollar, Swedish krona, New Zealand dollar, Australian dollar. I see a lot of mixed answers here. I see New Zealand dollar, I see Canadian dollar, I see Australian dollar, and I see Swedish krona. Swedish krona. Oh, wow. This is interesting. So the correct answer is the Canadian dollar is often referred to as the loonie. However, the person who got it right first was Showak again. However, Showak, you already have your name on the wheel, so we're going to whoever typed in Canadian dollar second, and that would be Darren Heinard. Darren Heinard, congratulations. You are getting your name up on the wheel. Darren, how did you spell it? D-Y, nope, D-A-R-R-Y-N. Heinard, like that, H-A-Y-N-A-R-D. Yep, all right. Darren Heinard, congratulations. Name up on the wheel. All right, moving right along. Question number 4. Which type of order allows a trader to buy or sell at the current market price? Is that a limit order, a stop order, a market order, or a OCO order? If you are a trader on the regular, then you should know if you are going to buy or sell at the current market price, whatever the chart says right now, you are placing, of course, a market order. Market order is the correct answer. It looks like everybody got that right. Just about everybody got that right. And I hate to do this. But I feel like I have to be fair to my I've been very particular, very what's the word? I stress the rules a lot that I want you to type out the entire answer. And so I'm giving the correct answer to Avalanche, typed out market order. Sparkles, I'm sorry, you did say market. You are correct. However, I have been very specific in that I am looking for the entire Avalanche. The entire answer. Please type out the entire answer. Type out the entire answer. Market order is correct. Market order is correct. All right. That was question number 5. That was question number 5. That was question number 4. And this is question number 5. Here we go. Which of these is considered a major Forex trading session? Is it A, Tokyo, B, Berlin, C, Johannesburg, or D, Mumbai? Which of these is considered a major Forex trading session? Berlin, Johannesburg, Mumbai, or Tokyo? I don't know why I said it in that order. Pretty much everybody said the correct answer. The correct answer is, of course, Tokyo. Tokyo, the Asian session. Sparkles
Sparkles gets his redemption because Avalanche actually came in first this time. But Avalanche, you already have your name on the wheel. Sparkles right behind you. No harm, no foul. Sparkles gets your name up on the wheel. Congratulations. We have 5 people on the wheel. We've got plenty more game to play. Moving right along to question number 6. Get ready for, oh, let me scroll back down. Let me scroll back down. All right. Moving right along to question number 6, and I believe the final in the Forex category. Here we go. Nope. Psych. We are already moving on to our world category. So, get ready. We have new category coming up. Question number 6. What is the largest country in the world by land area? Is it A, America, B, Canada, C, Russia, or D, China? Little general trivia for you. Not too hard of a question, I don't think. I think this is fairly common knowledge, although I am seeing a lot of mixed answers in the chat. I see mostly the correct answer. I see Russia, I see Canada, I see America, I see China, a little bit of everything, but most people said Russia. Sparkles was fastest again. However, right behind them, we have Tom. Tom, Random Stuff 8. Congratulations. Russia is the largest country in the world. Tom 8. Moving right along, we're about to have a very similar question. I can see you, Anthony AB. However, I can only look at my chat. Please understand that if your chat says something different than what my chat says, I am not looking at your computer screen. I can only see mine. So I apologize if yours says something else. I promise I'm going off the top name on my side of things. And if somebody gets it quicker, because they are sitting on top of a cell tower at the moment, you only get your name on the wheel one time. So I'm trying to make it fair and give everybody a chance. So as long as you're fast with your fingers and you know the answer, you should have a good shot at getting your name on the wheel. Now, similar question. Are you ready? We're going the opposite direction. What is the smallest country in the world by land area? The smallest country. Is it A, Monaco, B, Vatican City, C, I don't even know how to pronounce that, or D, San Marino. Nauru. Sounded like a dog. I have been to this country before. It's interesting. It's very interesting because the smallest country, is not Russia. It is, in fact, the Vatican City in Rome. There is a country inside of Rome. Sparkles, quick with it again. Name is already on the wheel. Showhawk was the second person. I see Sparkles was first with Vatican City, Morocco, Nauru, Morocco, San Marino, Nauru. Showhawk
with Vatican City, who again already has their name on the wheel. Ash, Batvian City. I know, don't shoot the messenger. He was typing as quick as he could. Vatican City. He knew the answer. He knew the correct answer. Ash Evs. He typed out the whole thing. He knew the correct answer. Let's not be too crazy. Ash Evs, congratulations. You got your name up on the wheel. I've been to the Vatican City. It's very interesting because it's basically just it's like a couple buildings, basically. It's like I don't even know how many square miles. 2 square miles. It's tiny. It's where the Pope lives, if you didn't know. And it is technically its own country. It's very interesting. No problem, Ash. It was clear that you knew the answer and that you were typing as fast as you could. And you typed the entire thing. So I will not count off for one little letter mistake. All right, moving right along. We are over halfway through now. The next question is, which country has the most official languages? Which country has the most official languages? Now, Chandler will back me up on this one. I did a lot of double checking research to make sure that I got this one correct. I used ChatGPT to help me come up with a lot of these questions, asking for Forex trivia and other trivia questions. And I kind of pick and choose which ones I think would be good for the stream. And I triple checked this one. Because ChatGPT actually had it wrong initially, and I called out ChatGPT and it apologized to me. A, Switzerland, B, India, C, South Africa, or D, Bolivia. The correct answer is, in fact, Bolivia. Bolivia is recognized with having the most official languages. And in fact, who has the most official languages in the world? Bolivia is recognized with 37 languages in their constitution. Their constitution recognizes 37 different languages as official languages to Bolivia, which is crazy. That is so many languages, 37 different languages being spoken in Bolivia. If I scroll to the top, the first person who said Bolivia was, see a lot of India, I see South Africa, India, Switzerland, India, South Africa. Oh my goodness. Who said Bolivia? Showhawk said Bolivia. There we go. Other than Showhawk, let me double check. I didn't miss somebody because this was a lot of people. India, South Africa. Everybody thought it was India or South Africa. And they do have a lot, but not 37. Yep, Showhawk was first. Right under them was Wanga. Congratulations. Got your name up on the wheel. 37 languages in Bolivia. And if you don't believe me, I just Googled it and showed you. Oops, sorry. All right. Moving on. Next question. Get ready. Let me scroll to the bottom of the chat. All right. What was the chat? ChatGPT said South Africa. And I thought that was surprising. Not that they don't speak multiple languages in South Africa, but my guess would have been India, just because of how many people live there. And so then I Googled it, and I saw Bolivia. So, as I just showed you, by the way, Google says Bolivia. I'm not going to argue with Google. So I called ChatGPT out, and we had an interesting conversation, me and Miss GPT. All right, moving along. Next question, coming in quick. What is the second tallest mountain in the world? Is it A, K2, B, Mount Everest, C, Mount Kilimanjaro, or D, Mount Blanc? I wanted to do the second tallest because I think everybody knows the tallest. Mount Everest is, of course, the tallest. I think that's pretty common knowledge. But do you know the second tallest mountain in the world? The second tallest mountain in the world is known as K2. I don't know why it's called that. A lot of people got that right, including some people whose name is already on the wheel, but Liban Mohammed, oops, I was showing that Wanga answer on the screen the whole time. Liban Mohammed Abdi, congratulations. K2 is correct. You are getting your name on the wheel. Liban, your name is on the wheel. So how many names is that now? 1, 2, 3, 4, 5, 6, 7, 8, 9. That means that we have 3 questions to go. 3 more questions to go. And then we are going to spin the wheel, and you will have your choice of Edge Finder or Stockbox. And of course, if you don't win and you would love to get one of those fabulous prices for yourself, we are doing a 45% off sale, Cyber Monday, all week long. It's Cyber Week. Cyber Week sale. Safir, I got you, buddy. I got you. Cyber Week sale, 45% off. Edge Finder, Stockbox, Discord services. It's the biggest sale that we do. After this week is over, you had Black Friday to get it. We extended it for one more week for all of you people who wanted a little extra time. 45% off right now, Cyber Week. After this week, though, back to normal price. Back to normal price. I don't know when the next sale is going to be. I don't make those decisions. And I can promise you it's not going to be 45% off. The next sale will not be 45% off, and it won't be for I don't know when. So get it while you can at this price. 3 more questions to go. Let's get into it. Next question is, which of these countries is not part of Scandinavia? A, Norway, B, Denmark, C, Sweden, D, Finland. Scandinavia. This is another one that I triple checked with Google because they are all considered Nordic countries, I believe. They're all considered Nordic countries, but Scandinavia traditionally refers to 3 different countries that are right next to each other, grouped together. Scandinavia, which of these countries is not a part of those 3 countries referred to as Scandinavia? The correct answer is, in fact, Finland. And most people got that right. Most people got that right. Who said Finland first? I have Sean C. Congratulations, Sean C. That's getting his name up on the wheel. Sean C.
Remember, if your name is on the wheel, stick around because I'm going to spin it. And if you aren't here to claim your prize, we're going to have to give it to somebody else who can claim a prize. We need to make sure we got the right person. Congratulations, Sean C. Finland is correct. 2 more questions to go. Here we go. Which country is the headquarters of the I don't know what I wrote here. Which country is the United Nations headquarters located? Which country is the headquarters of the United Nations located? I don't know why I worded that so poorly. I apologize for that, but it should make sense nonetheless. Which country has the headquarters of the United Nations? This is another one that surprised me. I assumed, let me make sure people are getting their answers in. Oop. I worded this question so poorly. I apologize, everybody, because none of these are even countries. These are cities. I don't know what I was thinking when I wrote out this question, but it should make sense nonetheless. I see people got the correct answer in here. This surprised me because I would have assumed that the United Nations headquarters was in Europe. It is not. It is, in fact, in New York City. New York City is the home of the headquarters to the United Nations. I knew that the United Nations had a building in New York. I've seen it, but I did not realize that that was the official headquarters. So the first person to type out New York City was Frankie. Congratulations, Frankie. Frankie gets his name up on the wheel with 1 question left. With 1 question left, Nick will be back right after this. Jerome Powell will be speaking soon. We will watch it here. Don't you worry, guys. But we're doing a little bit of trivia first. Last question. Last question. I mentioned this already. 45% off, Cyber Week sale. Name 1 person you can talk to right now about our 40%, right now 45% off sale on the Edgefinder, Stockbox, Pulver Alerts, and VIP Discord. Same question we closed with last time. Do you remember the answer? Do you remember the answers? I'm looking for one of the sales reps. Everybody's saying the same thing. I'm looking for one of our sales reps. Oh, no. Why would you say country when all answers are cities? Because I'm a dummy, unfortunately, and I messed up that question. But y'all got it. Sparkles had the right answer. But Sparkles' name is already on the wheel. Oh, here we go. Saphir got it right. And he was actually one of the first people to answer as well. Name 1 person you can talk to right now about our 40% off sale on the Edgefinder, Stockbox, Pulver Alerts, or VIP Discord. I was looking for Hallie or Emily or Drew. One of the first people to answer. I did not notice this at first, but towards the top of the list, if you take a look, congratulations, Saphir. He put down Drew, and that is absolutely correct. You can speak to Drew right now about our sale going on. Saphir, you are getting your name up on the wheel. We have our 12 names. It is time to spin the wheel.
The winner is getting their choice of Edgefinder or Stockbox. Hopefully you are here to claim it. Here we go. In 3, 2, 1. The winner of today's giveaway is Tom 8. Tom 8, congratulations. Of our trivia giveaway. Tom asks, can we choose VIP member? I don't see why not. Nick, what do you have to say about that?
Absolutely, you can, Tom. Congrats, Tom, and thanks everybody for playing. And special thanks to our wonderful trivia host, Mr. James. Trivia is it wouldn't be the same without James, guys. The way he breaks down the law of really making sure you guys follow the rules, I love it, because leave it up to the crowd to break the rules.
They do a pretty good job, I must say. They do a pretty good job, and I try and make it easy for the most part. One word answers for the most part, or a name of something. But yeah, for the most part, we do a pretty good job here.
Yeah, that was awesome. Well, congrats, Tom. The way to claim your prize, we can totally do VIP membership for you. If you would like VIP membership, Tom, all you got to do is shoot us an email with something that pertains to your name in the email, like so we know it's you. Just email our support email. It's support@a1trading.com. So support@a1trading.com. Just shoot us an email. Let us know you won, and we'll get you sorted out with a free membership for winning today's trivia. And James, again, thanks for doing that. That was awesome.
Yep. No problem.
All right. Well, I guess we're going to move on now towards our final stretch here with Jerome Powell's speech coming up here in just about 20 minutes or so. And again, just want to reiterate, everybody who just played trivia, I hope that was fun. We love doing those. Seems like a crowd favorite. We get a good, I mean, a lot of you guys love playing trivia. So we'll do more trivia in the future. We've been doing that pretty much all month long, which has been really fun. James has been putting those together for us, and love to see it. Also, if you didn't win trivia, as James mentioned before, this is the last call to get our Cyber Monday sale discounts. Everything is 45% off for people who are watching the stream right now. And if you have any questions, if you didn't win, you can still be a winner because you're going to get the best possible price of the entire year on anything that you want. So if you want a copy of the Edge Finder or a stock box, it's probably the last time we're going to play trivia for a little bit here. But if you'd like to pick up a copy on those low prices, we'll drop the link to send a direct message to our support line where they can give you that discount information. So if you just want the discount information, just send us a message here and someone from our team will give you the discount code and send you the link to pick up a copy of the Edge Finder, Stock Box, or VIP for 45% off. So thanks everybody for playing. Okay, so we have we have about 20 minutes here before Jerome Powell is set to speak. I don't actually know what the event is that he's at. Let's see. Due to participate in a moderated discussion at the New York Times Deal Book Summit, audience questions are expected. So anytime you get Jerome Powell speaking, it's potentially market moving. But what's especially market moving is this little line right here. Think about this. Audience questions expected means that something could get thrown at him. And what I love about these is when people will ask Jerome Powell a off the beaten path question for the purpose of trying to get him to give us a little bit more insight. People are wondering, hey, are you guys going to cut rates or what? And Jerome Powell, who I think I would do the exact same thing if I was in his role. He does a great job at giving just enough of an answer, but not oversharing, which is just a smart politician thing to do. And I actually, if it sounds like I'm speaking negative of Jerome Powell, I actually like Jerome Powell. I think he's actually done a pretty good job, given a very difficult couple of years. I mean, imagine being in charge of the global's basically bank system. when the world fell apart during COVID and you had Donald Trump part 1, now you're going to have Donald Trump part 2. You've had inflation problems. So yeah, I mean, he's had a tough job. So I actually think given the circumstance with inflation falling now and interest rates coming down and the economy seemingly pretty strong right now, yeah, I think the Fed has actually done a decent job so far. We'll see if that can stay the course. The economy of the world is very difficult to control. Things can break. So the question now that the market's probably wondering is, are we going to get those rate cuts? And if so, are we going to get them soon? Or are we going to get them, in 2026? Right now, expectations are for the Fed to cut rates in December. That seems to be the consensus now, 75.5%. But why this event today could be really volatile is if we get inclinations that the Fed's not really okay with where we are and that rate cuts might not happen, it could really shift the strength in the dollar and move things around. The stock market could get a little skittish, but we'll see. I mean, we'll have to hear what he has to say. He comes on apparently in 15 minutes, and our producers behind the scenes are prepping that call so that we can, or that live stream, so that we can react to it here. So you're in the right place. If you're hanging out with us live, we are going to have the call on the screen for you, so don't go anywhere. How do you focus over so many things, Nick? How do you monitor it? I assume you're talking about fundamentals, and I know this sounds like a sales plug, but genuinely, I track a lot of stuff just by having the Edge Finder automatically do it. So the Edge Finder is tracking, things like seasonality and GDP numbers and inflation statistics and unemployment rate. I guess I could do a lot of that on the top of my head, but it would be very laborious to try and remember everything off the top of my head. So genuinely speaking, automation tools like the Edge Finder are a must for people who want to be a fundamentalist. Whether it be the Edge Finder or something else, you just need some sort of tool that can categorically track a lot of this stuff or display a lot of this stuff so that you're not overwhelmed. But in terms of monitoring it, the short answer is I use the Edge Finder and I couldn't do it all in my head. So that's why we built it. I mean, that's genuinely why it was built, was because there's too much economic data to try and keep off the top of your head. It's just so much. Unless you are staring at this stuff, 12 hours a day, it's really hard to remember it all. So having a tool that, automatically pulls it all in and shows it in one spot is absolutely critical to aspiring fundamentalists. And I know that sounds like a sales plug, and that is a sales plug. And I'm not going to lie, that's straight up why you should buy the Edge Finder. But it is genuinely what I use it for. It's a utility. It puts all of it in one place for me. Earlier, we had services PMI. I've discussed this a couple times. Came in weak, came in much lighter than expected. Stock market is up today, but, be careful with this, because with Powell about to speak, this thing could go much further down, or it could rip through the highs. We'll have to see. The question you got to ask yourself right now, and this is a good experiment. If you are a fundamental, actually, can we do just a quick question for everybody in the audience? I'm going to look at the chat and see what you guys say. Type yes or no to this. Would you consider yourself an aspiring fundamental analyst, a macro trader, a fundamentalist? If you would consider yourself one of those things, whether new to it, been doing it for 10 years, or just trying to get more understanding of it, if any of that applies to you, type yes in the chat. I'm just curious. I mean, I know some people are saying both. Yes, I know. I'm just saying if you use fundamentals at all in your trading, just type yes in the chat. I'm curious. Because I've got a thought question for you. And maybe you guys can use this as a rhetorical question, or if you'd like to share your answer in the chat, please feel free to. A lot of people are tuning in because they probably would like to see, Jerome Powell speak and maybe also my commentary on it. But I want to ask you to give yourself a moment to think about this question I'm about to ask you. What are you listening for in Jerome Powell's upcoming commentary? The reason I ask you as the audience member to think about this is because a lot of times it's like, oh, I'm going to tune in, see what Nick's saying. Well, do this thought experiment for a second. What are you listening for, right? Instead of like hoping to hear a synopsis or a breakdown, what are you listening for in this commentary from Powell? I want to see what people are thinking about. Let's have a discussion before he comes on, because once he comes on, I'm going to get quiet and I'm going to listen to it. But let me ask you guys, what are you listening for in Powell's commentary? And then I'll share at least what I'm listening to as well. Listening to his view of the labor data. Okay, very fair. Expecting more rate cuts. A quarter percentage point off. Rate cut possibility. Rate cut expectations, economy moving forward, and also any dovish/hawkish stance. Okay, great. 50-point rate cut, rate cut possibilities. Okay, great. Yeah, I mean, I think that's pretty fair about what I'm looking for too. In general, what I would say is the Fed. So if I'm thinking about this, right? In recent commentary, there's been a little bit more dovish commentary from Fed officials, not just Powell. But my question, my curiosity would be, so in recent months from the Fed side of things, we've seen a interesting kind of dual mandate concern. They're watching inflation, which has ticked up a little bit here, but they're also watching the labor market. Since we've last really heard from Powell, have things changed to really be more fixated on one over the other? Are we now focused a little bit more on jobs data, or are we focused a little bit more on inflation? The reason I think that that's so critical is because that will tell us, with CPI and NFP around the corner, what should we be listening to the most? Is it more jobs focused right now, or is it more inflation focused? The reason I say that is because the Fed has this sort of dual mandate where they're trying to keep both in line. And in recent months, it seems like they've really kind of been like, okay, we're watching both. We don't really have a strong, whereas a year ago, we were all about, oh my gosh, inflation needs to come down. It's an emergency. It needs to come down, down, down. It was all about inflation, and the labor market was a second place kind of thing. My thing I'm listening for with Powell is, should we be more jobs focused, or should we be more inflation focused? Because I kind of still feel like we're somewhere stuck in the middle. Both matter, and the Fed is kind of just waiting for something to break. The other question I have is, the Fed going to stay data dependent, or is it going to truly wait for something to break before it gets more serious about rate cuts? Right? Because now it seems like we've hit the brakes on rate cuts. Yes, we're probably going to get, possibly going to get a cut in December, right? A 25 basis point cut. But after that, I don't know how likely rate cuts are. Look at the stock market. The stock market's at an all-time high. And I know that that's not necessarily a indicator of whether the Fed cuts or not, right? Because the Fed does not look at in a perfect world, the Fed doesn't look at the stock market as a determinant of whether or not to cut rates. The Fed looks at, again, those two things that we just discussed, labor data and inflation. Supposedly, that's like their primary things. So my question is the Fed going to wait for one of those two things to break before they get more adamant about rate cuts? And I think that that's like kind of what you have to do. You have to wait for something to show signs of souring, because what are you going to do? You're going to cut rates too soon? Well, then suddenly inflation is going to start potentially rising again, because if you cut rates too soon, everybody's going to get job hires going, and they're going to get wage increases, which could cause an uptick in inflation, which we really don't need that to come back right now. But if you wait too long to cut rates, then what happens? Well, people might start getting laid off if the consumer starts to hurt, etc. So my kind of opinion right now is that the Fed is going to just do nothing, and it's going to wait, and it's going to see what happens the next few months. If the labor data comes in real solid this Friday, I don't know that the Fed's going to really look at cutting rates this month. There's a possibility that if you get a rock solid NFP report this week, that they say, look, we don't need to cut rates into that. So we'll see. I mean, if you get another if you get a weak jobs print, like we got last time, well, you had a weak jobs ad, but it was arguably there was some skew there from the hurricane. But if we take a look at unemployment rate, right? Unemployment rate. This is weird. Hold on. That looks like an error. I'm going to send this to our support line. Hold on, guys. Okay. So anyways, just wanted to highlight that. That's kind of what's top of mind here for me. Stock market's just taking a little bit of a breather here on the recent move up. I mean, granted, this is hardly anything, but just a move lower on the hourly candle, perhaps ahead of what Powell has to say. You never know. I mean, the thing is, this might just be the market saying, okay, there's a risk with Powell speaking. He could come out swinging a little bit. Maybe, maybe not. Still got my watch list going on. I'm looking at Bitcoin, looking for a bigger drop on Bitcoin. If that happens, then great. If not, then no trades for me. Oil looked like it fell flat on its face this morning, right? We had a good start, then fell apart. Was looking for something like this, but no setup there just yet. By the way, guys, we've got 546 people watching between all the different platforms that we're streaming to right now. If you could do me a really big favor and hit the thumbs up button on the stream, or the like button, or the heart button, whichever social you're on, I'd really appreciate it. It would help with the algorithms of social media to share this with other people. So I appreciate that quite a bit. We've got a couple minutes to go before Powell is set to speak and do his thing. Have you guys seen that that TikTok or Instagram reel or whatever? That's Powell walks out and he says good afternoon and the market like tanks. I've seen that like 7,000 times, but it still hits. You never know when you never know when that meme is going to turn into real life. Maybe it's going to happen today. I don't know. Somebody said long gold. I mean, maybe not. I don't really, with gold, I don't like the technical setup at this moment. I mean, if you look at this daily chart, we just keep it really simple. It's definitely still in a strong uptrend on the longer term. Like if you took a look at the weekly chart, still in an uptrend, which is cool. But from a daily chart perspective, we had this really nice higher low concept going on. And we failed out here. Kind of this ugly middle ground. So I just like the idea of waiting for a breakout here. Or if we get a bigger dip in gold, I could maybe look for some like longer term buys, especially if Edgefinder is giving me a bullish reading on gold. I think it's a +4 right now. Yeah, it's a +4. So I'd like to see a 5 or greater. What could give us a 5 or greater? Well, keep an eye on NFP. On Friday, if you get, if unemployment rate goes up, then that would be positive for gold, because that would be likely weaker for the dollar. But we'll see. We don't know what's going to happen with NFP just yet. But I'll probably do some more breakdown on this for NFP. I do a prep video every NFP event. But long story short, if NFP is really solid, then the dollar's probably going to go up, right? But if you flip that around, dollar would go down, and that could be bullish for gold, right? So that's why, generally speaking, what weakens the dollar, usually weaker economic reads, and weaker economic reads boosts gold in relation to that, simply because usually a weaker dollar is stronger for gold, right? And gold's been muted a little bit here recently because, we've had this really, really strong move up, but then the dollar strength recently has put a little bit of a cap on the gold bullishness. So we'll see. I mean, if you get a weak NFP report this week, it could really change the trajectory there a little bit for the dollar index, which could be, again, a bit of a bit of a change in the wind, if you will. Do you have any plans on having a mobile app for Edgefinder Pro? Yes, we already have one. If you have the Edgefinder, go to help and go to Edgefinder mobile access. There it is. We've already got a mobile version of the Edgefinder available for Edgefinder customers. If you already have the Edgefinder, you can do that. You can also get the Edgefinder Smart Alerts, which, if you do not have the Smart Alerts, it notifies you of changes in the commitment of traders data. It notifies you of changes in top setups that are interesting to you. So you got lots. Okay, guys, I think we have Powell stepping onto the stand, so we'll switch over here.
We talk about a lot of consequential people who come on this stage.
Oh, it's the CNBC guy.
In truth, when it comes to the global economy, this one man.
How's the volume, guys? Let us know. Producer's streaming it from his computer.
Now for 6 years under both Trump.
Raise volume. Okay, if needed, Chandler, you can send me the link, and I can pull up the video, and I can do the volume booster. If you might have one, I'm not sure.
That, of course, came with that. Fair to say that the fears of a recession never happened. So far, at least. And he has managed to pilot the economy through what a lot of people thought was an impossible idea, which is this idea of a soft landing. He has been praised and criticized, often in the same day. And now the very idea of the Fed's independence is in question politically in Washington, which we'll talk about. We could not be more pleased to have you here with us. So thank you.
Thanks. It's great to be here, Andrew. Thank you.
Most of the interviews that you do, people talk directly, specifically, and stark about the economy. People actually rarely, I have found, try to find out about you and who you are and how this all happened and how you feel about all of this. And so before we get into anything economic, I just want to get personal with you, because as I said, there's a lot of powerful people in the world. A lot of them come on this stage. There are presidents, there are CEOs, there are billionaires who are powerful, but in many ways, uniquely, you have a power that others do not. And I'm so very curious, just as a human, how that power sits with you.
Well, first of all, it's great to be here. Thanks for having me. I guess I would say that I really love the work that I do. And that's the main thing. I like my job. I love my job. It's a great honor to do it. The work is incredibly interesting. For everybody, people and companies. And so I get enormous satisfaction about that. And there's a fair amount of responsibility, but you think about people who run large organizations, it probably feels very much the same.
Even when you can
let me know
just change the dial and it changes everything.
So I've been at the Fed for almost 13 years, and I've been chair for 6.5 years, and I'm kind of used to the work that we do and the way we do it and all that. And so I don't experience it as difficult and unpleasant, although it can certainly be that. But I just feel I feel lucky to do it, and I basically enjoy the work a great deal.
Okay, so explain. Let's just go back in time, though, just to explain a little bit to everybody about how this happened. And it didn't just happen to you. It's something that you wanted. You graduated from Princeton. After Princeton, by the way, you went to Europe, from what I've read now. You have a guitar.
Yeah.
You were playing music in Paris, including the song "I'm So Lonesome I Could Cry." Could you still play that song?
That's not a hard song to play. I could play that song. I can't sing it very well.
Did you make
anymore.
money doing this?
No, never. People pay me to stop, actually.
And then you come back to the States and you become a lawyer. Then you go to Dillon Reed.
Yeah.
And when you're at Dillon Reed, which was an investment bank, just to date the world here, no longer with us, it's been merged into a whole bunch of other places since then. You had a boss named Nicholas Brady, who later on, by the way, becomes the Treasury Secretary. But I'm curious, you're sitting there at this bank, and it was at this bank that you knew that you wanted to do something in public service.
Actually, when I was in college, I'm not one of those very mature kids who came out with a plan. I really had one thought. I'd grown up in Washington, D.C. My family was not part of the government and those elite circles, but I had this thought that I wanted to have a life which was mostly in the private sector, but then to do public service from time to time. And I had people like Cyrus Vance and George Shultz, who some of you may remember, in mind. People like that who had great private sector careers. That was the only idea that I had. And so one day at Dillon Reed, I forced myself to get up and walk up the stairs and knock on Nick Brady's giant office, which seemed to me like the Palace of Versailles at the time, given I was working in a broom closet at the time, and say, Nick, if you do anything in Washington, he's a former U.S. Senator. He was close to former President George H.W. Bush. If you do anything in Washington, I'd love to staff you. And he said, that's great, thanks. He asked his assistant to write my name down, and I went back to my broom closet, thinking nothing would happen. But a couple months later, I get a call from Denise Emmett, who says, please come up. And I worked on a project with Nick Brady in Washington. We became friends and colleagues. He becomes Secretary of the Treasury, eventually invites me to go to Washington as an assistant secretary. And honest to God, the point of the story is that little bit of initiative to force myself to get up and very fearfully knock on his door, thinking he might take it the wrong way. Maybe I wanted to leave the firm or something. And that little bit of initiative, without that, I would not be sitting here. There's no way I'd be sitting here. That is what opened the door to me to do public service at a high level that I hadn't really earned or deserved. So
did you ever think, you don't have a PhD?
No.
So did you ever think that you wanted to go to the Fed?
So when I worked at Treasury for 3 years. And I really liked the people at the Fed, people like Don Cohn and Alan Greenspan and many others. I liked it, but I never thought that's where I would wind up. I thought I'd love to come back and serve again in some kind of economic capacity, but I never thought I would be at the Fed. So then what happened was I did a study of the debt ceiling during the 2010 debt ceiling crisis, and I briefed really the Republican House and Senate caucuses and convinced them that they had to raise the debt ceiling, that it wasn't a fake thing, that there really would be a default. And the Obama administration was extremely grateful to me for doing that and nominated me to the Fed. And I've loved it really since I started there.
So you never had the sense, there's a guy you probably know who has a sense that your job, he says, it's the greatest job in government. You show up to the office once a month and you say, let's flip a coin. And everybody talks about you like you're a god.
Yeah.
That is President-elect Trump.
I know, yeah. So he's right. The part about it being the greatest job, it might well be right. I have to say I do, as I mentioned, I do love the work, and it's a special place to be surrounded by people who are so dedicated and to know that your work really matters for people. It's a very special honor to do that work.
Did you laugh when you heard that?
I thought he's partly right there but he's not right about the come to work, once every month.
Just the flipping of the coin part?
Yeah, that part it's not like that. Not like that.
Let me ask you this, because it is the sort of political question that I think is in the mix right now, which is, you have talked a lot about the importance of the independence of the Federal Reserve. This is a group of people that I know that you are highly committed to. And there are now genuine questions, because the president-elect has been quite outspoken about it, just publicly, about the idea that maybe the Federal Reserve should come under more control and have the White House should have more influence over it. What do you think when you hear that?
Well, I think that what is the case for the Fed being independent? What does independent mean? It basically means that we can make our decisions without them being reversed, other than by Congress, which created it. We're a creature of Congress. We're not in the Constitution. We're a creature of statute. So that's what independent means. And that gives us the ability to make these decisions for the benefit of all Americans at all times, not for any particular political party or political outcome. We're supposed to achieve maximum employment and price stability for the benefit of all Americans and keep out of politics completely. I think there is very, very broad support for that set of ideas in Congress, in both political parties, on both sides of the hill. And that's what really matters. It's the law of the land. And I'm not concerned that there's some risk that we would lose our statutory independence, because I do think that those set of ideas are strongly believed by people. And
but do you fear? I mean, he has talked openly about firing you, which is something technically he's not supposed to be able to do.
So I never discuss anything that elected officials say. So I'm going to disappoint you here. I just know, this is our focus. The U.S. economy is in very good shape right now. It's in remarkably good shape. We are the sort of envy of other large economies around the world. And I want to do everything I can to keep it there during the rest of my term. And I feel very good about where the economy is and where monetary policy is.
We're going to go there in a moment, and I'm going to try a slightly different approach with you, which is this. Because this guy's not elected yet, or even confirmed. So the new Treasury Secretary, likely to be, if he gets confirmed, Scott Bessent, who I think you know, has made this is what he told Barron's. He said it publicly. He said, quote, and this is an effort to undermine your power. He said, you could do the earliest Fed nomination and create a shadow Fed chair. And based on the concept of forward guidance, effectively the idea of what people expect in the future, no one is really going to care what Jerome Powell has to say anymore. What do you think the impact of something like that would be? Do you believe that that's even a possibility in the world?
So let me say, I don't think that's on the table at all. There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships, for example, with the Council of Economic Advisors, but most importantly with the Treasury Department. The Treasury Secretary and the Fed Chair have had breakfast or lunch together every week for 75 years. And not more than that, the institutions have to, there's got to be trust and mutual respect and acknowledgement of the different authorities and boundaries that we have, but a very constructive relationship, because, in times of crisis, we work much more together under the law. Nonetheless, it's a very important relationship, and I'm confident that we'll have the same kinds of relationships with the incoming administration.
That first lunch, though, is going to be interesting.
It's going to be fine.
Have you guys talked?
I don't know him. I don't know him well, but I am confident that I will have the same kind of relationship with him once he's confirmed as I've had with other Treasury secretaries.
Okay, let me ask you a slightly different question that's in the same category, but actually very different, about just influence from the White House, because I think the public, it would help people to understand it. So before Paul Volcker passed away, I went to go visit him in his apartment on the Upper East Side. This is back in 2018. I was writing a story about him, and he had just written a book, and he had talked about and told me a story about how President Ronald Reagan and his chief of staff back then, James Baker, had asked him to come to the Oval Office. This is in 1984. And he says, quote, Reagan didn't say a word. Instead, Baker delivered a message. The president is ordering you not to raise interest rates before the election. Now, Volcker wasn't planning to raise interest rates, and he said that he was stunned by all of this. And then he went on to say that he later surmised that the library location had been chosen, quote, because unlike the Oval Office, it probably lacked a taping system. Has anything like that ever happened to you?
Basically, no. No, I mean, you remember in the prior administration, there was a lot of public things that happened, and the things that happened in private were exactly the same. The president said the same things to me privately as he said publicly. I said the same things privately to the president as I said publicly. So all of that it was in the prior administration, but nothing like, I know I'm very familiar with that story and with that book, by the way, but nothing exactly like that happened.
The other question that I had just is, this is a government question, which is, we've been talking about Doge and things like that today. The Fed is self-funded, my understanding, but it does have congressional oversight. As Congress thinks about trying to figure out how to deal with the debt and the deficits and trying to make things more efficient, do you think that the Fed could come into or come under some kind of Doge-like program?
You know, part of our independence is that we are self-funded and we have, you know, the ability to make our own decisions about hiring people and that kind of thing. So we've got strong legal independence. We do try to run the Fed respectfully, and you know, we know these are taxpayer dollars, even though we essentially have a large balance sheet and our assets earn more than our liabilities, so we're earning a spread, and we give those profits every year to the Treasury Department. But we also use some of it to pay for the Fed. But we try to be good, you know, stewards of the public's money as well.
You know, one of the things that I think is fascinating about you, and differs from many of the other predecessors of yours, is you speak very plainly and very openly and transparently. Alan Greenspan spoke somewhat obtusely. There was always this sort of communication divide in some ways. And I'm so curious how you think about that, which is this idea of communicating, and some people, by the way, would argue over-communicating in terms of the way the Fed approaches its job today. Sort of post-financial crisis, there really was a move to try to tell the public what was going to happen, to try to tell everybody where everybody thought the Fed was about to go, and whether you think long-term that has helped you, or long-term whether you think that has to be rethought.
You know, so go back 50 years, and central banks were mysterious, and you know, there was a lot of lore that was the right thing to be. Then there was a bunch of academic research by people like Alan Blinder and others, which came to the view, which is, I think, clearly correct, that if the market and the public understand how you will react to incoming data, then they'll do your work for you. You know, so today, when some economic event happens, markets adjust immediately, long before we take any policy action. So that's the whole modern theory, is to be as transparent as possible. And we've greatly increased transparency. People do make the argument that, you know, enough transparency, maybe it's too much. But I think generally the overall trend over 40 years of history has been very constructive. And also, you know, we're a public entity. We shouldn't be mysterious. We should be telling people what we're doing and why. In terms of speaking plainly, I think it's important that the interested public be able to understand what we're doing. And so it's important that we explain it in a way that doesn't include a lot of jargon. Jargon is really important when you're talking to other central bankers or other economists. But when you talk to the public and use jargon, you just make people angry, because it excludes people.
But do you think it makes it harder for you to make a snap decision, if a snap decision is necessary, because the markets have already moved on this expectation of where they think you're supposed to be, or where they think you're going?
That hasn't happened. I mean, we've moved very, very quickly, both up and down with rates when it became appropriate to do so. I mean, we cut rates. We were the first central bank in the world to cut rates to zero during the pandemic, and we raised rates during the inflation faster than the Fed ever has.
So here's a question about where we are now in this economy. And I want to get into maybe where the economy may go, but the expectation is that you're going to cut rates. But I'm curious about why that is the expectation, insofar as we're still in a moment where it appears that inflation looks a little stickier than we thought it did, and the economy is stronger in many ways than had been expected. And so the question is, what is the cost, if you will, of waiting?
Right. So let me take a step back on that and just say the background is that, as I mentioned, the U.S. economy is doing very well. We're in a very good place with the economy. We're growing at around 2.5%. Inflation has come down. Headline inflation was as high as 7.2 or so. Now it's at 2.3%. And unemployment's at 4.1%, which is a little higher than it was a couple of years ago, but it's still it's a very, very low level. And, we're not quite there on inflation, but we're still making progress. So the backstory is that the U.S. economy is in very good shape, and there's no reason for that not to continue. So we raised rates to between 5.25 and 5.5, and we held them there for 14 months. And other central banks around the world had already started cutting. We were the last major central bank to cut. And we're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
Tell me, I'm actually very curious about this, just how you think about it. Occasionally when you either get it wrong or it's not where you think it was going to go. As you just said, you had a different view in September than you do now. Obviously things change, but what was it in September that surprised you? And if you could go back in time, do you think that you would have known the difference?
Well, in September, what we saw was the unemployment rate had moved up close to a full percentage point. And again, we'd held on long after other major central banks had cut. And I mean, more broadly, there are two risks, right? There's the risk that we move too quickly and undermine the progress we've made on inflation. And there's the risk that we move too slowly and unnecessarily undermine the labor market. And we're trying to be in that middle place and get it just right so that we continue to get inflation coming down. We keep policy at a restrictive level, but at a less restrictive level over time. That's what we're trying to do. I would say in September, it was time for us to cut because it was time, but also because I wanted to send, and we wanted to send a strong signal that we were going to support the labor market if it continued to weaken. What happened instead was, in the couple of months after that, we got some data revisions which strongly suggested that the economy is even stronger than we thought. So the picture is actually stronger than it was then.
How do you think we, as the public, should think about when we get these labor numbers, which, by the way, seem to get revised all the time? Do we have a counting problem? No, and I ask it really, because oftentimes we'll see a number, and then you'll find out, a month later that not only was there a new number, but actually the old number was off by more than you could expect. Do you think there's a better way?
So the way it works is that the numbers that people see from the household survey is the unemployment rate, and then the payroll jobs, that's an economic establishment survey. They're surveys, so you're not counting people nationwide. You're doing a sophisticated as you can survey, and you're projecting that out to the nation. What's happened lately is that survey response levels have come down, and that has probably meant for smaller groups of people, and that means there's more volatility. There's been more volatility in the revision. So you've seen a lot of months in which a job number comes in and then it gets revised down the next month. And that's typical when the unemployment rate is going up. The labor market data is among the best data that we get. We do eventually, the Fed doesn't do this kind of data, but it eventually gets down to counting people and tax records and things like that. But the first numbers that you see are survey based, and they're going to be a little volatile.
How do you take into account, and do you, some of the things that may be forward-looking in terms of political or new policy changes? So we heard a couple things this morning when we were talking to Ken Griffin. One is he thinks that the economy is about to rip in a great way because the regulatory shackles are going to come off the system that were under the Biden administration, and President-elect Trump is going to take that off. At the same time, we also talked about tariffs and the uncertainty that would create, which he does not think is going to actually create much uncertainty, at least for a while. How do you sitting in your seat, think about those things?
So like all forecasters, we have to kind of make a guess at this point about what's going to mean for the economy. But let's take tariffs. Here's what we don't know about tariffs. We don't know how big they'll be. We don't know their timing and their duration. We don't know what goods will be tariffed. We don't know what countries' goods will be tariffed. We don't know how that will play into prices. What will be the transmission into prices? We don't know how people in the markets and in the economy will react to that. And we don't know whether other countries will retaliate. So that's the list of things that we don't know. It's a partial list of the things we don't know. So we can't really start making policy on that at this time. That is something that lies well into the future. We have to let this play out. We literally don't know all those things. The main thing we don't know is all the other things that'll be happening in the economy in 6 months or a year when this starts to matter. So what are we doing? We're modeling this. We're looking at it. We're evaluating it. We're observing. But it's right. The decisions we're making right now are not about that. They're about what's happening in the economy now.
Similar answer in terms of immigration. And the reason I asked about immigration is, the CBO has calculated that if there's one force in the economy today that could be a major boost or not to the GDP, jobs, tax revenue, lowering the deficit, all of it, seems to be about higher net immigration.
So let me say, for both trade and immigration, the Fed has no role in that policy. We don't have an institutional view on the right level of tariffs or the right level of immigration. It's just not our job. That's the job of elected people, and we don't comment on the decisions they make for whatever reasons they deem appropriate. We don't comment on that. But I can tell you, there was a great deal of significant wave of immigration. It's now the level of immigration has come way down in the second half of this year as the Biden administration changed its policies.
Right.
It's true that a lot of people came in and they went to work, and that was part of why the GDP growth was so high in 2023, was a wave of people coming in and doing more work and spending money.
I know the dollar is the Treasury's department, so I'm not going to ask you about the dollar per se, but I am curious, just because it relates to tariffs. There has been this sort of speculation around tariffing countries, BRIC countries, that may be trying to build their own currency. And long term, if you're just to think out a long time, the idea of the U.S. as a reserve currency relative to somebody else creating their own, is it something that concerns you?
You started with this. The administration, particularly the Treasury Department, has responsibility for the value of the dollar and for exchange. It's not something that we opine on. We stay away from that, and they stay away from what we do.
You hope. Let me ask you a slightly different question about crypto. We were talking earlier also about Bitcoin, and it's going, it's rising. There's talk in Washington also about creating a Bitcoin reserve, actually. You do deal with currencies to some degree, and you have to think about some of these issues. How does crypto sit with you right now at a time when it appears that this next administration may legalize it in a much more broader way? I mean, it's legal now, but that there might be a much bigger groundswell for it.
So from the jobs that we have, what's relevant is really two things. One is just, what role should crypto assets be allowed to play in the banking system? We try to keep the banking system safe and sound. We regulate and supervise banks, and we would want the interaction between the crypto business and the banks to not to threaten the health and well-being of the banks. That's thing one. The other one just is, to the extent anybody's doing that through a bank, we would want the public to, if people are buying, crypto products and things like that, there's sort of a consumer protection aspect of it, but they should need to understand exactly what it is and that sort of thing. But we're not, we don't regulate it directly, and we don't have that big of a role.
Would you ever own it yourself?
I'm not allowed to.
You're not allowed to?
No.
One of the big issues coming up is going to be taxes in the budget. We talked about DOGE and all of this. One thing that you have spoken out quite emphatically about is debt and deficits. You've been doing that now for a very, very long time. What is, in your mind, the tipping point for the debt and the deficit, in that You know, for a very long time, I go back to thinking of 2010 or 11, the speeches you were giving back then, and thinking about Simpson Bowles. And at that time, people talked about the debt deficit. We're at a tipping point. If we don't deal with it immediately, you know, we're at a knife's edge. We're going to tip over. And here we are in 2024, and we haven't tipped over yet. And in between that, there was this whole MMT idea that somehow we could just spend money wildly, and that would be fine too. And I'm not sure that's gained too much traction either. Maybe it's been undone. But what do you worry about as the tipping point for all of this?
So you're right. I did work on fiscal policy issues before I came to the Fed. But at the Fed, you know, we don't have oversight over fiscal policy. Quite to the contrary, Congress has oversight over us. So I would limit myself to saying this, that the U.S. federal budget is on an unsustainable path. The debt is not at an unsustainable level, but the path is unsustainable. And we know that we have to change that. We've got to get back so that revenues and spending are in better alignment. We don't need to pay the debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt. And that's not happening. We're running very large budget deficits at a time of full employment and strong growth. So we need to address that. And we got to do it sooner or later, and sooner is better than later.
Now, do you think the Fed should or could take into account the debt and deficits and that cost in terms of where you think rates can or should be ever?
No, never. I mean, if the central bank, this is you see this in some emerging market countries, for example. If the central bank can't raise rates to deal with inflation because the fiscal situation is so bad that they can't raise rates, that's called fiscal dominance, and that we're so far from that. I mean, we will always use our, I put it this way, we'll always use our tools to achieve price stability and maximum employment, 2% inflation. We're not thinking about, oh, we better not raise rates because of the budget. If we ever get to that point, that we're far from that point.
Before I forget, you know, one of the reasons I wanted to actually ask you about Bitcoin is, to some degree, people think that is a symbol of people's faith or lack of faith in either the U.S. dollar or in the Federal Reserve itself, in terms of the system. What do you think of that idea?
I don't think that's how people think about it. I mean, it's so, you know, people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. You know, that's really how I think of it.
When you think about other countries, and I know it's not your job necessarily to think about other countries, but you spend a lot of time, I think, talking to your peers at other central banks. What are you most concerned about? Are you most concerned about the economy in China right now? Are you most concerned about Europe? What's the take us around the world?
There, as good as things are in the United States, of course, there are always risks, and you know, certainly geopolitical risk is very elevated around the world with Ukraine and the Middle East, and you know, kind of very weak growth in places like China. That's all out there. I think domestically, we do see low and moderate income people under some economic pressure. If you read, for example, or listen to the earnings reports from some of the retailers who deal a lot with low and moderate income people, they will uniformly say that people are under pressure. They're very much price shopping and that kind of thing. So that's the aggregate numbers for the U.S. are really good, but we see pressures there in the lower income spectrum that we didn't see 2 years ago after the pandemic, when people came out with you know, really significant amounts of savings.
One of the, you know, when we came up, and I don't know if you got a chance to see the video, we were talking, one of the big things was vibe session, this idea of how people think, the vibe about the economy. And I think the vibe had a lot to do with actually the result of the election. And I'm curious how you think about this question, about inflation. You know, a lot of people were saying, well, it is this past administration's fault, the inflation problem. Some people said it was your fault. Some people said it was how much money Congress appropriated during the period of COVID. How do you actually think about it yourself?
Look, we shut down the world economy partially, and there was a global outburst of inflation. There was a time when there wasn't a single country in the world that had 2% inflation. It was everywhere, okay? And what was it because? It was because of a lot of pent-up demand. It was certainly because of very strong fiscal support and low rates. All of those things contributed to inflation everywhere. And now it's, you know, if you look at, I could show you a graph of 10 countries, and they all look like that. And I'd say, which one is the United States? You wouldn't be able to, you'd have a 1 in 10 chance of guessing. So I think that's what happened. And, you know, the good news is, in the case of the United States, we're back to a much better place. But I will say, people are unhappy because the price level is higher. Right. You can tell people that inflation has gone down, which is the change in prices, but that doesn't matter to people who are paying, you know, 10, 20% more for the important things in their lives.
You are known to spend a lot of time talking to folks in Congress privately, folks like Fetterman.
Just to show what he just said about global inflation falling and rising. Sometimes you get people who say, oh, it's all Biden's fault. And I'm not for or against Biden. I'm just saying that that's like very narrow-sided. The whole world experienced a lot of inflation due to supply side issues.
On the important committees. And there are people who, you know, there's so many things to be an expert on when you're a congressman or a senator. Think of the breadth of the things they have to know about. You know, defense, it's endless. So it's not surprising that most of them are not, you know, a good number of them are focused on the economy and, you know, monetary policy and things like that. But many of them are focused on other things, as you would expect.
We're out of time, but before we go, I am told that you have a special talent. I don't know if the public knows about this special talent, but I thought since we're here, we should try it out, which is that apparently you can repeat sentences backwards, famously.
Ever since I was a little kid, I was able to see, and just for standard vocabulary words, I can see it in my head spelled forwards and backwards. I started pretty much any word, as long as it's not 12 syllables, you know. And I started doing that for friends when I was about 10 years old, and they were like, what is that? You know?
What?
So I would write it down. So I can just see that, and I'm not as good as that I used to be, but I can literally see the word forward and backward in my head, and I can spell it backwards. Like your word in a
So if I give you a sentence, can you do the whole sentence backwards?
I can do each word. I can't do the whole sentence.
So the sentence I had written down, this was Bernanke in 2008. It may be too long for you, though. If we don't do this now, we won't have an economy on Monday.
I'll do economy, inamos. Imonos. That's economy backward. I'm not going to do the whole sentence.
Jay Powell, everybody. Thank you.
Thank you.
Thanks, Andrew. All right. There we go, guys. Let's take a look at the aftermath. Okay, so let's just think about what we just heard from Powell. Nothing crazy new. To be honest, I really felt like it was pretty much exactly what we discussed before we had him come out. I thought the question about tariffs was interesting, right? The concept of is the Fed already thinking about that? And he basically said there's so many variables to tariffs, and you're talking about something that's 6 months away, and we don't even know what inflation and the economy are going to look like in 6 months. So I thought that was a pretty good response. I also was just pointing out that the concept of inflation, you know, a lot of people love to throw blame on people. I mean, it's what we do. It's what humans do. We all throw blame on somebody. It's easier than actually accepting anything, right? But inflation, just like the spike in unemployment that happened towards the end of Donald Trump's previous administration, I would not say was all Trump's fault because COVID. I would also say that it is fair that if you're trying to make a call that, oh, inflation is all Biden's fault, that's also not fair because the external force of COVID was not a US only problem. The whole world experienced, as Powell was just explaining, you know, you can look at inflation charts for all of the G7 countries. We have all of that on the Edge Finder, and you can see it's a pretty uniform chart, right? Everybody's inflation went up a bunch and then came down a bunch. It was a global problem. So to just say, oh, no, that was just Biden and the unemployment rate hike that happened during the end of Donald Trump's, it was all Trump, right? You just have to be careful with that thought process because people love to do that, or they love to say like, oh, Jerome Powell, he messed up and did all this. And well, yes, people make mistakes and you can, possibly point components to certain people. And I think it's like such a frustrating thing when people do that. So I just wanted to point that out. Inflation across the board has fallen really well. That's why gold, in my view, has been so strong. If you take a look at, gold in the last 1 year, right? Gold's had a phenomenal year. It's because global inflation has really been falling. The Fed is expected to cut rates, right? So, we'll keep an eye on that. But take a look at the S&P 500, up 0.4% today. Not a huge move today, but still feels like a big move simply because it's been up and away recently. Nasdaq's up 0.8% this afternoon. Dow Jones up 0.37. Bitcoin I thought was interesting. There was a little bit, I kind of took that as a bullish thing, the fact that Bitcoin got mentioned at all with Jerome Powell right there. And Jerome Powell didn't really seem to, he said in his words, paraphrased, he basically said, Bitcoin is a competitor to gold, not to the dollar, which I think is interesting because that is super lenient to say that as, maybe that's what he says because, you don't want to give Bitcoin even the chance to be called a competitor of the dollar, right? It's kind of like, we don't even recognize you really kind of thing. But anyways, Bitcoin I thought was interesting. It rallied off of that. Nice little move during the duration of Powell's speech. So we'll see. It's in the green today. Bitcoin seems to me still want to go to 100,000. I think it's a likelihood, although I'm not in the trade anymore. I took profits right here. Bad time to take profits. But if the market dips for Bitcoin again, I may look to re-enter if I can get the right setup. So we will have to see how things play out. The rest of this week, we have unemployment claims tomorrow. We have NFP on Friday. We'll be live streaming all of those events. Just a reminder, guys, the Edgefinder Cyber Sale, Cyber Monday week sale is coming to a close. Everything is currently 45% off. You can get access to our VIP group. If you don't have that already, you can get access to the Edgefinder, to the stock box. Everything is 45% off, and that is coming to a close. So there's your last chance, your last call. If you'd like a chance to get access to everything in our store, 45% off, we'll drop the link here in the chat right now. Don't miss this. There will not be another 45% off sale for quite some time. This is your last chance to pick up a copy before it goes away. It's a one-time fee to get access. If you want to pay with crypto, or you're interested in payment plans, or you have questions about the tool or anything else, please use the link that's just been dropped in the chat to get in contact with our support team who can help you out. All right. Thank you guys very much for tuning into today's live stream. This was a good one. We went for 6 hours total between all the different hosts that came on to the A1 Trading Show and our wonderful producers that make this show possible. We appreciate you guys in the audience as well for being here. Have a great rest of your day, and see you next time.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.